bitch no more, wouldn't even care, nigga. You can't even fit inside my shoes cause you weren't there, nigga. I ain't fucking with them lists no more, could get it out the hoe. I can send it to your zone, I can send her to your home. Niggas gotta watch they back just for some chimney bowls. But you ain't even gotta ask, no, I'm gon' get them gone. I bought a house before a chain, I had no business first. And they ain't really got your back, just wanna split a perk. My niggas still sip and serve. To that road music, turn on that big road before you spin, might knock a hole to it. Don't talk up on the phone, stupid. Bitch, stop the whole movie. We be paranoid just to get in, gotta know code to it. I bet big road do it, cause you can't never count me out. And touch 100 bands before your pockets down and out. And never seen your man before, niggas just never around. Big motion, when they looking for me, I be out of town. Touch the streets, ain't got no love, I'm so paid in it. The game we in, yeah, get cocaine, even tame bitches. You can catch me lane switching. I ain't tryna fake kick it. It's a try good if you and me, we on the blade mission. Swear like all that shit I seen, that's what came with it. North side to be exact, I had to change cities. Killers where I'm from and I ain't safe in it. Lost my brother to the streets, now I'm toting baby A's, nigga. Lost my brother to the streets, now I'm toting baby A's, nigga. I was raised by the streets, why I ain't scared.
Yo, what up, everybody? What up? What up? What up?
I'd lose your hair in it. I ain't fucking with that bitch no more, wouldn't even care, nigga. You can't even fit inside my shoes cause you ain't there.
What up, y'all? What up? What up? All right, let's see. Give me 1 second. Give me 1 second. Yo, what up, everybody? Appreciate you guys watching. Appreciate it. Make sure you guys hit that like. Let's hit that like button. All right.
It's like I try to keep it real, but that one really in my best interest. I hate these hoes, but I still send a bitch if she bring chasing me. Had to separate to elevate, so got my mans with me. Had to separate to elevate, could give a damn.
All right.
I'm really on the road and
I took a few trades earlier today. I took this sell from here. It was like a 5-minute. This move right here. Yeah, this thing is massive. This daily candle. Look at this thing though. This thing was crazy pushing. Alright, let's see. So we just kind of opened up. We are at all-time highs now, so a lot of what's going on right now is kind of there's really no targets up here right now. Oh, where'd all my things go? Oh, there they go. They're at the bottom. They're down here. Look, you can say like that's the top wick of this high, which is here, which is also the previous day high. So what I think could happen is that something at least maybe could possibly even come up here before coming back down, if it wants to come back down. Yo, Pablo, let's get it. Let's get it. Yes, sir. Yes, sir. Let me check YM real quick. Pablo, let me check YM real quick. MYM. Look at this. All right, so what we got here, this closed above previous day candle that says higher prices. We already got higher prices technically, and we are bullish right now. So if we're looking at maybe the 5-minute ADX, you can see where it did say to like right here it said boom, right here it said buy. So you know what, I think this is what I notice a lot of times is that, so it says to buy right there, right? So it's about here, it says to buy. And what happens is a lot of times you need to sweep the low at least before that. So, I mean, but even if you would have taken it from right there, just from the top of that candle, it did already, well, I only pushed 15 points, but like we say though, is that it needs to come back to like the previous low, which is this guy, and kind of sweep it. It looks like it almost did, but I'm wondering if that was enough, because maybe you could have even said it something like this. And then look at, that's where you would have maybe wanted to take your trade at. Because I mean, if you would have taken it from this bottom area, you could have closed off 20 points. But and that's not too crazy. But that's if this, look, this might push too. Because like what I was saying is, a lot of times when I see when it signals to take a buy, it's correct. But the thing is, it needs to do a little pullback. So if it does do a little pullback, a lot of times it goes for the previous lows, which is, you know, kind of the first red candle or two. But I'm going to see what happens right here. But I'm wondering if it needs to come and break this low right here, which is this area. Fred, bit me some. I do not like you, Fred. Fred, you're a good guy, Fred. Hope you had a good day. Yeah, that's kind of what I see with the ADX little idea. And honestly, now I'm thinking about it. Remember how we were talking about that red and the blue needed to cross? The red and blue crossed way over here, and it's barely doing it right here. So I mean, would you consider that a buy, or would you rather wait for it to cross a little bit before it? Maybe crossing right before it compared to a lot before it is maybe a different idea also. So maybe keep that in mind. But yeah, this is a good little example right here, right now. But yeah, that's what I see out there. Hey, actually, I think too, I took a ADX trade on gold yesterday too. The same idea. I think it was right here, somewhere in these areas. It was saying to buy maybe a bounce from here. Look, you could say from right here, it did tap it, which is this guy, which is this candle technically. So the idea would be you would probably take a buy from the above this area. Like once that candle closes, you would get in. But you see how you did go into drawdown right here a little bit. If that drawdown right there, like I'm saying, is that it would have signaled you to get in right here, right? So you would have gotten in right here. But what would have happened was you did come back down to the previous lows, which is this guy. Look at like where the red candles are at. Let's put the line right here where this is at, which is the very low of this little area. So you could say this area right here is like a little box, right? So that's what box got swept by these lows over here, by these guys. So that's what I was saying, is that a lot of times when I notice the ADX does cross, it's a trend indicator, so it's letting you know the trend is coming up. But the thing is, by the time the indicator signals that, it's already ready to do a little pullback. So that's where I've kind of noticed been, if the lows haven't been swept yet like this, because at this point no lows have really been swept yet, because if this dotted line is the low of it, if this dotted line is the low of it, this right here never came low, never came low, and never came low until this one. And then once this closed below it, that got swept, and that's exactly where you would have wanted to take that trade at. And that's where you could have, you know, collected. If you could get in somewhere down there, the highest was 112 points. So but even like I said, where you could probably close at is the highs of here. Let's just say same area entry, you know, that still be 40 points, 40, 50 points in this area. And then maybe trail it, and if it runs, it runs. If not, just close it all. But yeah, just the idea. That's just how I've been looking at it. So that's why I was saying, Pablo, if you're you know, make sure a low been swept yet, because that's what I've kind of noticed, is like you could kind of see this being the area, right? Like this little line right here. Or let me put the yellow lines on it. It'll make a little more sense. Look, that line and this line, boom. Now you're in that range right here, right? So this is the range. And then you need one of the lows or highs to be swept. What it does look like these highs got swept, and then it went to the lows. But that's what I was saying, is the indicator signaled it right here at this guy, right? So you could have either gotten in, or the idea is once it does signal, it lets you kind of know, have the lows been swept yet? And if not, then you have to wait till they do get swept. But sometimes it'll signal 25 right here. Like it'll signal right when they're getting swept. So once you get in, you just take right off. So like I said, there's just different opportunities you got to watch out for. Yeah, that was a little quick ADX little explanation that I've been kind of looking into, and that's my boy Pablo in the chat. So you know how it is. Had to game him up real quick. Hope that helped a little bit. But yeah, let me try to figure these out though. Let me try to see what we're going on right now, because if you notice, everything, we're in all-time highs, so there's really no levels to really go based off of. So you really got to use the candles as your ranges right now. And the range that we're really in is right here. So like we say, there's only two options, but going upwards, there's nowhere to bounce, get rejected off of. So I can't really say, oh, it's just going to go up here and then turn around. It could go way up here again and then turn around, kind of like these did, where you would have expected maybe a turnaround in these areas, but look at what ended up happening. It pushed right through it, you know. So you just kind of, it's kind of a little difficult right now, but we are bullish though. So yeah, actually, let me I'm gonna redo some of these lines and stuff because it's about that time. But you can see the ranges right here perfectly, right? Like this was the whole range that we were trading inside of, I believe, which is this whole range. So when we were trading inside of this range right here, this was the area that we were targeting. I mean, what I took a trade somewhere down here and I closed it, but like hindsight, obviously now I understand what I should have did, but in the moment I already had this as my levels. I just didn't think it was going to go that high, to be honest, but it just proved me wrong though, is that you can't really assume it's only going to go to a certain level. You got to like wait for it to do that, you know. And when I already had these levels marked out, we already had these levels at least up to these levels marked out too, so we knew we could at least get to here. So it was already the idea of, a lot of it was bullish, you know. So, and the way I found that level was just knowing the 4-hour range, which was this range right here, which was this red candle right here. So this red candle ended up being this whole range right here, and that's where we were saying is this candle right here wick below the previous candle and then also closed above, which signaled we grabbed the liquidity, broke these previous lows. Now most likely we're going to need to touch the top of this candle, which is the range that we were in, and that was this whole high that we targeted. So the idea was kind of already valid, that we knew we needed to go this way in the direction of this. So, you know, there was a few things that it's like, I also did, like I said, when I took a trade earlier today, I did take a sell thinking there was going to be a big push down right here, but it ended up not being what I thought it was. You know, it did turn around almost instantly right after I closed. I closed like 80 pips, almost 100 pips on here, but the idea was when I got into here, this was already the weekly highs and stuff. This was all the weekly highs, either this one or this one, I can't remember, but I already had the daily and weekly highs lined out. So when we started targeting these levels, I kind of knew these would be the purges, because these are the previous highs of these levels. So I knew once we go above them, you know, we're going to have a reaction. But I mean, I didn't think it was going to just, I thought this move, when it started pushing down like that, I thought, oh, okay, this is the move that's going to go all the way down. So that's why I started holding and trailing, because I thought, okay, if I trail from here, it should be good. It shouldn't come back to these levels. But that's what I'm saying, is it did turn around. So my idea was kind of correct, but it was also like I could have been very wrong had I not had a stop loss, or, you know, not closed when I thought it was and expected to keep running. That's why I say sometimes too, it's very important to manage your trades. So it's like, even if you think you got it correctly, it's still very important to close half maybe, or close partials, at least secure the win and go break even. So if it does go back against you, at least it still was a win, even if it was a small win compared to what could have been, but it's still better than leaving a stop loss open like this and then you losing after being in profit for so much, you know. So that's why I say too, just it's always good to make sure you secure the win, because we're in this game to win. So obviously, and we also know we're not going to win 100 pips every trade, but the thing is we could at least make sure we always secure 20, 10, 20, 30 pips or something. That way we could win, you know, and just pile them up, pile the wins up. We don't need to like too many, like, we don't need to make 100 wins. We just need to make 10 wins in a row, pretty much. 10 solid wins in a row, back to back to back. And then we'll be really up. But yeah, that's how I found this as the range though. So when I already had this as the range, it made sense. And that's why too, when I took this as a sell, I kind of jumped the gun. And that's what I'm saying is this whole time, every time, look, I took a sell here, I took a sell here, and then I took a sell here. So just from that alone right there, it was telling me that I was not right. Even though I got these levels correct and I still was able to you know, profit on these moves, but they're it was very close. Had I not closed when I did, you know, closing like here, and then maybe this one I might have closed like here or something, but the idea is if I didn't close when I did, they would have been wrong, you know. And it just, I just went against the whole idea, because the first trade I took was this buy down here, and I kind of already had these highs as my targets, you know, these highs up here. So that was kind of why I had that blue box there too, because I figured if we do turn around, it'll be somewhere in these areas. But like I said, that's also going to my point of, okay, if I'm expecting a trade here to take a sell, and let's say I put my stop loss, you know, wherever you would put your stop loss, the previous high or some level high up here or something, once that level gets broken, then your whole idea of that this is the reversal is actually completely wrong. But don't take that as a bad sign. Take that as now you know which direction it's going, because it's not going in the direction you thought it was, and this is not the level. So if this isn't the level, you could almost use your mistake as, okay, now it gave you the direction. Obviously, if you take the trade and you lose, then it's different, but it's just the idea of, like, you know, you're kind of preparing yourself. Okay, let's see what happens in these levels. If it gets rejected here, I'm gonna wait for a pullback to come up and then take a sell type of thing, so I could target this area. So there's always a plan, you know. So that's why I kind of say too, it's if your plan doesn't work out, okay, if you're like, okay, I'm gonna get a rejection here, then I'm gonna take a retest, but it ends up just blowing straight through it, then that lets you know this wasn't what the level you thought it was, and now that kind of gives you your direction, because obviously this wasn't the reverse you thought it was, and then you would have to go towards the next level, which would be over here, which would be the top of there. So that's where I say too, is like, you know, if you're wrong in these areas, you still had a 50 to 70 pip range to catch back going up, you know, because that would have let you know if this isn't the reversal area, then it has to be the next previous high, which would be either this, or here. But the overall level more or less looks like this level. So that's where I would say too, especially above here, there's really nothing stopping it besides that high. But that's just how I would read it when I'm looking at it. So that's why I say too, is I use my own ideas as like a guidance also. So if my idea is wrong, it lets me know, okay, it's the other way then. Obviously, I'm not just going to jump into a trade, but it's just the idea of trying to get the market, you know, knowing where the market is. And one thing too I like about these candles over here, as you guys can see, let me redo these lines now. I think it's time for me to redo these lines, just because it's about that time. You know, all these levels have been blown through already. Everything's already clapped back. Everything's already done what is done. I need to make some new levels, get some new zones, you know, that kind of stuff. Maybe I could leave this level though, because that was a good level. That was a big time level because of what type of move it was. So what I'm thinking right here though is eventually if we start making our way back towards this level, you can see how it's like all one-sided right here. Like the way I think about it is if this was like this was like a box that you have to fill up. You have to fill this box up. Look at how it only filled up on this side. So what I'm saying is when eventually if it comes back into these areas, what's going to happen is now it already has the you know, that first part filled in. So what's going to happen is it's going to fill in the next part kind of coming down here into these levels. So at some point, even if it's maybe a retest or something, but these could be levels we maybe target if we do a retest, like a bounce off of, or even, you know, come into here and then go back up or something. But if we blow through this level right here, that's where, you know, most likely we're going to retest to come back and then go down again. But I'm just saying is that this 4-hour level was like a whole week's worth of, let's see, from Wednesday the 11th to, oh, it was only one day actually. It was one day. So that was the 1 day move right there. And that goes to the move that we kind of talk about This is from Wednesday, which is right here. Wednesday, and then so Wednesday is all of this. Oh, actually Wednesday's right here. So yeah, right here. That's Wednesday pretty much. So Wednesday to Thursday. And then Thursday, which is here, going to be Thursday to this. So this would be all of Thursday. So look, just going off of this, how we talk about the CRT and stuff, what does this candle look like if you were to compare it to this previous day candle? It looks like the let's say this is like the like this would be the manipulation candle. So this would be A, and then this would be M, and then this next candle will be D, which is where I was saying it needs to almost fill in this level over here. So it's going to give us probably that same type of candle coming down into this to fill in that box like we said. And then that would be the D candle, which would be distribution. So it's almost looking like this would be maybe something that's going to be happening. This middle candle is the manipulation. So obviously it broke the all-time highs, but there's no levels to reject off of. So at some point it's going to just not be able to go any higher and then come down, need to make a support, and then maybe this will be where it starts to do its distribution, and then if anything to come back up, but it's most likely going to need to create another candle as distribution. Caleb, every time I move my stop loss to break even, it comes back and takes me out the trade. Yes, Caleb, that's true. That happens a lot, but you know what I figured out when it comes to that? It's because what it suggests is that your entry wasn't correct. So you also have to understand where was your entry at. Because look, there's two different types of entries. Look, let's say you got in right here. You could have gotten in right here as a breakout. Let's say you got in here, boom, a breakout. You go in a drawdown, right? This trade you most likely can't hold break even because it's going to come back and hit you out. Whereas in, let's say you got in on down here though, you got in over here. This was more of a trade type of thing, knowing if you went to break even, you're not going to hit your level. So it's kind of understanding where you got in at will also kind of determine how good of an entry you got in. It will kind of determine if you should hold it or if you should close it or whatnot, or close half and then go break even. Because like the idea is, if the way I like to trade myself is I try to take the lows to target the highs, right? So my understanding here is knowing if I get into this trade right here, this is the area that shouldn't get tapped again, because in my head, this trade right here is the very bottom to go to the top. Whereas in, if I were to take a trade, let's say somewhere in the middle, the idea would be that, okay, I also understand that I didn't get the best of entry like down here, so I would have to manage accordingly. Whereas in, like I say, it depends on where you would get in at. You kind of got to determine, was your entry very, very good, like a wick entry to go up? Or was it like a breakout somewhere right here where you took a breakout, where even if this idea is valid, but you still have to go into drawdown. So it's like, if you kind of if you realize, okay, this wasn't the entry I thought it was, there could be some drawdown. You don't want to maybe go break even too soon, because for instance, you get in right here on this candle, you see this wick pushing up, then you start to think, oh, I'm gonna go break even, but then look at what ends up happening. It takes you out and then it goes in your direction. So the idea would be understanding that you got into this trade compared to this trade, because if you got in here, most likely you could hold your break even, where if you get in somewhere in the middle of the range to target the top, or even a breakout like right from right here to target the top, if you were to get in here, this is an entry that most likely could get tapped out at break even because of where you got in at, compared to if you got in at the bottom down here. So that's what I'm saying too, is just understanding where you got in could help you how you determine your trade. Because a 20 pip trade isn't a wrong trade. Even if every trade that you try to take is 50 pips, and you're like, okay, 50 pips is the types of trades that I want to take. If you were to take a trade here and you close out at 20 pips or something, it's still a good trade. It's just the fact you maybe closed out 20 because you knew you didn't get a wick entry. You got like a breakout entry. So there's a good chance that break even could get hit. So you probably won't want to go break even. If I take a breakout trade from here and I'm targeting these highs, I probably shouldn't go break even to take this trade and go break even here, because there's a chance that, look at this next wick could wick me out or something, you know. So it just depends on where your entry is, and understanding where your entry is will help out a lot about how to manage your trade also. So that's one thing too, is like you use your mistakes almost as an indicator themselves. Not saying this is a mistake or anything, but just like I say, is that's how I figure things out. It's like, okay, if this is not the buy to go up, then that means that there's only one other way it can go. It has to go down. So there's no reason to not, accept that or whatever. But yeah, I lost 12 chilling in 6 months. What I have to do to improve? By the way, I passed phase 2, phase 1. Shiver, I lost 12 shilling in 6 months. So you've lost 12 in 6 months, Shiver. What I would suggest is focus on the skill. Right now, I think the first thing you just told me, the first sentence you just replied was, I lost money. So you're going into trading already thinking about the money. You need to focus on the skill. So you need to accept the fact it's okay to not be where you want to be in trading. But the thing is you have to be honest with yourself. And if you're not profitable yet, that's all right. But you have to be real with yourself and say, okay, I need to get back into the lab. I need to get back to back testing. I need to get back into really perfecting my craft before I start using real money, and start enjoying and falling in love with learning the skill, because the skill is what brings money. Money doesn't bring the money. You need the skill. So no matter what you do, as long as you have the skill, you'll be able to make the money. But you can't learn the skill while trying to chase money, because that's what's gonna really hurt you. So that's why I say, is like, just from your answer itself, is that you are focusing a lot on the money right now. So what I would suggest is, if you're losing money, don't keep losing money. Step away, learn, get back into, like I say, spending weeks, maybe even a month, trying to perfect your skill, because you need to get that skill so you can make the money. So there's a few things that you could do, but what I would suggest is focus on the skill. Don't worry about the money right now. Go back to demo or do something very, very small risk, 0 or 0.01. Like, don't worry about the money. If you're out here worrying about the money, you're not going to focus on the skill, and that's not going to be good, because you need to focus on the skill. But yeah, let me see. Okay, how fast do you move to break even? I try to wait on volume, because if I get in too early, it keeps consolidating. Fred, about 10 pips profit. Makes sense. Thanks. Oh, no. Yeah, Caleb, that is a good valid entry. An idea too. Once you hit 10 pips, maybe go break even. That's a very valid thing. But also remember your advantage points. So what I mean by advantage points is, let's say you get in right here. There's an advantage point here, which would be this high. Oh. This would be a previous high right here. Oh yeah. Look at, there's a high here, and then there's a high here. So my idea is that it's not so much as if I'm going into break even at 10 pips because of the number itself. I'm going break even because of an advantage point, meaning there's a good chance I could get rejection at this previous high. So that's when I would want to go break even. You know what I mean? Those type of things. So obviously, like I said, still do what you do, but just like where I say too, is that if you're that could be why too you could be getting stopped out, because you might go break even at 10 pips, but it maybe hasn't reached that rejection area where it might just need a bottom wick still to continue back up. So what I say, just try to focus on an advantage point. So when you know this level needs to be hit, and let's say this is at 13, 14 pips, you might need to wait to go break even until you do hit those advantage points or wick fills and things like that. So you could more or less there's a reason, like I said, and that way you could repeat this step over and over. You know what I mean? So if you go break even at 10 pips, you could repeat that, but more or less there needs to be a reason why you go break even. That way, like I say, you could keep data on it. Okay, I went break even every time I see the previous level get filled, and it comes back to break even only 30% of the time. So I know that's when I should go break even. But let's say you keep journaling, and then you say I went break even at 10 pips, but it didn't fill in the advantage point yet, but it goes back to my break even 60% of the time. So that's where you'll be able to determine, okay, every time I go to break even before an advantage point gets hit, it always goes to break even, or vice versa, whatever it is. But that's what I'm saying is the data will give you that. The way you keep track of it will give you an answer. And over, let's say 50 trades or 100 trades, if you know 70% of the time doesn't hit break even, once you fill your advantage point, then you know when you should go break even. That's where I say that way you could repeat these steps over and over, and it almost becomes like a robot. You're really just taking the trades, you know, as like as just because of the plan. Whatever the plan says to take it here, I'm gonna take it, not because I want to or I feel like it. You know, it's always because of a reason. You know, and there's the reasoning comes with proof. You know, oh, I've done this 50 times, I know it does this all the time, you know, things like that. So yo, Spaceman, what up, my boy? Yeah, makes sense. Thanks, Shiver. Thanks. Yeah, Shiver, no worries, man. Yeah, appreciate it. GBP, appreciate it. Yo, what up? Hey, y'all, hit that like button. Let's try to cook something today. I do want to. Oh, we got 20 people watching. That's love right there. Appreciate it, y'all. Make sure you guys hit that like button. We got 10 likes. Let's try to hit 20 likes. Appreciate it. It is a little tricky right now because we are at all-time highs. So when you're at all-time highs, you really don't have too much of previous data to go off of. So you really kind of have to trade the ranges if you trade the ranges. But the thing is like if you were to break this high up here, how do you know where it's going to get rejected at if there's no previous data above that? The only place I could say it's going to get rejected is going to be here, but after that there's really no other answer until it creates a resistance, and then it starts to make a resistance up there or something. But that's what I'm saying. But it's kind of hard to take a reversal at this point just because of that reason. But what I always look for is purges on the daily. So look at these big candles to the right are just my daily candles. Right now they're massive, but that Thursday one is kind of throwing us off. But the thing is we're kind of inside of there. Well, we're not inside of it, we're a little bit above it, but the idea would be if we were to close back inside this range right here, which is this candle, we have this whole range to kind of possibly trade. You know, we could at least hit this 50%, 75% of this range before moving back up. So yeah, just idea. But yeah, so right now we're saying is that we are kind of stuck in this, and this is why I like these daily levels too, because I'm real big on purges, which means they're just pretty much sweeps of lows, or like what I mean when I say purge, all I'm saying is like a high gets swept, boom, it gets swept and then comes back down or something, you know. So the idea is that every candle pretty much gets the high broken. Look at, for instance, this right here. You see how that candle just like wicked above it and then closes back, and then now we're possibly back in this range, which means if that's the range, then if we do come down, we could at least make our way back down here or something. But that's just how I read it from range to range. But obviously the higher the time frame wick that gets broken, the bigger the move. So that's where I say is like, this is obviously a 15-minute. So there's only so much in there that could happen from here to here with the 15-minute move. But going back to what I was saying about these candles right here to the right, these are daily candles. So as you can see, as this candle being the high right here, if we were to break that high and then close back underneath it, what that will signal is lower prices, but that's also signaling a purge on the higher time frame, meaning on the daily time frame we took those highs, and now what might happen is we might could start targeting the lows now. And then that's where I say too, it's like you're really just waiting for breaks of highs to target the lows. It's not just every time frame, or it's like not just every high or low. It's a key level high or low. And the thing is inside of this whole candle right here, there's probably a bunch of resistances and supports and all kinds of other things like this, like this, like this. You know, there's all kinds of different support levels and all of this stuff. But I think the most valuable key level is this high of the whole candle. I don't really care about what's happening inside of here, because this is eternal liquidity, I guess what they call it. So it's everything internally, which is kind of like, it's not the machine, it's just the guts of the machine. So the machine is pretty much all of this. So if we were to sweep the highs of the whole machine, it's not just the guts, you know what I mean? So that means it's a bigger move. So that's where I say this is where your key levels are usually like highs or lows of these bigger time frame wicks. So it's also the same thing on every time frame, just a 4 hour. And that's where they, like I said, the guy that I watched talks about it, is that you want to pick a time frame that you want to trade in. So if you're trying to trade the 4 hour range, then you need to mark out your 4 hour candles like this type of thing, and use this as what you're trading, is this 4 hour range right here. So now this is the range you're trading in. So you're not just trading these two candles on the 4 hour now. Now the idea is when you go to your 5 minute, this is what you're going to be trading inside of, to start targeting these highs, to maybe sweep the high to target these lows over here. And that is the range on that higher time frame, like I'm saying, the 4 hour. And that's just a 4 hour range, but obviously this 4 hour range is a big 4 hour range. But the idea is that you're not trading these two candles, you're trading the range of those two candles, which is the higher time frame. So that's why I say the higher time frame kind of gives you the direction, the bias, and stuff like that. So me knowing that, you know, candles are ranges, look at, I have this high and low of this with these yellow lines. So I know, all right, so what needs to happen is that there's going to be a sweep of a high and then a sweep of a low. So when I go down to the 5 minute, look at what it's looking like. Everything, this is the low of that area. So this is the whole range right here. So if for some odd reason, remember how I was saying purges, right? We're looking for a purge. Where would the purge be on this daily candle, which would be this previous day high, which is also this high? And that's what I'm saying is why I like these candles right here, because it gives you a clear, clean visual of where your key levels are at. So when you know these key levels are getting swept, that's where you would want to take your sweeps at, from the highs of that, not so much internally inside of here, because there's no key levels here. The key level is right at the top, and that's where you're breaking the highs to come back down to the lows type of thing. But obviously there's more to it than just waiting for a candle to get high and it's going to get rejected, because it's not just going to get rejected right when it does that. Certain things need to happen. So what I've noticed, and that's where I kind of came up with the whole Model 1 thing, we're knowing if we break these buy side liquidity, the Model 1 should show up somewhere right here and then come back down. And then that's where we get our confirmation, somewhere in these areas, so we know this move is going to start working its way down. And then that's how we're going to catch the move to come all the way to the bottom of this range. Oh yeah, so yeah, that's the whole range right here. So that's the small range right there. But the idea though is that if this ends up being the move back down, then where the whole range that we're targeting is this whole low right here. So what could happen is, you know, we start moving our way, because the way I think about it, it's always a sweep of a high and it's a sweep of a low, and then it's never the first move. You see how this is just one move down? a lot of times it's a double purge, which is something like that before it moves down. And actually it'll move like this. It'll go up here, it'll break it one more time, and then that's when you kind of get your head and shoulder idea to kind of move its way down here. So this would be your last entry to target these lows. Obviously there's another entry here, then there's obviously a breakout entry to continue down, but that's the idea of what most likely will happen. So if you kind of know, this is the SMT idea also, where the SMT is pretty much a higher high before the move down. So that's kind of what gives me the idea, knowing this is most likely not the move because of the fact there's no SMT right here. I mean, you could kind of say this is an SMT, but no, that's not what you want. Like you really want it to look like this, where it makes a high, then it breaks it, and then that's where you're gonna start making the model 1 to possibly come back down. And this is, we're starting to break this high now. So this is one thing I've realized though. Okay, so what I want is a wick to touch this key level, but you see how this whole body is touching. If this body doesn't close back underneath this level in 5 minutes, then it's just gonna keep pushing up, I believe, and then it's gonna create a whole new level and then continue up. But this is kind of goes to the idea that we talked about right now too, about this being the whole range, where look at this is exactly what we want though. A sweep of the lows exactly perfectly, and you target the top of the range, and then obviously if it breaks through, that is, you know, a nice breakout. But damn, that thing is moving. But we are super bullish right now, and that's where we say too is, you see how this candle is very bullish. You wouldn't want to take sells at that point because there's no key level to the left, and it's also super bullish. So if we were getting close to these levels where we're like, let's say it was around here or something, that's where you would maybe want to be looking for some kind of pullback, but and taking a sell maybe to flip. But that's where I say too, it's like you don't want to be taking those sells against this super bullish move right here. So where the idea where you would have wanted to take a trade would have been here. That's the most ideal area. So that way, like I say, is if you're targeting the bottom of the range, you're going to target the top of the range. So if you were wrong right here, your stops are barely right here anyways, and you're using maybe the previous lows over here as your stops. So like I say, is that if this levels were to get broken, then this wasn't the move up that you would have thought it was. Then it would have continued probably down to these levels, and then that's where you could maybe be targeting next. Captain, let's go. Appreciate it, Captain. And make sure you guys hit that like button. Hit that like button and subscribe. Hit that like button and subscribe. I appreciate it. All right, let's see how many people we got watching. We got 24 people watching, yo. I appreciate it, y'all. Make sure you guys hit that like and subscribe. And if you guys want to join our Discord, we have a Discord in the description, and we also have Instagram that you guys could follow. And you guys have any questions, feel free to give me a message, and I'll help you out with whatever you have any questions about. So yeah, I appreciate you guys for watching though. Appreciate it. Let's just keep cooking. Let's just keep trying to cook. Try to figure this out. And that's where I always try to do too. Like I tell myself is that I try to get in rhythm of the market, you know. So when I usually see a break above like this, it's not the move that I thought it was, because a lot of times it's what I'm thinking could happen is we're gonna tap back into this level. Oh, we did just purge this high though. You see how that's the previous high? That's the previous high of where we were at. So now we're back in that range again. So as you can see, we're back in this range of this candle. So if we were to close below there, that will let us know we're at least back in this range. But my idea right now is kind of what I see a lot of times happen is that this is like a breakout, but then the next time it comes back in and it makes like a support right here at the top of this range, and then right after it'll create a support above that range, and then usually fill in this wick to come back up like that. So That's kind of what I'm thinking could possibly happen next, is that we're going to see how it closes around these areas. If it starts to push back up into these levels, then there's a long range, clean range right here that kind of signals that. And this does say close above higher prices. So at some point it's looking like we're going to need higher prices at least above there before we want to come down. So let's see. Oops. Let's see. BMX, bro, bless you, bro. Thanks for this, TA. I'll sit with this over and over again, fully grab the concept. Yeah, bro. It's really just price action. That's kind of what I like. Like I said, I like to try to read price action. It's just understanding, you know, when you see lows get swept, we're going to target highs, you know, and that's kind of, this is what we target right here. We target these type of trades down here. Small stops, big profits type of thing, you know, because my idea is that if I'm wrong, I don't need a lot to tell me I'm wrong. I just know, okay, this level's, because this is what I see in my head right here before it happens, which is pretty much these being the lows and this being the target. So in my head, if we're in these areas right here, this is where I'm going to want to take my trade. But I also understand these should also be the lows. So if we were to break these levels by a lot, then that tells me alone that this is not the correct trade, you know. So damn, this thing's starting to dump back. Look, all right, so it's closing there. Let's see if it comes back over here to this level. Let's see if it comes back into these levels right here. Pineapple Pete, is a range doggy the same as a Pip Boy? Yes, Pineapple Boy, or Pineapple Pete, my bad. Yeah, it's the same thing, bro, even though I don't know what either of those are, bro, but yeah, it's the same. Caleb, so how many pips are your stops? Around 20. If my stops are 20, that's a lot, but I'll definitely use 20. But my idea though is that I try to get in like at the sweeps of lows or the sweeps of highs. So as you can see right here at the bottom, look at this right here. Boom, boom. Or maybe even, you could have even said maybe even this guy right here. Boom. Or look, this is a sweep of a low, close back above. Sweep of a low, close back above. Sweep of a low, close back above. So this is my idea of where I would want to take a trade, is where somewhere is a key level, it gets purged by a previous wick or a wick like this, and that usually becomes the bottom, and that's where you would want to take your trade to go up. So that is my idea, is that I try to take these, it's called like a turtle soup is what they call it. So the idea of the turtle soup is you're pretty much waiting for the sweep of the lows to target the highs, and that's where if you look at this type of trade, this is exactly what you want to look for right here. Whereas you can see inside of this yellow box right here, you have a high, you have a low, and look at, that's what you want, a sweep of that, because all this pretty much is a head and shoulders. If you guys understand what a head and shoulders is, you guys don't be afraid of a head and shoulder, but that is the move right there. And that's where I'm saying is that's what I've been able to figure out, is that you could almost predict that this is going to be the move, because this is also a SMT at the bottom signaling that, because you know this wouldn't be the trade because there's no SMT yet. This can't be the trade, there's no SMT yet until these lows get broken like that. So that's where I say though, is that this is just a head and shoulder at a key level, and that's where I say is you can sweep the low, because I understand a lot of people are going to take, this is why supply and demand, I mean like support and resistance of like where you were, a lot of people will take a buy once it hits this and then goes up. It does go up a little bit, but that's if you close before it goes back down, or if you're willing to hold in the drawdown and stuff. So what I've came to realize is that this is all just when it gets like they're trying to trap you. They want you to think it's going to go up, which is why it does push up a little bit to make you believe you were in the right trade, and then it goes against you. So me understanding they're trying to trick you, I'm going to avoid that because I know those lows need to get swept. And then that's where I say, look, boom, head and shoulder idea comes to play. And that's pretty much what you're trading right there. So the best entry, and this is the AMD thing, where it's like this is the A, and then this is the M, and then this is the D. This is just the three candle, pretty much the three candle theory that we kind of talk about. So if this is the AMD, this is the accumulation, this is the manipulation, which is why it gives you the most bottom wick and it doesn't break it again. And then this is the distribution. So once it starts, then it starts to push up after that. So where we're trying to take our trades are either in the manipulation very bottom or the pretty much the kickoff where the distribution starts. So it's just pretty much, or drive range liquidity, same thing, drive range liquidity. It's just the opposite. I guess this would be the drive, because next would be the accumulation and then the manipulation and then the distribution again. So it's just AMD or drive range liquidity over and over and over again. But yeah, that's the lesson of sweeping the lows and how I figured that out. But look at guys, look at talking about the daily. Look at the daily right here. This was the high of the purge, right? So that's what we say. The highs and the lows of a daily or a 4 hour are very important, because look at, once you break below that yellow line, look at, once you close below it, it pretty much signaled now we're back inside of this range right here. So the whole range now we're trading inside of is back down all the way down to here, which is that. So yeah, actually that's going to be that. Well, that's that 4 hour range there. No, we don't need that no more. I think this would be the new low right here. This would be the new low, and then this would be a new high, because this would be that candle high and those highs over there. Yeah, perfect. Actually, yeah, let me do that right here. Boom, like that. All right, so that's the 4 hour area. That's that area right there. That's that. Now let's go to the 1 hour. The 1 hour here does all that. Let's see. But yeah, that's all we're pretty much, look at, and I think it looked nice. And like I say, if you guys understand, look at, this is what it should look like all the time. You guys should be able to see this over and over and over again. Is that, let me see right here, look. You see how this is a high right here, and then you have this low. You see how this goes like this? It goes here and it swoops down, and then it goes up. That is what you're looking for, pretty much from here down, and that's where you're taking it to this level. But like I say, look, it does it all the time. You see how it does that? Look at it makes this low and it sweeps it. It makes this like that right there. Pause. But the idea is that you see that little loop right there? That's the loop you want. That's the loop. And look at right here. If you kind of just flip this over, if you look at, if I invert it, now it's the opposite. Look, it's just going the other way now. It's the loop underneath this area. Now you're going to target back this area. So it literally just does that over and over and over again. It just, like I say, key level. Look at this right here. Perfect right here. Look. Look. Loop. Loop. Loopity loopity doop. And look at right here. Same thing. Loopity doopity doop. And look at same thing right here. Look right here, same thing. Oh no. Right here, look, same thing right here. Loopity doopity doop. So look at, that's where I try to point out. Every single time before the move happens, it sends you in the opposite direction. So their whole purpose is to try to get you trapped into each of these trades, because they want you to think this is a sell right here. They want you to think this is a buy right here. They want you to think this is a sell. They want you to think this is a buy. The thing is, though, is that it is a buy if you get it correctly and you're in that idea, but that's also if you close before it goes back against you or something, you know? So that's just what I'm trying to point out, is that before the move it goes in the direction, it needs liquidity, right? So before it needs to go down, it needed to grab liquidity right here. Now, before it needed to go up, it needed to grab liquidity right here. Same thing. So just remember, it goes in the opposite direction before it goes in the direction you think. So if it's coming down like this, that's for, well, and if you're in the correct bias, this is just liquidity, so it could go up, which is why it did go up and it pushed past. So that's why I say too, this is where you're going to get your best risk to reward, just for the reason that if this is the correct trade you think it is, these lows shouldn't get swept. These lows should be the lows that are sweeping the previous lows, so it could target the top, you know. And remember, what I say is that you're not trading just 1 or 2 candle or 3 candles. Like I say, this is all on a higher time frame. Look at this, is just a 4-hour range pretty much. So this 4-hour range, which is this green candle right here, that's this whole yellow box. That's all we're trading pretty much, is inside of that range, which is why I say, like, when they tell you pick a range that you want to trade. What type of trader are you? Are you a swing trader? Are you a day trader? Are you a 5-second trader? Like, are you really, you have to decide what type of mentality you want to go with, and that's who your personality is. So the idea is that if you're a swing trader, you need obviously monthly, weeklies, higher time frames. But if you're day-to-day trading, you want smaller time frames. But then you're also trying to determine how many pips are you trying to grab. Like, some people only need 10 pips and they make 10,000, but some people need 100, 200 pips to make 10,000. So the idea is, like, how many pips do you want? Oh, I only need 10 pips. All right, so you don't need the daily range, you don't need the weekly range really, because you're not trying to capture the whole 200-300 pip daily range. You're only trying to capture, 10 pips. So you might only need the 1 hour range, 15-minute range or something like that. So that way, like I say, on a 15-minute range, you would pick the range on the 15, which would probably be, like, for instance, down here, it would be this range. You would take it from the bottom here to the top of that, and that would be a 15-minute range. And you're not trading it on the 15-minute, you're trading that on the 5-minute or the, let's say, the 1-minute type of thing. So the idea is, look at the same idea every single time we talk about. Look, the sweep of the low, pretty much sweep of the low to target the highs, sweep of the highs, sweep of the highs, all just the same exact thing over and over. So that's why I say, is when you're trying to look for a time frame to trade, you choose your time frame and you trade that range. And that's where I'm saying is, you decide what type of time frame you want to trade, how many pips you want, and that all goes into just studying, how much does a 1 hour move, how much does a 4 hour move, how much does a 1 or 15-minute move, and all this stuff. So you got to figure these things out. But look at, perfect. Okay, this is one thing that I've realized with my understanding of this being key levels, is that, and this kind of proves my point, is that what I was saying is it's going to come down here, probably make a support up here, and then target those highs. The reason why I understand it this way is because I know this is a key level, because that's a previous high. So my idea is that if a model 1 were to show up, that means I would need a wick to touch this key level, then close back below. But as you can see, you see how this green candle closed above it? To me, that tells me this is not the model 1 trade, meaning this is not the move down. So that's why I was saying too, is that this right here signals to me that this is not the model 1. Now, if this is the new model 1 area where the model 1 could happen at, we should see a wick and then a close back below, and that would start signaling the model 1 idea. But that's where I'm saying is, for future instance, I mean, I didn't want to say it just in case it wasn't correct, but the idea is that, so pretty much the same thing with this. If this closes above here without a wick, what that tells me is that this is the new, pretty much the new high that we're gonna have to break eventually, the same way we had to break this high, and eventually we might come back down into these levels, do all this, sweep these lows to come back to the top again. But just like I say, understanding the way what I'm looking for is a wick and not a close above, and when it doesn't do what I'm waiting for, that signals to me something else. So that's why I could kind of say there's a good chance that this was going to get filled in, because this was just a bottom wick to grab liquidity. And if I look at the ADX, I bet you the ADX was saying to buy here, and then we sweep these lows like we talk about, and this is where you would want to take your trade. So I'm just going to take a look at it right now and see what it says. Technically it didn't, well, it said to buy. Well, if you consider this as a cross, it would say to buy here. That would have been a buy, but technically nothing has said buy yet. It's going to be saying buy fairly soon, and these already crossed. So I'm assuming if this were to cross, what would happen is probably going to do the same thing like we talk about, where it's going to close above, and then this is going to be the new high, and then you're going to have candles that need to make a bottom wick, and then that's when you're going to start to move back up to create that top wick, and then that's where you'll probably start moving your way back down. And then that goes into the whole SMT, understanding that you need two tops, which is here, and that's where the real move is going to happen, where this, even though this is a good move, you might catch 40-50 pips, but this is where people screw themselves, is not understanding where they got in at. If you were to get into this trade knowing, okay, this doesn't has a SMT yet, it's more likely to go back up and create an SMT, which would eventually stop you out or hit your break even, you know you should be closing at 40-50 pips. So like there was a trade I was in yesterday that I closed specifically off of this idea, knowing there wasn't an SMT. This wasn't the move that I thought wasn't going to go 100-200 pips. So what from my gathering, what I've gathered over time is understanding that and just seeing that happen over and over and over again. So yeah, that's kind of my yap. Could you please explain what happens if it fakes out? Copy. Yo, Joshua, what up, bro? Well, a fake out is, this is a fake out right here. You could consider this a fake out, which is a close above and then an instant next candle back into the range, you know? So that's a fake out. But could you please explain what happens if a fake out? So you also have to remember that fake outs a lot of time, like the whole idea of CRT, what we talk about, is technically a fake out. So a CRT, when you see the three candles like this and you're considering this the CRT that you want, on a higher time frame is just two candles like this. So it is just a fake out on a higher time frame. So when you start to see a CRT like on a 15-minute time frame, if you start skipping through the time frames, eventually you're going to run into the time frame that is just a fake out. And then that's really all this is just a CRT is just a fake out on a smaller time frame, pretty much. It's a CRT is how you break down a fake out, pretty much. So how you can tell it's going to be a fake out is because of a CRT, pretty much. So for instance, look for instance right here, you could consider this a CRT right here. Look. Okay, this green candle, right? That's the range. You got the high of it and you have the low of it. Look at, you have the wick below, close above, signals higher prices. So there's going to be higher prices than this at least. That's why you got that wick, which filled in the whole range, which was this. But what I was saying about the whole fake out idea is, look, this is the range, right? This is the range of the box. This is the one that CRT'd back down to go back up. Look at when I go back to the 5-minute, or let's say the 3-minute, for instance, or let's just say the 1 minute. Or no, the 1 minute is actually and then that's where the 1 minute is just the turtle soup. Goes back to the idea we talk about, turtle soup, right? But look at on the 5-minute, it's pretty much just a fake out back above the range. So if you were to consider this the low over here, look at, you have a close below and then instantly right after close back above. That is the fake out, which is also the CRT on the higher time frame, pretty much. See? And then look, if I go to a higher time frame than that, that's where you're gonna see a fake out too. Watch. or actually you just see the breakout. It's actually inside of that. But that is what's inside of a wick too, is pretty much everything we're talking about. It's just the CRT, and inside of a CRT is a fake out. So a bottom wick, that's how you pretty much like reverse engineer a wick. So this wick will tell you all of that pretty much turtle soup idea. Because look, you go down to the 1 minute, that's exactly where it happens right there. This is the turtle soup to the top of the range pretty much. So that's why I say is those, the same way you can learn how to take a breakout waiting for this and then learning to take that trade, you could learn to do that trade also. But the same skill, the same whatever it takes to figure this out will take the same skill or whatever to figure this one out. So why not just learn to take this bottom trade, because this will also give you a small stop loss, because if you're wrong, it saves you a little bit, because you know this should be the bottom, and if it's not the bottom, then you were wrong to begin with and it's not the trade. So you don't need to try to hold on for dear life just to try to not be wrong, you know. So that's why I say too is it's important to, it's okay to be wrong, but it's only okay to be wrong if you manage your losses how you should, you know, like keeping them very small and tight. You shouldn't need, look at, for instance, look at this. This is the low right here. Boom. Look, boom, that's the low. This is the bottom wick. Look at how many pips it is from there to the bottom wick. That is literally only 1 pip. So if we could figure out, knowing this is the key level we need to look for, once we hit that, our stops are very small. And even if you use the previous low, which is over here, look at how many pips that is. I always say 6 pips. I don't know what this is going to be. Let me just say, I always like 6 pips. What do you know? That's how you know. Look at, it's 6 pips. That's how low the previous low is. So that's where I'm saying is, just going off of how many times I've been able to figure out that this is the right trade, you could kind of tell off of how big your stop loss is if this is the correct trade or not. And literally, this being the perfect entry right here, your stops would have literally been the previous low, which is here, and that is only 6 pips. Obviously, I wouldn't have probably kept it at 6 pip. I probably would have gave it maybe 10 pips for spreads or something, just in case. But the mental hard stop would have been 6 pips, and then that would have just let you know. Literally, that's what I'm saying. If I'm in the trade and I look at my stops as only at 6 pips, then I know I have a good chance that this is the right trade, because at 6 pips, it always does that. And that's where I kind of say too, knowing, oh, if I were to get into a buy right here and this is my target, my stops would have to be right here. The most logical would be the previous lows, but look at that, ends up being 20 pips. So just by the number itself saying 20 pips is my stops, that will let me know, okay, this is not the entry I thought it was, like down here, so I have to either close or go break even at specific times, you know. And look at, once you clean this level, that's when you could go break even. But the idea is knowing where you got in is how you manage it also, you know. So this would be one that, this area, this one obviously didn't, but the idea, this area will most likely get your break even get hit compared to if you got in down here at the bottom. So you need to kind of understand, okay, if I'm targeting this high, this obviously wasn't the most perfect entry, so I have to manage it accordingly. Compared to if you get into this entry, you could probably hold it and go break even without having to really worry about much. Because if this idea is right, it's going to go to the top anyways, you know, and there's no way it's going to come back down and break your lows before hitting that, you know. So that's just kind of how I look at it when I'm looking at a trade or whatnot. But yeah, this thing is moving right now. But look, it's straight up, broke straight through it. Boom, and look at what we said, right? What did we say? We did say this earlier, that it was probably gonna break through. Look at the this was the dot right here. So we said on this candle is when it was gonna do that. So if we would have took that, we could have taken it from the ADX. That's 35 pips right there. That was a good ADX call right there. Even now, like, I mean, I guess you could say from here it did go 10 pips, but what do I always say is there's probably going to create a support. It's going to probably pull down and then start moving back up to take out that wick. So if you were to take a trade, on using the ADX, I probably would want to wait till this previous low gets swept and then start moving back up to fill in that previous wick. Copy. Great teaching. I like turtle soup better because smaller losses. Yeah, Caleb. Yeah, no, that's exactly why I figured that. Like I went towards this is because of that. It's like I say, you can have this as a breakout trade. Yes, you can. That's another part of your arsenal. You know, this is another part of your arsenal. Turtle soup to take this low to target the high. You know, and that's really what CRT is. This is just inside of a bigger candle. Look, this right here is just inside of a bigger time frame candle, CRT probably, which is right here. Look at that whole range that I just circled, right? Is these candles, and that is what CRT is. Look, this is the range, that's the high, this is the low, this is the turtle soup right here. This is also probably a turtle soup to continue up, but it never broke the real turtle soup. So even if there was a turtle soup here, that was the one to continue pushing all the way up to the range. But this is what I'm saying is that the higher time frame gives you the direction, and then that's when you go to your smaller time frames, and then that's when you trade the direction, because you know, okay, these are the highs we're targeting. We need to wait for some kind of pullback, pull down. But this is also understanding we're already super bullish, because look at the daily candle. The daily candle is super green. So you're not going to be wanting to take no sells against a super bullish candle like that. It's too hard. It's too risky to try to get it right when this is like super bullish and you're trying to take the peak and you're in all-time highs. There's just a lot of things you can avoid to try to make it a little bit easier on yourself, you know. So this is why I say to be patient, wait for your setups. It's all right to not trade all-time highs, because I think it's safer to be more risky. I mean, like to use less risk, you know, at all-time highs, because you don't know what's going to happen. Nobody knows really, because there's no data for you to go off of. So that's where I was kind of saying is, this is the only data we have at this level. So once we're above it, we don't have no more data at that point. So now we have to wait for it to create its own data and doing the same thing. So if we start to make our way back into these levels, now we could start using these levels as a guide to kind of where we're going to bounce off of or whatnot and stuff like that. But going in this direction, you're really just buying pullbacks. You're just there's really no levels to really base it off of. So what you're kind of doing, you're just waiting for levels to get broken and then swept to go back to the high of it. And it's also time. Like I say, what's important is time. So look at, I'm just gonna take a wild guess. This is the time right here. Let me put it on an hourly candle. This is why time is so important also. Look, this candle right here is 1900 o'clock. That's the candle that they talk about a lot, that has that moves a lot. And look at where that time frame, look at where that candle is at in this whole little thing right here. That is the middle candle of the CRT right here. So that 1900 is the time that you would have wanted to be looking out for. So 1900 is let's see, that is 7 o'clock. So that's 10 o'clock New York. So that could also probably be I think like London Open or like Asian, something like that. Let me see. Yeah, local time. Okay, so it's Tokyo's opening kind of thing. But anyways, that's kind of why that time, it's like New York Open pretty much. It's just there's a lot of volume, and that 1900 candle is something to really watch out for. So, and just what I'm saying is, just knowing the time would kind of give you that direction also. So that's why I say is time is also important. If you were to try to take a buy at a specific time and it wasn't the correct time, then it's not going to work out, because it's just not the right time, you know. So a lot of times the move always happens at a specific time. Look at what time this candle is right here. This is at 2100 o'clock, where I also say 2100 o'clock is what time is that? That is 9 o'clock. So it's also 9 o'clock, which is New York, but it's like the times of the 159 candles are always important. The 159s, and that's why I say it's like, if you understand time is very important. That's one thing too, to be able to catch the highs of this. Look, this is at 19. This is all 19 o'clock. Look at how perfectly at 1900 o'clock gave you the low, and then after that is where we swept to go up. So just from the time alone, it was kind of letting you know, okay, this is the right move because it's 1900 o'clock. If this was happening at a different random time, this could be a fake out. Like this could go up a little bit, then come back down. Just almost kind of like this was, where you could have almost thought this was the same little sweep of the lows to go back up. But look, it got swept itself. But that's where I kind of say is at this right here, the time wasn't correct. This says 1600 o'clock. That's not the correct time. And then when the correct time finally applied itself, 1900, that's when this all started forming. And like I say, it's time. If it's an algorithm, who knows if it's an algorithm? I guess, but I almost believe it is, because it's all numbers, and that's where I say is like coding in a computer and numbers. It's all there's for sure answers in a sense, because this has to do this in order for this to do that. So in my head is like, that's the way I kind of see it, is that it's just numbers. So numbers are like, and is also just an algorithm. So by the time it comes back around, the time and doing all this and that, that's when that's where I say is like why specific hour candles unlock specific type of moves. 4-hour candles are very valid, which are always 159 also. So it's just like the time itself of what time that candle's closing could almost determine how much volume you're going to have, because the openings of New York, Asian, and London and all those stuff cause volume. So just knowing the times, obviously those are the easy, like those are the openings are the easy part to talk about, like to point out. But it's goes deeper than that. It's not just that. It's also the certain specific hours of the candles that they close at, what time they close at. I can't do 100 pip stop loss. Yeah. It's not that it's not bad, but I just say this is that just get in at the bottom. And like I say, you just got to learn how to get in at the bottom. That's the hard part. But it's just the idea though, is that, in my head is that if your stop loss is down there, just wait till it goes down there and then take the trade that you want. You know what I mean? So wherever your stop loss is at is you telling me that this is where I think it could go. So if you think it could go there already, why not just wait till it goes there and then get in right there? And that's kind of the idea that I have about it. It's just is just that you just if you have a stop loss because if you think it's gonna go there, because obviously you're not gonna have a stop loss right here, because okay, it could tap there and it could reverse, so you're gonna put it down here. So if my idea is like, okay, it's gonna come down here just in case, why not just wait till it comes down there then? If you can't put your stop loss right here because it's gonna hit my stop loss if I put it there, then why not just wait till the trade gets there to take the trade? And that's where I say is like, that's the part of being patient, is that you could have these trades with small stop losses, but it's the idea where, like, if I were to take this trade right here as a buy, I would put my stops way down here, right? I wouldn't put them here because if I put my stops here, they could get tapped out. And what did they do? They did get tapped out, but that's where you would have wanted to take your trade at anyways. So you just take your trade there if you think your stops are going to get. So that's where I put my stops so tight, because I know if this is my entry, if it goes any lower, I don't need this previous low to tell me I'm wrong, because I already know if this is not the bottom, then my next trade most likely will be right here anyways. So I should take my trade right there if I think that's where it's going to be at. So, and my idea though is that I don't have my stop right here because I think this is where I would want to take my trade at. My idea is that if it breaks this low, that wasn't the trade I thought, and it's most likely going to be the previous low or something, so just work on trying to get in where you would put your stop loss at, and it's the same thing, kind of a thing. So you just missed the all-time high blast off trade. Why are you so happy? Okay, I just did a little 19 study. Is very good. Pineapple Pete. Yeah, I know I did miss this move right here, but that's the idea though, is that I didn't miss a move that I wasn't waiting for. So if this wasn't my like if it wasn't me like, oh, I'm gonna take a buy right here, I'm gonna wait till it gets tapped, and then it taps it and then it does it, then I would have missed my move. But I wasn't planning on taking no buy or nothing right now because of the all-time highs. So that's why I'm not trying to take no sell in none of these areas. So if I want to take a buy, the buy should have been here, the buy should have been here. If I'm trying to take a buy in any of these areas, this is where you could fall into drawdown and stuff, and I'm trying not to go into drawdown. And that's my idea, is that like I say, I don't miss the move if I wasn't prepared for it. I wasn't really prepared for none of this. Obviously this is playing out hindsight, but like I said, in the moment, I'm not waiting for that, you know. So I mean, I could have also gotten into a sell or something right here thinking, oh, this is a sell, boom, and then it goes against me and then I lose, you know. So I'd rather just play it safer than, you know, lose a trade. So you would not have take a momentum trade off the previous high when blasted off. No, not really, Pete, because like I say, is I don't take breakout trades, because if you were to take a breakout trade right here, where would your logical stops be at? Your logical stops would have to be the previous low, which is this right here. The previous low, which is this right here. This right here is 46 pips. This right here is 59 pips. So any logical place you would want to put your stops at, you would need big stops. So this is not my style of trade. 6250. Yeah, 6250 is exactly where I'm pointing it out, which is this area right here. But that's where I say is, if you were to get into that trade, where would your logical stops be at? It would be previous lows, right? Here or here. I don't want to have and this is only if you close at the peak. Remember that. So if you were to take this trade as the breakout, your entry would be the best entry you could get as the breakout, which is there. Your TP would be 60 pips or 55 pips only if you close it at the 55 pip mark. So that's only if you get a precise exit and also this precise entry. So that's one thing. So you only have a 50 pip range to get at least 50 pips out. So that means you have to be perfect. So if you don't get the 50, you get 10 to 20, that's still fine, but then it goes to the part of you're risking to get 20 pips, and then your stops is 40 pips. Your stops are 60 pips. And then it goes back into having a negative RR, and that's what we're trying to avoid. Well, Pete, that would be logical, is to have a 10 pip stop, which would be right here, which is very, very valid. But the idea though is that that's not a key level to have a stop at. That's a personal stop, which is because I'm only willing to lose 10 pips. It doesn't matter if there's a support there or if there's a resistance there or anything. It's just 10 pips whether I'm right or whether I'm wrong. And that, I think, isn't a valid idea, because you need to be able to do things that you could repeat over and over and over. So if you repeat that you only have 10 pips, you're gonna lose a lot of trades, not because of the stop was only 10 pips. It just happened to be at the wrong place. Let's say your 10 pips was maybe down here, that would have never gotten hit or something. So you would have been right at 10 pips, but it's just your entry was just late or something. So that's just why I say is like, if I'm trying to take a trade, I want to take the trade from down here, and then I could look at how big my stops could be. This could be the previous lows once it starts to break the highs, and I could use this previous low right here, and even this previous low right here, either this low or this low is still only 20 pips. So you still wouldn't want to have a big stop loss. That's still 20 pips, sounds like a lot. But that's where I say is like, my idea would be, if I were to get into a trade here, these would be my stops, because I already know if it breaks these lows, it's going to continue lower. But if it doesn't break these lows, this is the correct trade to target the highs. So that's where I say is like where I try to take my trades. That's why I have these daily candles here to the right, because I understand the key level is the top wick of a previous daily candle, because that's a big candle. So I know if it were to break there, you're usually going to get a reaction, which you're either going to get a rejection or something like that. So yeah, it's arbitrary as heck. Yeah, and that's where I say it's like, it's not that it's a bad idea. I would love to take these breakouts a lot more often, but the only way I would take this breakout also is if my original idea was that we're going to take this as a buy. I could probably even add a position maybe on a pullback, or even take this as a breakout and add a position. So these would be more or less my added positions if I was in this trade right here, because I understood, okay, this is the most valid entry. It needs to go up here, but it goes back to the part like we were just talking about, is we don't really have no previous data. So you can't really determine how high this is going to go before it happens, because there's nothing over here to determine. So if I were to get into this trade here, my only logical TP would be this guy, and just maybe letting it run to see how long it runs. But that's where I say is you would never be able to guess this as the top, because there's really no information to give you that, so it would really just have to be once you start seeing a red candle on a 1 minute or something. But look at, by that time you've already came back down from 68 to 65, 30 pips. So by the time you realize, okay, we're bearish, it's already down 30 pips, so. And that's where I say too, you wouldn't want to take a sell here, because if you take a sell there, your logical stops will be previous highs, which is, like I say, it's a far distance. So it's more or less of like, I'm really just waiting for sweeps of highs or lows. So since this is a new high right here, where would a sweep most likely happen at would be from there. So what I would want is some kind of move here to start moving back down, because I could also use these as my stops, because that would be the new high it creates, and I could probably take it down. But the idea though is I don't want to be taking those sells right now, because of how bullish this green candle is right now. This is the daily candle. It being so bullish right now, we should only be looking for pullbacks. We should have been looking for this. Maybe this is a pullback. It goes back to the same idea as this was. You see how this broke this candle over here, right? It didn't wick above it and close below. It broke and closed above. It did the same thing now for this candle, where it's where it currently made the top wick, which is this candle. This is the one did the exact same thing this one did, where it closed above and it didn't wick it. So what most likely is going to happen is that it's going to, the same way it pulled back here and filled in this wick, I see it doing the same thing, where now it's going to need to fill in this wick off of this push down. So we could start targeting these highs again. But like I say, is my idea would be your entry would need to be these areas here, because this is where your stops could be at also, because if this is the right move that's going to go up, it should just move up from here. If this is the wrong move and it starts to come down, then it wasn't the idea you thought, So that's why I say is I try to take my trades, and I use my stops as literally an indicator itself on if I'm in a good entry or not. Because like I said, I've done it over so many times that I know if my stops are for under 10 pips, that is the entry that I really, really want. Even though I'm not going to get it every time, but it's the entry that I do want, is if it's my stops are only, 5 to 10 pips. But yeah, like I said, I have so many ways of kind of telling me something just by off of what I look for not playing out. So if a model 1 doesn't play out, like that's why I say is this whole wick above, closing above, is based off of the model 1 idea. Is it the model 1 idea is that it needs to wick it and then close below. So that's where I'm saying is that if that literally doesn't do what the model 1 is suggesting, meaning we need a wick and it closes above, it automatically tells me we're going to fill in that whole wick, and that's where I'm kind of saying is there's a good chance we fill in the same wick doing the same exact thing. And it kind of goes back to the ADX trade that we were looking at earlier. Look at how it tapped right here. It did say to buy at this top candle, which wasn't a good idea. But like we say, we wait for a candle to close like that, which is that red candle, and then underneath that gets swept, and then that's usually the move that sweeps it to target back these highs again. So I'm really liking this ADX, man. This ADX is definitely, it's the thing is what's with the ADX is more for like a breakout type of trader, because this is like a trend indicator. So this trend indicator is pretty much signaling at this candle, yes, we are on a bullish trend. But what I've realized is every time, by the time the indicator signals that, it's already kind of exhausted. It's all is push. So what I've noticed happen a lot is that a support needs to get created and then it needs to get swept. And then that is the sweep that usually gives you enough juice to continue back up. So that's kind of where I've been using the ADX as like a breakout trade. Like I say, knowing that this is the breakout, this is signaling we do have a trend that's going up. So what I would want to wait for is some kind of sweep of the lows and stuff like that. But obviously this is not what I'm trading right now, but it's just the idea. Just my idea. But yeah, I appreciate you guys for watching though. I appreciate it. We got, let's see how many people we got watching. We got 27 people watching, man. Appreciate it, yo. Appreciate it. We got 21 likes. Let's try to hit 30 likes, y'all. 30 likes and we'll keep it going. Keep it going. Like I said, I'm trying to take a trade, y'all. Don't think I'm not. It's just the fact that I want to take a trade that, and I've also taken 2 trades already today. So I also don't want to force a trade just to please the YouTube. This is also one thing I'm working on with my own self, is that I need to start trading for myself and not so much trading for you guys. Not so much that it's the idea that like I'll close a trade too early because I'm on stream, just for the reason I want to solidify a win. And that's not how I should be trading. And that's where I say is I'm working on myself on things that I'm doing on myself too. So that's why I say is like, if I were to take a trade earlier in the day, I don't want to force myself into a trade during Asian session just to try to please the audience, you know. And it's more or less of like, I don't want to teach that either, you know. I want to teach like, you take your setups that are only your setups. If your setup shows, then take it. But if it doesn't show, then you know, don't take it. But that's kind of the idea that I have about it, that it's just, don't force no trades. Wait for your setups. And this is where I say a lot of things that I do is based on time. So a lot of things that I do, if it's based on time, then that means I can't take a trade until specific times show up. So if I'm waiting for a trade that happens a lot of times at 1 in the morning, I can't be on stream at 1 in the morning taking that trade, you know. Or I mean, I probably can, but it's just it's different, you know, having to just jump on stream when I'm taking a trade. I want to be on stream consistently every day for Asian session, in a sense, so that way, you know, we're ready for something always. But like I said, if I end up taking a trade at 1 in the morning, I'm not going to do it on stream, because, you know, I'm not, like I say, is that I'm not trying to trade. I'm trying to trade with you guys and help you guys. True, that is the case. But also is, like I say, is that I'm not trying to take a win just because I'm on stream, because that will hurt me more than help me. Because like I say, there was times I'll be in a trade, it runs 70 pips, but because I'm on stream and I just want to make sure I take a win on stream, I end up closing it at 20 pips when my TP was at 70 pips and it ends up getting hit. And I end up closing at 20 pips just because I don't want to lose on stream. And that's where I say though, is that that's the idea of not taking like forcing trades, you know, and not, like I said, there was times I'd take a good old trade on during stream, but I don't hold it just because, like I say, I want to make sure I win. And that's the wrong, it just makes me think, you know, I shouldn't be doing that. I gotta make sure I'm trading how I'm supposed to be trading. It doesn't matter. Good morning, Dennis. Good morning. Hey Pablo, if you're still in here watching, bro, I hope you listened to that little ADX strategy I was explaining. Look, Dennis, I don't know if you probably barely got in here, but look at, this was the ADX strategy, right? Look at the ADX crossed here. It crossed already, the red and blue crosses, and then you're waiting for the white to cross, which is here. That finally crossed, but that signaled on this candle. So it would have told you to buy here, which is kind of too early. But what I've noticed is a lot of times it creates a red, you want to wait for a red support to get formed, or a resistance. And then a lot of times after that creates that support, it usually gets swept. And it's pretty much this same idea with this right here. It just sweeps this previous low, close below, and then this one close below, close above, back into it. So if anything, the latest you could have maybe took the trade is even here. But the idea is once these lows start to get swept, that is the move, because it pretty much signals that. And it's, man, it worked out very, very nicely on this right here. So I mean, from the high to there, that's 12 pips already. From this line right here is 20 pips. So, you know, you could have been in and out 10, 20 pips easily, possibly left the runner to go up there or something. But yeah, that's just the idea that I've been like I said, I use ADX as a kind of like a different type of strategy. It's just, you can take this is the thing, guys, this is what I'm realizing, is that there's a million different types of entries. You just need to add them to your arsenal, like a fighter. Like, let's say a UFC fighter. One fighter, he's good at boxing, but then there's another fighter who's good at boxing and wrestling, and then there's a fighter who's good at boxing, wrestling, jiu-jitsu, and it's just, they're all just good at what they do, and they're good at a lot of things. And that's where I say is, like, in trading, there's an entry model here, there's an entry model here, there's an entry model here, entry model here. There's all kinds of different entries that you could possibly take that you just have to get good at, and you can literally trade all day, every day, whenever you want. So I use the ADX strategy as an idea, kind of like, let's say, okay, I missed this move, I maybe missed this move, and then I start seeing a big pullback. There's a good chance this could be the move that I could probably capitalize on. But me knowing that I'm getting in kind of late, this would be the move I would take 10, 20 pips, maybe 30 if I can, and then, you know, closing out, because I know this is already towards the end of the trend, in a sense, because if this is reaching the highs, it's already pretty much there, you know. So yeah, you just there's a lot to it, man. There's a lot to it. Just yeah, that's how I look at it. I took buys there, cut half at 10 pips, trailed the stop, and it got taken out back at 10 pips. I consider now secondary move. Not sure if there will be another this session. Yeah. So yeah, like I said, guy, is that Pineapple Pete. It's not that move is not a valid move, but just remember, if you closed off at 10 pips and then you're like, let's just say you maybe it went up another 10 pips but came back to your break even, that was like a 20 pip range that you pretty much traded in. So that's where I say is, like, you squeezed out 10 pips out of a 20 pip range, which is still good, but imagine the level of skill, the level of more skill that takes to squeeze out 10 pips out of a 20 pip range compared to 10 pips out of a 100 pip range or something, you know. So it's just where I say is, like, you want to definitely try to focus. Like I'm saying, don't get me wrong, I love a 10 pip move. I'll take a 10 pip move all day, but understand that, you know, when you're taking your 10 pip move, that's how you need to manage it, you know, just like you did. Once you hit your 10 pips, close half, go break even. That's perfectly how you manage it. That's what you want to do. If you're not doing that kind of stuff, you know, and that's where I say too, where it's like, if you understand you're going for 100 pip move, then you know at 10 pips you could go break even and let it ride or something, you know. So it's just different entries require different management, and they're all correct. And that's why I say is there's different styles of everything. You don't have to just do one. You can do multiple, but what I also say is understand that you're doing what you're doing, you know. If you're taking a 10 pip trade like you're taking a 10 pip trade. Don't trade it like if you're trying to get 100 pips. Like you manage it how you manage 100 pip, but you're only trying for 10 pips or something, you know. So just understand what day you're trading and how you're trading and what type of setups you're aiming for and stuff. But that goes into the idea too of just having a plan. You know, when you have a plan, it's easy to follow it. And that's why I always like about Stoic and his whole philosophy on how he trades. It's like everything is all from data. He's not taking a buy because he wants to or feels like it. He's taking it because his strategy tells him that. And he does. It's like his strategy is his boss, pretty much. No, it's a 50 pip range. Okay, cool. 50 pips. Okay, on the first one I got 50. Nice, bro, nice. That's good though, that's good. But you know, that's the idea though, is that this is also a big push though. A lot of times you don't get a 50 pip push before it, before it reverses. A lot of times, depending where you get in at, it's just too, because we're at all-time high, so there's just a lot of bullish pressure right now. And it keeps changing these songs. All right, but yeah. Let's see right here. All right, but yeah, that's just kind of the idea I have. Like I said, I wanted to take a sell, but I mean, you don't want to take no sales right now. We're too bullish right now. This green candle is so bullish that you're not messing with nothing right now. Nothing to do with that. You're not messing with it. But yeah. No, it was definitely rare, but I recognized it from the others I missed a few months. Yeah, see, that's good right there, Pete. See, that comes from the data. The data you collect will help you on your next trade. And that's where a lot of times, like a lot of the moves that I do, or if I do get in a specific type of trade, is because I've seen it before or I've done it before. And that's why I kind of know, all right, this is the trade I get out at 40 pips or 50 pips, because I've seen it reverse a lot of times. And even if I'm wrong, at least I secured my 50 pips. And any other day I would be dreaming of 50 pips, so I can't be mad, so it's just part of it, just figuring these things out. A lot of this stuff. Damn, this thing is moving back down though. And look, it is respecting all of these levels though. It's definitely respecting that level. It did. See, that didn't. I don't like the way that did. So what I'm thinking is going to happen is that it's going to maybe create a range in here, and then it's going to go back up again, and then it'll break that level to kind of give you the next level. So this is kind of what I'm thinking will happen next, is that it's going to do something like that. Because a lot of times it comes back into this range, almost kind of like this was you could say this was the range right here. This was a range, and you see how we dip back into it. That's where I'm thinking is going to happen now with this, as this being the range, is that, or if anything, this could be the range like that, and this is where I'm thinking we could be possibly taking a dip at before moving back up. So if anything, I think it'll be somewhere right here, I think. Yeah. Let me see. Actually, it'd be here, something like that. I think it's gonna be somewhere right here, somewhere like that. And one thing I like to remind everybody is, everybody's strategy works, yo. Everybody's strategy works. It's just a fact if they put it into play how they're supposed to. You know what I mean? If you're waiting for a specific something, no matter how good of your strategy is, if you're not waiting for that, it's not going to work. So don't ever get discouraged thinking somebody's strategy is better than yours, or you this and that. You just got to figure out what works for you and what repeats itself, because that's all that matters. And, this is about getting money. So however you get money out of the trading, that's what matters. That's our goal, is to get money out of it. Yeah, I appreciate you guys for watching. I appreciate it. Make sure you guys hit that like and subscribe. Hit that like and subscribe for me. I really appreciate it. We also got a Discord in the description if you guys want to join the Discord. We also got an Instagram in the description, so follow us on Instagram. If you have any questions, feel free to DM me and I'll help you out. If you have any questions or anything like that, I'll direct you. If I don't have the answer, I'll direct you wherever I think you could get the answer, whatever. I said, man, we're all just here just to get better every day. This thing is moving though. Damn. I did think it was going to go right here because of this is the candle right here. This is the range. This is the bottom of the range right here. Watch. Look at this. Let's see, hold on. All right. Look. I'm guessing it's going to go to this box up here at some point. Maybe that could be the area. We should dump, but I'm not going to take it. Yeah, it's just a little risky right here, just for the reason, like I was saying, about how bullish it is. So it just being kind of bullish, it's like I say, look at this green candle. I mean, until it flips bearish, this white dotted line is the daily open. So until it flips underneath there, it doesn't look like it's really, these could all just be pullbacks to continue back up, you know. So even though, like I say, it's a good trade, what I try not to do though is trade against the bias. If our bias is very bullish, every move that's bullish is bigger than the moves that are bearish. So for instance, look at this move up, look at this little move down. This move up, one candle down, 3 candles up, 1 candle down, and then like I said, this is all just this, and then one move up depending how low this goes. But the idea though is that these moves up are a lot bigger than the moves down. The move up is a lot bigger than the move down, you know. So it's, the thing is that it's not that it's not a good trade, but in all aspects, and all, I like the whole, the way I think about it is I'm making it harder on myself to be more precise. Like I have to be more on point to capture this little range, you know. I have, in order to get 20 pips out of here, you have to catch it from the top and exit the exact bottom. And that's where I say it's kind of hard. It's like it's a little hard to do that. So that's why I say I would want to wait for some kind of pullback to maybe push it back up or something like that. So James, smash the like. Appreciate it, James. Appreciate it, bro. Appreciate it. I made a rookie mistake and set a trade with a stop loss and blew my 200 account. Ooh, James, what happened? Did you just kind of believed the trade was valid? It was either like win passing the funded or blow it type of thing. The idea of that trade, huh? Because I know what you mean. I've done that before. I was gifted another 200 free cost though. New account, let's go. Hey James, that's good that it was free, but just think of it this way though, is that don't treat the trade as if it's free, because you're also going to trade that way. You know what I mean? So try to focus almost as if you did have to work your hard-earned money and spend your hard-earned money, because you'll take it a little bit more serious, you know. And that's where I say too is, because even with, I mean, I say it from personal experiences myself, is like on a small account, when I would have $100 account back in the day, I would treat it like if it was $100 account, like, oh, it's just $100, I don't care, let me just see what happens, this and that. But until I was able to take $100 account serious and really trade it as if it was $1,000 account, I couldn't get it to that next level until I started doing that, you know. So it took me taking $100 account serious to be able to take $1,000 account serious, because it all just becomes just conditioning yourself, you know. So like I say, is even though it was free and you didn't have to worry about losing it, but you still want to have the mindset of trying to take it as serious as possible, because then that would explain why you kind of went with the whole the rookie mistake. You know, you probably, if you would have spent your hard-earned $100 on that account, you probably would have second guessed that trade probably, you know. So that's just why I say it though, is that even if it's $1 or $5 or $100, take the principle of what you're doing serious. Not so much the worry about the money part of it, just take the principles, you know, that you only take trades that are part of your plan, because, you know, those type of things. And whether it's $1 or $100. You know, you should still take the same trade, but it's because, you know, your principles and the way you trade is what's important. But like I say, you gotta, it's all muscles, everything. Confidence is a muscle, everything's a muscle. So you have to go through that in order to get better at it. So as much as you want to be able to avoid these things, you have to go and make a rookie mistake. So now for next time, you know not to make a rookie mistake. You'll be ready for the next time, you know, so you'll be stronger next time. But it sucks. But like I say, it's a long-term game, so don't think it's a bad thing. Just think you got stronger. You know, you learned a lesson. Now improve from that. Yeah, I expected gold to retrace and enter a sell, but forgot to set my stop loss, and then it went back to the charts and breached because I lost. Oh yeah, no, that's for. I know what you mean, bro. I use that facts. This is why I like watching you trade, because you speak common sense into me. Hey, bro, you know, and like I say, because I know James, bro. I'm telling you, bro. Me and you, I know how you are, because I was the same way too. So I understand sometimes you just have to hear it in a specific way. And that's why I like to do a lot of analogies, because I could say an analogy where people kind of resonate with it. You know what I mean? So it makes a little more sense. But yeah, bro, it's all part of the game, though. Like I say, I'm not perfect. Trust me. I still go through my little mishaps after doing so good for so long. I still do my own little fuck ups too. So don't think, it's not just. That's why I say is I always remind myself. It's like, even the best of traders go through issues. Like, I was watching Umar, for instance, and obviously he's a really good trader, but there was a week that he would be like, oh, I had a bad little hiccup today, you know, I lost this much amount, I shouldn't have lost it. Like, it just reminds me that he's human. You know, it's like, we're all human, we're gonna make mistakes, but the problem is that a lot of us don't want to take accountability for them. And that's what trading does, is it makes you take accountability for your bullshit. You know, if you're doing a bunch of bullshit, trading will remind you you're doing a bunch of bullshit. And it's like a love-hate relationship. It's gonna make you into the best person you will ever become, but you're gonna hate it the whole time, because it's just gonna be pounding you. It's gonna be rough. It's gonna be rough, you know. But that's where I say it's a muscle. You gotta exercise that confidence. You got to exercise that discipline. You got to exercise the patience. Those are all things that you have to exercise, because day in and day out, you're going to get better at it. That's why I say too, like my boy Pablo, I don't know if he's watching still, but sheesh, Pablo took a sell. That's what I'm talking about, boy. 20 pips. He just sent it, my boy. Okay, so yeah, I was saying, my boy Pablo has been listening, and he's been watching chat and stuff. But what I was saying is that what my boy Pablo is, that he's a new trader, but he's already understood. Like, he's only been trading for like 2 weeks, and I barely taught him the ADX strategy from Stoic like 2-3 days ago. And now he has patience. Now he has a plan, and now he has something to build on top of. And that was the key, I think, for him to really understand what he needs to do. So now that he has a plan and he could be patient, he could build on top of that, and eventually the consistency will come along with it all, and the data and all that stuff. So it really is just you just got to follow your plan, be patient. You know, there's all kinds of different ways of trading. It's just everybody either wins or loses because they follow their plan, not because their strategy is the best. It don't matter who. If I had a strategy that every time I flipped a coin, I would get in and get out, and it was proven data that it worked, it didn't matter if it was a flip of a coin or not. As long as you win, that's what matters. And if you have data to prove it, there's really no denying it. All right, and look at guys, what do we say? What did we say about this low right here needing to be swept, right? This low needed to be swept. Boom, look at that, perfect. That low got swept by there, close above, target the previous high. Now that's the previous high that we targeted. So that's where we would have probably wanted to take that trade, because that was also where the ADX was telling us to take the trade. Remember? I think we just said that. Yeah, the ADX told us to take the trade here. Look, ADX told us to take the trade here. And what did I say? You wait for a support to get formed, and then you wait for that to get swept. if that got swept by these, boom, perfect. It's simple. You just wait for sweeps, and that's why I say you're not targeting 100 pips. You're only targeting, your little 20 to 30 pips, because you understand this is the type of the trend you're on. It's already kind of ran a lot, so obviously, like I said, that's the real move. But if you're catching these ones, there's a chance you could reverse or whatnot. So take your piece and then get out. But that was good work, Pablo. Happy to see that. But yeah, man. There's a lot to trading, y'all. There's a lot to trading. Just don't give up. I just yapping right now because it's a little tight right now. This range is a little tight, but appreciate all the words of wisdom you provide us, bro. Always, bro. Because like I say, bro, I've been trading for a while myself too, so I've been through it a lot. And one thing about me is I hate going through the same thing over and over and over. Like, it's like running into a brick wall. It's like, why, just do something different. So every time I do a mistake or I mess up, I try to adjust it. So in my head, I've went through a lot of mistakes and I've adjusted a lot of mistakes. I'm still not done yet, though. That's the thing. I'm not done yet. It's a everyday occurrence. Every day I gotta get better. Every day I gotta work out my discipline muscle. Every day I gotta work out my streaming muscle. And that's why I'm starting to stream more often, is just for the reasoning. It's about the discipline. I don't have to stream and trade, but it's what I told myself is, this is the only way I'm going to really get a lot of chart time in, is by streaming, because I could do the chart time on my own, but it's not the same as like when I'm on stream, because when I'm on stream for 3-4 hours, I'm locked in for 3-4 hours. I'm not on my phone. I'm not dealing with nobody else. I'm just trading. That's it. But when I'm not on stream, I'm on my phone, switching back and forth from apps, talking to people, just, doing all kinds of stuff. So it's more or less of like, that's why. And I know myself. That's what I'm saying, because I know myself. So I'm honest with myself. So I know that that's my issue. So the way I solve it is just get on stream, and you won't be able to trade and be on your phone, So I solved that problem by just getting on stream now. So like I say, I hate doing the same thing. So that's why I say right now, it's the next step. And remember we said that it needed to tap this box, right? That's where I'm thinking it's going to need a head right now. All right. Like we're saying, and you guys remember the reason why I had this box there, right? Was because of the fib. Let me see, where did I have it at? From here to here? Oh yeah, it was from here to there, because that was the range. Because the range was from this candle down to this candle right here. So I'm using this low as the low, and then the high. So that's what kind of gave me this idea that it needed to come up to these levels. Ooh, I guess not. Let's see. Let's see what happens. All right, so it looks like it created this low. Let's see if this flips in this area right here. Either it's gonna flip there to close back above. That does look like the sweep of the highs though, like you know how we talk about that. Look at this sweep of the highs right here. A little poking out. You see how it pokes out like that? That's where I say that's what you always want to look for. That little, this right here is your indication of the direction it's telling you it's going to go, which is the next range is down here at this level. So that's kind of the direction where you would head. And then we talk about the highs and lows being broken and stuff, is that's when this low right here most likely needs to be tapped. Because that'll be the low of this range right here as this as the support. But I was thinking, like I said, I was thinking it needed to, this could be like a soup of this area. So this could be the soup of it now to target the tops up here. So if we start closing back up here, then I'm thinking this is where we could maybe start targeting here. But then this would be the breakout where if it does break out, that would be the one that continues, because this sweep of these lows will be what would signal that right there to probably at least come to that. But what I was saying is I still see this box being valid, because if I'm right though, I could be wrong. Like I say, is you don't want to trade thinking you know where it needs to go. You need to read the market and let it tell you where it's going to go. Because like if I were to just say, oh, I'm going to take a buy because I believe this is the area, I could be totally wrong, and I'm going off of feelings, not so much of what the chart is telling me. Whereas if I seen this right here get swept, then I could be more confident, okay, yo, we sweep these lows, this is going to most likely target that area now. So it makes more sense now, you know? So excuse me. But then again, it could, like I say, it just depends on, just see how these close and stuff. It's all it really is just ranges. It's really just range to range kind of thing. So if you kind of look on a grand scheme of things, like zoom out, it's just like I say high. Like I said, there's a high right here and there's a low right here. It got taken out with that. Then this low got taken out with that, and then this high finally got taken out with that, which is this high, and then eventually that became a new high, and then it created a new low, and then eventually it broke the high, and then doing all in the same thing over. Look, low gets broken, moving up. Actually, this is a good example I'm gonna point out right now, is that as you can see by looking at the chart right here, like look, pretty much these ideas of this, let's see, kind of like that, yeah, like the move. This is why I'm thinking too, this might not be the move down, because you would think this would have to be the SMT, but I don't think that's the SMT. Where the SMT is probably going to happen as that it might need to break this level, so you're going to get the real move, I think, from over here. So that's kind of what I'm thinking. But like I say, understanding things need to have like a double top. That's what this is right here. Look, one top, second top, one bottom, second bottom. It's the same thing. Like here, look, one top, second top, and then that's the move that happened. On a smaller form, look at this right here, one top, two tops. That's the move that happened. Went to the next range pretty much. So kind of give or say. This looks like a head and shoulder almost. But yeah, that's what I'm kind of thinking this could possibly be, because it does look like there's also this move right here, which is kind of connected to this move right here. Let me see, hold on. All right. There, actually, let me see. There to there. Boom. Clone. Boom. All right, I cloned it, right? So look, now with that clone, I could do this. Or maybe I could do this. I'm thinking that's where it could probably go. Yo, loan. Oh, this pattern is called the bearish flag. Yeah, exactly. Pretty much the bearish flag, yeah. But this is why also they say bearish flags don't work, because we also understand how SMT works, right? SMT means you need to go upwards like that. So if this was like I guess the bearish flag would be this, targeting that that second high, which is like if we're looking for a SMT, which would be a double top, then that would be the bearish flag to kind of come up, create that double top to come down. So yeah, your bearish flag move would be this, but that's probably also going into the reversal. So, you know, but yeah, you're definitely right. Yeah, for sure. And that's the thing, is all that stuff works. It's just the fact you got to get good at how to use it. Taking buys for gold at all-time highs is crazy unless it's part of your trade plan. I've learned my lesson trying. Yeah, exactly. That's why too, it's like why it's important, once you get an all-time high, wait for this to pull back, create a zone, and then now you have this range right here to play in. So now with this range we have to play in, we could kind of, like before this all happened right here, at this point you only have this. So this point you're kind of telling yourself, okay, we went from the top, we tapped the bottom, now we went to the 50%. What do I always say is that it's the 75% and the 50% a lot of times that we target. So we always target the 50% of the range and or the 75% of the range. So you could kind of see we already went to the 50%. So at this point now, this being the next candle, it makes sense that it swept these lows, which is this low, it swept it with this. So what might need to happen is at least come to the area we went to, if not touch the top of this area now. So that's where I'm kind of thinking, if this is the move to go back up, this was the sweep of the lows. Now we need to at least target the high. So it's going to most likely, I think, that's what I'm saying, I think it needs to go up to these levels. And this box is also the fib level of the 70, pretty much the 70% of this range right here. So if this is end up being the right range, then that's where I kind of realize we need to come up to this level right here. And where I say is that, like, with everything just being about numbers, and it's like a computer, so everything, that's why I kind of realize why measurements are kind of valid, because that's why I've realized 50% and 75% of levels are pretty valid, because it's just something to do with the algorithm or the numbers and stuff. So it's like that 75% is a lot of times that it goes back to, you know, the 50% a lot of the times it goes back to and stuff like that. So, and you could almost trade the daily as the range too. You could, and the one thing I like about these two like the candles that I have over here, you could see the range, right? So the daily is that, and you could put a line here, so you could pretty much see you're trading the daily range in a sense. So you already went for the bottom of the range, you went to the top of the range, now you're kind of in the 50%. So the 75% is down here, which is pretty much the same as this level right here. So you can maybe even say it already targeted that with those lows. So if it targeted that with those lows, the next one will be the high up here. And let me see something. I think I might have just seen something. Damn. Let me cook real quick. Let me cook. Okay, it was that range right there, right? So then that means from this range to the bottom would be James, all right. Whenever you see a potential play, just ignore chat for the time being. Ooze, we all know at times you need to focus and lock in for a bit. Hey, nah, that's real shit, real shit. No, that's true. Like I say, I try to like I say, is that I try my best to try to like not be influenced by anything. Has been life changing. My plan. Oh shit, yeah. Using that 50 and 75% on higher time frame has been life changing for my trade plan. Hell yeah, bro. That's it. It's just I don't know why. Like I can't explain why it does the 50-75%. I just know it does it. So if I find the correct range because of the CRT, if you can find the correct range because of the CRT, then you kind of already know like where to use your 50 and 75% because it kind of tells you the ranges pretty much. It's the correct ranges. There it goes, starting to push. See, that's where I kind of say though is that, and the thing is I didn't use nothing else to find this level. I love your thoughts, bro. Learning a lot. Hey, GSK, I appreciate it, bro. Hell yeah, I appreciate it. Yeah, bro. Like I say, it's like, it's like you have to think of it kind of like an outside of the box type of mindset. So you kind of have to think differently. So it's like obviously this is like a real trading game and like this is like a real thing. So it's like you got to see like how we say about manipulation. It's not a single person manipulating, I guess, but it's the way the market happens where it needs to manipulate you to get you out of the trade so that way it could send it in the direction you want. So just from me understanding that, I could use that to my advantage, knowing, okay, they're going to try to manipulate me. If I were to take a sell right here, where would my stops be? My stops would probably be here. So what would they most likely do is send the price exactly to where my stops would be and then go in that direction. So it's like you could almost be using like the conspiracy way of thinking about it as to your advantage, but it's not a conspiracy way of thinking. It's just the way it happens. And that's what I'm saying. Look at if you were to take a sale right there, it would have made you think you're taking a sale. And what is it going to do? Send it exactly to where you would have your stops at. And that's where I say it's just a way of thinking of it. And it's just, I don't know. I have a crazy way of thinking about the way I think about things, but it's not like I'm not making it up because I want to be right or I'm trying to tell you. I'm literally telling you from just my experience of like what I've seen happen over and over and over. And this is why I say is why I'm working on a journal myself, so that way I can start keeping a lot of this information as data that could be verifiable. So when I start saying, hey, at 1 in the morning every day on Wednesday you get a 100 pip move, and then I could show you 100 trades that happen there, and there's an 80% win rate, and 80% of them are 100 pips. I could verify that from the data, and I could almost like I could repeat that over and over and get into that same exact trade because of the data, you know? So that's why I say it's like the data is important, guys. The data is very important. Look at, there we go, pushing up. Let's see. What's funny is I put this yellow line right there only because of the way I measured it. You guys remember? I don't know if you guys probably seen how I did it. Look at this is how I did it. This is why I say everything is numbers. Everything is measurements. It's all numbers. So look, I measured it from here to here, right? Look, from here to here, because that was the SMT. So all I did pretty much was just put the SMT from that level right there. So I literally from that candle to really pretty much where the move went down at. And this is just, I just did this randomly. This was no technique of nothing. I just understood that this level up here needed to be tapped. So if this level needs to be tapped, then that's where it kind of gave me this little fake, false idea of understanding this is the, but that's what I did. Look, I just put that from there to the top, and then I put this line right there at the top of that. But isn't that kind of crazy? Look at where it got rejected at too. Crazy, bro.
But this is kind of what I mean too, is that literally what I just did, which is how I measured it,
has never been taught before. Like, I've never heard somebody talk about that. I've never heard somebody, you know, say all these things like that. So it's like, how did I even come up with that? But that's the way I came up with that, is just thinking outside the box. But I've also seen how people measure like bull flags. I guess I kind of have that idea where, like, if you were to have a let's say a rectangle trend box, I guess this is a good one to have, something like this. Oh no, not that, not that. Extended triangle, horizontal, vertical, cross. Oh, parallel right here, parallel. Look, something like this. Like this kind of idea. That, boom, is that. Or yeah, like that. Say something like that, for instance. So what they do is, what I've seen people do before, how they measure it is they'll measure it from here to there. And then they'll do as the breakout of wherever it breaks out at is the measurement. They usually, like, they'll use this as the measurement. But that was because of this right here. So just from me knowing that is why I used that SMT level, though, was from here to here, was to give me that. And look at where it did go. It actually did respect that SMT level type of thing. And that's exactly where we did. But look at, I think that's the level where we're going to get rejected, but we're just going to sweep the low and then do the same thing, probably exactly like we did here, to go up. But I will watch it closely. It's called a measured move. It's classic. Yeah, exactly. That's, yeah, it's pushing my exercises to not take it. Yeah, exactly. Don't take a trade unless it's part of the plan, you know? And that's why I say you technically never missed the move. Even if it ran 5,000 pips, you technically didn't miss it if you weren't waiting for it right here to take this as a buy. That, you know, so don't ever feel like you missed it, because there's plenty of more coming. It's just, now you just got to wait a little longer, but same thing, you know, just be patient, follow the plan, and you're good, bro. You sound like you know what you're talking about already. So just, I think too, just follow your plan, keep doing what you're doing, bro, and you're going to be very successful. Like I say, though, the main thing is just following your plan, though. And look at this guy. Now it's starting to push. It's starting to look exactly like that setup that we talk about, which is exactly kind of like that. Just sweeping the lows, just taking its time, working its way up. And let's see, it did, and it told, look at, remember when we said earlier too, look, this was when it first said to buy, down way over here. Boom. That was there, right? Then what did we say? We're waiting for the sweep of the lows. Boom, boom, does that. Now once it does that, it should start targeting this low. And what did we say about the double purges, right? We talk about the double bottoms. Look, this is the one. This is why this wasn't the correct move. Even though this was a good move, you would have taken it. But let's say you go break even because you're like, oh, it's going to go all the way up to the top. But then it comes back and hits your break even. That was all because it wasn't the SMT double bottom move like that, where this created SMT only when this created a new low. And then that was the real move most likely, which is also why I kind of figured, okay, if it breaks this low, closes back above, that is the same idea of this to go up, but now it created a double bottom, and that would be the move to take you to where you need to go. So, but yeah, like I say, SMT is very important. Watch out for it. If you guys, and it's more or less just like a double purge kind of thing, you know, just double purging things. And that's how I've kind of learned to take a bigger move, is wait for this guy, because the whole purpose is that, what I've realized a lot of the times is that, just think of it this way also. You could think of it, okay, we only move if there's a double bottom. Or you could think of it as like a conspiracy theory. This is them trying to trick you into thinking this is the move, because look at how close it got to this level, which is, let's say this is the key level we're waiting for. At this point, it got so close, but it started pushing up. So what that did alone, just knowing that, tells you, okay, they're trying to trick you into thinking it's going to move up, because they want you to think you missed the move. Like, and that's where I say, if your plan is to wait for this to get tapped, you never miss the move if it never tapped your level. So once it did finally tap your level, then you're grateful, like, dang, I'm glad I followed my plan, I waited for it. And then that is where we say that is what saves you, is that following your plan in the heat of the moment, because they want you to think this is moving. But in reality, is it them wanting to make you think you missed the move, or does it just require a double bottom before it actually moves? So if it requires a double bottom, then it's just, like I say, it's a conspiracy theory, just trying to just convince yourself into another reason why it does it. But whatever reason why it does it, it just has to do it, you know. And that's where I'm saying these double bottoms is usually what gives you the moves like that. So even though this is a good move, but this is where I say, if the move you got into doesn't have a double bottom yet, or a SMT like it should, then you know this is most likely not the one that's going to continue all the way up. Because that's where I say this move all the way up only also happened because of this SMT, which was, like I say, the head and shoulder pattern, which is SMT, which is, you know, you got a shoulder here, you get the head here, and then you get a very next shoulder, and then you break the high. And if you notice this dotted line, the dotted line is also the opening of the daily candle. So what I always say about, we target the openings and closings of previous candles. So overall on the daily candle, when you look over here to the left, that is what this dip right here was to just pretty much create a bottom wick, and then that's what created the turtle soup to continue up. And that's where we say also there's another step to it, is there's a million things that go on that need to be happening at one time. This is another one of them. Is that oh man, I just lost my train of thought. My bad. I'll figure it out right now. I'll remember right now. Oh yeah, okay, this is another thing. This is it. Is that, okay, when we talk about when you want to take a trade, where you want to take a trade, okay, look at this, is the opening of this daily candle. This is where we're currently at, right? So where you would want to take a buy is only below the opening of the candle. Where you would want to take a sell is only above the opening of a red candle. It'd be the opposite. But the idea is you only want to take a sell, you only want to take a buy below the opening of the candle. So the idea is that this dotted line right here is the opening of the candle, and it goes into the term of the idea of what we talk about is the reason why this wasn't the real trade. It was technically below the opening, but the idea though is that this is where you would want to take your trade, anywhere underneath the below. So you wouldn't want to take it here because that's above the opening. So the idea would be, once you do open, anywhere underneath the opening is where you want to take your trade at. And this is exactly explains why this also happened exactly here at the time. And then going a little bit deeper into like how we understand time, not only was it underneath the opening candle, but it was also at 1900 o'clock. So knowing it was at 1900 o'clock, we're also under the daily open. And then, there's a lot of things to it, but that's where I say you could use these little indicators of kind of things to try to give you an indication of what should be happening. And that's where I say where you would want to take your trade at is below the opening of whatever candle you're trying to trade. So if you're on the 4 hour, same thing. You want to take it below the opening or close of the 4 hour. For instance, let's say this was the 4 hour candle, right? This big green one. Where you would want to take your trade at is only below the opening, because if you're targeting a higher price, because this closed above, this signals higher price. So if you're targeting a higher price, then you would want to only take your buys below the opening, which would be exactly where the turtle soup would happen at, because the bottom wick is just a bottom wick to continue up. So that's where I say is like everybody's strategy works, but only in the correct bias. Where a lot of times people are like, let's just say, for instance, it'll make it easier. is that why didn't this fair value gap get respected? Look, if you were to take this as a bearish fair value gap as a sell, you're like, oh man, this is a sell. Once it hits this level, I'm taking the rejection. That is not a valid fair value gap. And then a lot of people would say, oh, fair value gap are crap, they don't work. But it's because you're using it wrong. You're not using it correctly. So if you were to use it as in the correct bias, this alone, when a fair value gap gets disrespected like this and it just blows straight through it, what this tells me though is that this is not the correct bias. So if you're using this as a bearish fair value gap and it blows straight through it, that tells me right there that this is not the bearish bias. This alone is a bullish bias. Because look at it as a bullish fair value gap. What happens to a bullish fair value gap? Look at this one. This is a bullish fair value gap, but look at why did this one get respected? Why did this one get respected? But that's because this fair value gap is in the bullish bias. It's already it's already picked its direction. So it's pretty much telling you this is confirming this is a bullish fair value gap. So this is confirming this is a bullish bias. So you wouldn't want to be taking those sells really in any of this until it starts to disrespect this bullish fair value gap. So let's say we start closing below it, then that will kind of let you know that the bias is kind of changed, because it only respects like I say, the concepts that a lot of people use, no matter what you're using it for or how you're using it, a lot of the concepts work, but the problem is they're using them in the wrong bias. So if you have a bullish or bearish bias, the concepts need to align with that. So that's where I'm saying is like, why does somebody will use a bearish fair value gap right here and then instantly say, oh, fair value gaps are trash, they don't work, they're not, you don't know what you're talking about. But how come if you use it in the right terms, like a bullish one right here, then it works exactly to how we talk about the 50%, tap it and then push up. So that's why I say too, just that alone, me understanding that this is a fair value gap, a bearish fair value gap, it should respect it. This alone getting broken is already telling me this is not bearish yet, because if it was bearish, it would have respected that and then got rejected. So what might happen now is this might become like an inverse fair value gap, which means now it's just going to be the opposite. So now it's just going to use it as a bullish one now. So if it ends up getting rejected from here and start pushing past this high, then then that right there will confirm that this is a bullish bias, that it's pushing up, and then that's where I would say you would want to take a breakout or something like that, because it's kind of confirming the bias. But that's where I say too is just, yeah, it's already too late though, obviously, but that's just how I look at it. That's how I read what I read. But what's crazy, guys, is this right here. Look, I can't believe that line right there is that valid, because how does that line, like, I just made that up in my head right now. But that's where I say though, the reason why this does work is because everything's about numbers. It's just all numbers. So measurements are numbers. So if you get the correct measurement, then you're just following it to like the numbers it says. But I had no idea this was a valid level because of any other reason besides this SMT that I used right there. And that's crazy to me that actually worked. But not only worked, but look at that straight rejection. Like, you could have, if I would have known that was a valid level, you could really take a sell from there and take a quick scalp. Because let's see, from there down, it did run 16 pips. Right here, 10 pips or so. So you would have still had to wait till that candle. But the idea is you would have only needed a 4 pip stop, which is the highs of here. Because if that idea is wrong, then it's going to just blow straight through it anyways. And you shouldn't need a big stop to prove that, But that's how I like to trade. Like I say, I like my stops small because I don't want them to be too big. Because like I say, my idea is I'm getting in at the top to go down, or I'm getting in at the bottom to go up. So if my idea is wrong, it'll tell me real soon. But yeah, my bad. I forgot to. Damn, Asia is peaceful, but Wix sleeping. No, Wix is trading New York. That's why alone. He trades mostly just New York now. He don't really trade Asian. Gold go down or up? I hold my trade. 2015 sell. Oh my goodness, bro. You are holding 25.15 sell. That's way down here. 25.15. You're holding a sell from bro, you're not in no sell from down here. Are you really? How are you, bro? Bro, you're down 5,000 or 500 pips. That's a lot of pips, bro. That's why I say is you what BF did mate energy is bullish. What BF you did mate? What do you mean? My bad, loan. What do you mean? Ranja, one thing you need to work on is having stops, and this is where this is one thing I like to take pride on in how I trade, is that maybe if you're showing up to my streams, you could learn, is that, like I say, is that you should have known this was not the right trade a lot sooner than 500 pips if you're in the trade that I think you're in. You know, obviously, I don't think it's going to come back to these levels anytime soon. It got a long way to go, but, I mean, we are at all-time high, so if anything, you know, we could be at the top and then eventually start working our way down, but it's a little too risky. That's a common troll. I'm holding, not sure why they do that. Hey, Pineapple Pete, that's true. It sounds like something that would troll, because I was like, bro, there's no way you're holding 500 pips, bro. I mean, but I wouldn't be surprised. There is people that probably would, though. But that's why I do mention it, is that you need to have a plan. You need to have your stops at a logical level, even if it's 50 pips. But like I said, 50 pips is better than a 500 or even 100 pips, you know. So, all right. So now we did break those lows and we did close back in the range. So let's see. I'm wondering if we're in this range now. So we did tap the bottom of that range. Now looking like if we flip bullish, I think we could tap this level up here. That would be that's like another 10 pips. It's not much, but yeah, that's where I'm thinking if this candle turns bullish, then I think that's where we could, yeah, start heading towards this top, because this becomes the CRT right here, the range. And this is why I say it's important to be able to identify the ranges. Like obviously the what a normal person would say is this is the range, you know, like the tops, but in reality it's not really that. It's like ranges inside of ranges. So where I was able to tell the range was this candle right here, and you would be thinking, why did that candle become the range? But if you look at it, this is what got broken and also closed back inside of. So this is the candle these last three candles are pretty much trading inside of. So they're hitting the lows of it, hitting the highs of this area. So this is the range it's trading in. So that's why I'm saying is that if it sweeps the lows, it's going to need to go to the highs. And it looks like it did target these highs at least before coming back down again. So now the next range would probably be, I think if it broke that level, it would probably be this range right here now. So now we're in this range. So the next low would be the bottom of this candle right here. So now, like I say, you can see this candle right here. It swept the high, but it didn't sweep these highs. So I'm wondering if it does need to come down here, but it does the whole to go back up again, to go continue like that. It's like it really wants to hit this level, but it's struggling to get up there, but it'll get up there, I think. I still think it's going to get up there, which is why I'm saying is that if I line things up, if I'm like, okay, it needs to go here, then it goes up, and it starts to follow that exactly like I'm saying, then it just confirms that the bias that I'm talking about is correct, and it is a bullish bias, and then it would make it easy where if I did see a trade up here or something, I could take a buy up here to target this high or something, because I already know the direction pretty much, you know. And that's why I say a lot of times I'm just playing it out, trying to figure it out and stuff like that. I'm also hold my sell. Oh, you retraced it. Means today your energy is excellent. Which breakfast you had this morning? Oh yeah. Oh, what breakfast you had this morning? Oh, bro, you know what's funny, lone trader, that you said that is that I actually went and had a hamburger and fries, and I also had an unsweetened tea. And if I'm correct, doesn't ice, like those teas have like caffeine in it? So maybe that's why. And I also did drink a soda, so that I know for sure the soda has caffeine in it. So probably a little wired up a little bit. But I did eat a good lunch. So what I did, guys, is I took a good nap earlier because I woke up early for New York. I traded New York, caught a few trades, and then since I went to sleep late last night, I woke up kind of early, so I ended up taking a nap. Took the nap, went to go get the food, ate a good little lunch, and then I hopped on stream, and like I say, it definitely felt good today. Today was a good day. I've been trading, like I said, this is probably one of the best weeks I've had in a while. Just not even because of the pip wise. I don't think it's even my best pip wise. It's more or less of just my plan. Like I was able to follow my plan so well this week that like even if I did take a loss, it was very minimal. It was a 10 pip loss at the most, maybe 6 pip or something, where that's what I like to see, is that I'm managing my risk very well, and over the long term that's going to help me out because like I say, it's a muscle. So I was able to do it for 1 week. Now I have to create that muscle that could last 2 weeks. And then eventually I could get it to 3 weeks, and then eventually 6 months, and then a year, and then eventually it just becomes normal, And that's where I say too, it's a muscle. Like there's been times where I used to do good for one day, do bad, or one trade, do bad the next trade. Do good one trade, do bad the next trade. Then eventually it became 2, 3 trades. Then it started getting into the days. I would do good for one day, bad one day, good one day. Then it started getting to I'll do good for 2, 3 days. Then I'll mess it up at the end of the week. Or I'll mess it up in the beginning of the week, finish off strong. And then eventually it got to where I was able to go a whole week, and I'm hitting weeks now. The one section I haven't hit was a whole month where I could say I think I did my perfect plan the whole month. Didn't mess up, no problems. I don't think I've went a whole month without doing that yet. So I think that's my next thing though. But it's like I said, I've been able to do 2, 3 weeks in a row, which puts me ahead. But then that's where I'm saying I have one bad few days every 2 weeks, and it's like I'm trying to eliminate that. I'm trying to really have only good days. Literally, even if it's not a winning day, even if let's say I take a loss or 2 losses in the day, but those 2 losses still only be maybe 20 pips max, 15 pips. Imagine if 2 losses are only 15 pips. I'll end the day still happy because I understand how easy to get back 15 pips is. And I'm not saying it's easy because it's trading's easy. It's more or less of the number 15 is a lot easier than 100, So if imagine you walk into work one day and your boss is like, hey, you got to catch 100 pips today or you're fired. You're like, oh crap. But imagine your boss is like, hey, you only got to catch 10 pips, and if you catch anything more than that, it's a bonus. You're like, dang, 10 pips, I could do that easily. And that's where my mindset is. Like, I'm trying to come into work every day knowing I'm not that far away from where I left off at, So that's where I always try to remind myself is that losses are fine, but they're only okay if you manage them correctly. Keep them small. It's all right. It's all right to take a L, But that's where I say too, the reason why a lot of times we take the L is not even because the strategy. It's more or less ourselves. We're literally sabotaging ourselves. We're not following our plan. We know not to do that. We're over leveraging. We know not to do that. We don't have stop losses. We know not to do that. All these type of things. But damn, yeah. Hope it will come back soon. I'm also holding my sale from 25.35. So you are 300 pips away. Well, like I was telling them, Goku, what you want to do though is try to use levels a lot sooner to give you the information that your idea is wrong, because you don't want to be in this trade from here all the way to the top just because you don't want to be wrong. Like, it's okay. You could have been wrong here. You could have even been wrong here, and then it comes down. You're like, oh man, I should have held, but then it goes back the other way, and then your idea of closing when you did at least here is better than if you closed up here. So that's where I say it's like, don't be afraid to take a loss. The thing is, be afraid to take a big 500 pip loss. Be afraid to take a 100 pip loss. That's what you need to be afraid of, not so much a loss in general. A loss is going to happen. Nobody goes undefeated. But what you need to do is be able to lose and make it look good. Where imagine you lose 10 pips. but you followed your plan, everything was fine, no damage done. 10 pips is not that bad. But imagine you lose 100 pips, then there's a lot of damage you just caused, you know, and then you gotta, and it's a snowball effect, which means it just gets bigger and bigger, because now not only did you lose 100 pips, you're down 100 pips. Now you start to trade with that in your mind, you know. So remember, guys, this is why I try to remind you guys, is that you guys could be profitable tomorrow if you really wanted to, especially if you've already been trading for 6 months or a year. You could be profitable tomorrow. The main issue with a lot of us is just ourselves. Like, we just need to master ourselves. We need to be able to wait for our setup. We need to be able to wait for these things and like have patience and only take our setups that are high quality setups. And you guys know these things. You guys all know these things, but it's the problem where like I was kind of, I don't mean to pick on you, James, but it's like how you mentioned earlier that you blew your funded account, but you also said right after, oh, it's because it was free. So, you know, just that idea of having a free funded will make you trade a specific way, whereas if it was a $1 million account, what would be the difference? You know, you would still have to trade the same way as if it was a free account or a demo account or whatever it is, you know. So that's where I say is just follow your plan and you will be profitable, but you're literally battling yourself. It's not your strategy. You know how to trade. It's just because imagine, you know, you could look at your terminal and you could see the wins you've taken, but then you could also look at the losses that just wiped them all out. So just imagine if you remove the losses and you kept the wins, you would be profitable. But then that's what I'm saying. And if you point out, why did I take the loss? Oh, because I didn't follow my plan, or because I didn't, I over leveraged, I lost all my profits. It's always a human error is what I'm trying to point out. So if it's a human error, then that means that you guys will be able to fix that. It's not unfixable. And that's where I say the good part about trading is that a lot of it is all within ourselves. So, and that's fixable. You guys could fix yourself. If you're not patient, you can't go buy it somewhere, but you could actually work on it, and that's something you can change. You could become patient, and it's all the things that you need to become a trader is stuff you could work on. They're free. You don't have to go buy them anywhere. You ain't got to go do nothing. You just literally just follow your plan, do what you're supposed to, and you could become profitable. But it's within yourself. And I'm gonna explain why. I appreciate your time and all. Hey, no problem, Tony. I appreciate it. Hi, what are we planning for any entries? Sonali, my idea was that we needed to kind of come up to these levels up here. So obviously I'm not gonna take no trade yet, but the idea would have been to take it down here. We were looking at buys from down here, but like I said, it's already happened. So what I'm gonna wait for now is us to maybe make our way to this target. And either we're going to blow through this and start closing to target this high, or we're going to get rejected at that level, come back into this range, sweep the lows, then go up again. So I'm kind of waiting for things to play out. This is sweeping lows right here. And we always talk about, you know, if we sweep the lows, we're going to sweep the highs. So if we already swept the lows, the next thing is to come up here to these highs. So, and then that would also kind of align with us moving up to this level. So I'm not in no trade yet. I'm not trying to, like I said, I don't want to take no impulse trade. I need to take a trade that's part of my plan. If my plan is from down here, I need to wait for it to come down here, but I don't think it's going to come down here anymore because it already did that. And this candle right here, a wick below, close above, signals higher prices. So most likely we're going to need to create a higher price before we come down, if we want to come down. So I still see this needing a top wick, which would also, if you're looking for a sell, you don't want to take no sells yet either. But why I wouldn't want to take a sell is because we're in this bearish, in this bullish bias, meaning every time something bullish happens, it respects it. Look at a fair value gap on this 5 minute perfectly got rejected and then went up, you know. So the fact that a bullish fair value gap is getting respected lets me know we're in a bullish bias. So we definitely don't want to take no trades going against that. Plus the daily is also very bullish. So Right now, everything that is some kind of this is a pullback to go up, pullback to go up, pullback to go up. This could be a pullback to go up. So right now, as you definitely don't want to look for sells. You're definitely only looking for buys. But like I say, is you don't want to take a buy right now because we're kind of in the middle of a range. You could kind of see this as the range. You were pretty much in the middle. So what would need to happen though is we did sweep it. But maybe this wasn't enough. Maybe we do need to now sweep those lows, which will cause this, and then that will be like the head and shoulder at the key level, which would start to push it back up to there. So there's a few things that I think could possibly happen. I'm thinking this could be maybe this sounds a little logical right here. So I'm thinking what could happen is on a small 1 minute, create a head and shoulder idea, make a new low here, and then start pushing up. Yeah, you are right. Billionaires, business owners loses millions of business, but they were still smiling. Exactly, bro. Like they say, and if you want to make $1 million, you have to risk 100,000. If you want to make 10 million, you got to risk $1 million. If you want to make 100 million, you got to risk 10 million. So it's like, you know, you gotta put a risk. You gotta go no risk, no reward. You know, so. Oh yeah, and like I was pointing out about the whole idea of following your plan that you could be profitable. The reason why I say this is that I've been trading for a long time, and I just showed my boy Pablo how to trade probably a week ago. I've been teaching him hands-on every other few days in person, teaching him everything I know, one-on-one type of thing. And I've been teaching him only for 2 weeks, but he's put a lot of time in on his own. But what I'm pretty much pointing out is that within already 5 days, he's been able to create a plan, and he's became patient. And today he just took 3 trades, and this is after taking, like, he used to take 5 or 10 trades a day just as practice, but now he's still practicing on demo. Don't get me wrong, this is not real money yet, but the idea though is that he's only been trading for literally less than 2 weeks. And he's already created a plan, and he's patient. And today he sent me 3 real trades. Like, he can confirm that he tells me, he was sending me the signal like, hey, I'm gonna buy right here, I'm gonna sell right here. All 3 of them hit, and he's probably collected maybe 150 pips today or 150 points because he was trading Dow Jones and all these other things. But anyways, the point of what I'm making though is that literally within a week, him not knowing very much at all, literally from 0 to as much as you could learn within a week, he's already created a plan, and he's been able to become patient. From going from 10 trades a day to down to 3 quality trades, which were all wins, 40 points and above type of thing. So what that just tells me though is that it's not so much about how smart you are or how much knowledge you have in trading. It's just about how fast you could find a plan and stick to the plan every single day. And that's where I'm saying is that he's my example, that I have a personal example, knowing it doesn't matter that he doesn't know a lot. What matters is that he has a plan already, and he knows to be patient. So if he doesn't do what the plan says, then he shouldn't take a trade. And that's where I'm saying is that today he made 150 points, but obviously it's just 1 day. But what I say though is just like I told him, is that if he does this for like a month or like a few weeks to a month on a demo account, that will prove to me that he knows what he's doing now. So now he could maybe move to a funded account, and then he could practice on a funded, and now to start to use real risk within literally a month or 2 months of learning how to trade. And that's what I'm saying though, is that what helped out a lot is Stoic, obviously, because like I say, he uses the ADX strategy. So a lot of the, like, it's the data, he's sped up with the data already, because Stoic has spent years on collecting all the data, knowing when to take the trade and when not to take it. So for him, not knowing that much, but he jumped straight into where all the data is at. Now he has 3 years worth of data to base his trades off of, literally only being able in the trading game for a few weeks. So that's what I'm saying. It really just comes down to having a plan. And if you have a plan and sticking to it, and it doesn't matter how good of a trader you really are, as long as you have a plan. And that's just kind of what I mentioned, is that's just kind of what I why I understand that you guys could really be profitable. It has nothing to do with how much you know. It's really ourselves. It's just, like I say, following a plan. Like, and that's what I say is his plan is a specific set of rules. And if you find the specific set of rules, that's all you got to do. You know, you just find those rules. And we are starting to push up. We're starting to push. So it is a good sign. It is showing very, like we're saying though, it needs to come up to these levels. And how did I know this level was gonna get tapped? I don't even know if it's gonna get rejected. It might, because the other day or earlier when I had a 75% level, it did hit the 75% level. Let's say it was like here, it got rejected, but it ended up like breaking it again. So what that told me though was that it was a valid level, but the thing is it wasn't the top either. So just from this alone is that I'm wondering if this could not also be the top. It's going to hit it and maybe even close above it and then maybe come down. But there's obviously two options, I think, too, is that it's going to tap that box and then eventually from the box, it could get rejected instantly. But then, like I say, eventually work its way back up and continue to break through it. So that's just my idea for that. But yeah, man, it's just, I just read price action. That's what I like to do. I like to read price action. I like to read candles, and a lot of little different things that I've incorporated into price action is just how I read the ranges and stuff like that, and the time and stuff like that, man. Yeah, that's what I like to do. Authorize, what up, bro? What up? What up? Appreciate you guys for watching, though. Appreciate it. Make sure you guys hit that like and subscribe. You know, we always trying to cook. We're always trying to cook, man. We got 36 people watching. Yo, that's love right there. Hey, make sure you guys hit that like and subscribe. We got 40 likes. Wow. Can we get 50 likes? Let's hit 50 likes. And make sure you guys hit that subscribe button. Hit that subscribe, and we are trying to hit 2K. Once we hit 2K, we are in business. But nah, yeah, I appreciate you guys for watching. And like I say, is that if you guys want to follow our Discord is in the description. Also, my Instagram is in the description. And there we go. We tapped that level. Perfect. But yeah, this is what I like. Like I said, it's keep it simple. Y'all don't gotta make it too crazy. And we are getting rejected at that level now. Look at, that's where I say too, is that either we're gonna get rejected here or it's gonna blow through it. Obviously there's only two ideas, but it's one of the two. But that's kind of my idea though, is that things need to be let me see, this could be eternal liquidity right here. Look, eternal liquidity, the wick above. So we're gonna need a close above that level here on the 1 minute. There goes the close above there, and then you're gonna need, I believe, a close above there. And then this is the Model 1, I think, that's forming. But like I say, last time the Model 1 formed in this 70% level, it was a false Model 1. So what it did was we were waiting for a fair value gap to get formed. It never got tapped back into. It ended up just continuing down, like they called it a breakaway gap, and then it just kept going, and then eventually it came back and it broke through it and it pushed straight up. So that's what I'm saying is this level right here could be that, where it could just be like a breakaway level or something. And this is CRTing up. This just CRT'd up. Let me see. Yeah, that closed below, barely closed below, but okay, look, perfect. So the idea is that it needs to close above and then back in the range. So what I'm wondering though is that, let's see, hold on. All right, let's see. That's this level, boom, here. So it wicked there. It wicked there. That was, it wicked there and it closed above. So okay, so that's, all right, let's see. So the idea is that you want it to close above and then back in the range. I'm wondering if this could be the range right here. No, that's actually, okay, yeah. So this is, okay, I'm still thinking it needs to close above the range and then the next candle is going to close back in the range, and then it should create a fair value gap. But like I'm saying is we are bullish right now, so I wouldn't want to be taking no sales right now. But I'm letting this all play out this way because I want to be able to see if this is going to be like a false model 1, which means if it starts to push down, it's only going to push down so it could continue up again. So that's just kind of what I'm preparing myself for. I'm trying to see is that, yeah, this needs to close above though. It's not really, nothing's closing above that candle. That's kind of letting you know it's that. But yeah, I appreciate it, guys. Appreciate it. Oh man, it did tap that level though. Look at how it tapped that 50% level, and that is only because I used pretty much the range of this candle. Let's see, where was it at? Yeah, it was right here. From the top of here. Oh yeah, look. And the reason why like I say I use the fib as a measuring tool, it's just all it is a measuring tool. It gives me the 75% of the range, but it only works if you get the correct range right. And that's what I'm saying is this was the range right here. A lot of people wouldn't get this correct because you might even put the line here or even here, and then that would technically give you a different a position. I mean, it's still kind of in the same area or whatnot, but like I said, if it's the wrong position, it could definitely give you a really bad level, where even though those ones weren't too far off, but it's also not too far off from the original area anyways. But that's what I'm saying is why it's also not this bottom. I mean, it could be that bottom also, but that will give you a different level also. So that will come down here. So if this ends up coming back down, there's a chance that this is where it'll come back down to. It is doing like a little fake out right there though. But that's how I'm saying is, and that's how I was able to find that as the level. So, and we had that level from a long time ago already. So we've kind of already knew that was the level, which is why I was also saying I don't want to take no sales in here, because all of these sales are just like false moves to try to convince you that it's bearish, but it's not. This thing is all bullish right now. And like we were saying about the daily candle, the daily open is way down here. So we're bullish as long as we're above this candle right here. But yeah, I appreciate you guys for watching. I appreciate it. Make sure you guys hit that like and subscribe. We got 42 people watching, yo. That's love right there. Can we get 50 likes though? Can we get 50 likes? I would really appreciate it if we hit that 50 like mark. Appreciate it. All right, if you guys have any questions, feel free to ask questions. You guys are just letting me cook, and I'm not even, I'm cooking, but I'm not in no trades yet. And look at, okay, what did we say about almost like the head and shoulder, right? Look at this, looks like a head and shoulder. Boom, boom. Actually, look, it looks like the model 1 might be showing up now. Actually, look, okay, there goes the close above. We need a closer. We need a close below this level right here. So this is where it's kind of giving me the false model 1, where I'm saying though, this is the reason why I think it's a false model 1 is because this is not a sell. We're still bullish. So this is what they do to try to convince pattern traders that it's the move down, is that every time they would see a model 1 show up, it's always like a false model 1. So that's what I'm saying is that all of it is just to convince you that it's going down so it could continue to go up. So just from me knowing that alone, I could tell you which direction is going just from that. So that's why I say is like once we start to close right here and then it does all this might just be a false model 1 so we can continue past these levels. But yeah, like I said, we need what needs to happen next is a close below this bottom. And this is what I'm saying too. If we start closing back above this level, then this whole idea is already invalid anyways, because what needs to happen is we need to close below here. And then what happens is we create a support, and then that's when a fair value gap forms. And then that's where you're looking for a retracement back into that level. But then it goes back to the point where we're saying earlier, why doesn't this fair value gap valid? Because this fair value gap is a bearish fair value gap in a bullish market. So why it would almost be, this is the same idea why this didn't work out, would be the same reason why I don't think this one will work out, was because of the same issue. It's not the right move, and it's a bearish fair value gap in a bullish move, you know. So we're not bullish yet. I mean, we're not bearish yet. So even though we took out these highs, it's going to probably make these highs here. It might come back down, but then that's where I'm saying it's going to come back down to do something like that. And then that's where I say is where we might want to look for a trade, is somewhere in here. But then this goes back into the part of understanding right now at 1 o'clock. I don't know if, yo, Eddie, what up, bro? What up? XAU jumper, definitely love. Appreciate it. Eddie, I don't know why I thought I had you as a moderator already. I got you as a mod, my bad. Lone Trader, I got you as a mod too. My bad, I got you guys. Authorize, you're a mod too. My bad, I don't know why I didn't have you guys already. Who else? Oh yeah, Pineapple Pete. I forgot what I was gonna tell you. I was gonna tell you something, but I forgot. My bad. Oh, Lassic, I didn't even see you hop in the stream, Mr. Miyagi. Yeah. That's, oh man, my bad. I was kind of just, hey yo, appreciate it. Yup. Oh damn, this thing is pushing. All right, there it goes. It looks like it did push right past that level. Damn, I was thinking it was gonna do a false one, make it look like you were gonna come down, but nope, it didn't even do that. But that's where I say is like, it gives you this whole, like, this is the setup you wait for. So if it doesn't play out, it lets you know it's not what you thought it was, which was the move down. And that's why it's almost like you could take the total opposite trade of your idea, because if this isn't the move down, then the opposite idea is the correct idea, you know. And there's only two ways it can go. But yeah, that thing is moving. Let's see what time it is. It is 8:05. So right now is the important candle also. Oh yeah, that's what I was gonna tell you. Pineapple Pete. Damn, I just forgot again. Damn, man, I'm tripping. I'll remember again. Oh well. Oh yeah, the time. That's what I was gonna say. The time. Pineapple Pete. The time. Remember how earlier I was saying the 1900 o'clock candle is very kind of like, it does it creates a low, and then it gets swept, and then it usually moves in that direction. This candle right here, which is the 1 hour candle, this midnight to 1 o'clock candle. So pretty much the 1 a.m. candle is also very important, because a lot of times the 1 a.m. candle will be the one that either purges this and then it might come back down a little bit, or this would be the candle that it creates the high or low, and then the next candle is what's going to purge it to continue up. So we're going to either be attacking this high or the low of this 1 hour candle, I believe, once it closes. So once it closes, the next hour candle will be the one that I think is going to target the high to continue down. So my idea would be that if we're still bullish and all of this idea is still bullish, then what I think could happen is that if this candle closes however it closes, this one right here, then we're going to probably target the lows to grab liquidity, so we could start targeting the highs of that. So if we do start to move down, I think it would just be possibly a bottom wick, so we could target those tops and stuff. But yeah, so like, oh yeah, Pineapple Pete. So yeah, watch this next, because for me right now the time is 8 p.m. But it's obviously the New York time is 2300, which is 11 p.m. So it's 11 p.m. till midnight, and then the midnight to 1 a.m. or whatever. That 1 a.m. candle is very important, just like the 1900. But the way I remember it is that it's always 159. So it's like 159 is always the times that like a 4 hour candle close and stuff. So, but yeah, let's see. Ooh, look at this right here. Okay, that was that 50. Oh damn! Don't tell me this was the move. right, because the reason why I thought like that it's still valid right there, but the reason why I was thinking that could be the level 2 is because if you look at this level right here on this 1 minute, that's like the last level that hasn't been tapped into yet, which was this little fair value gap. So like the idea of understanding what a fair value gap is just an imbalance. So like it having that gap is why it targeted it. Boom, it filled it in and gave it some juice to come down. But that's why I'm saying is why that level was the valid. The one I had right below it was the fair value, I mean the Fibonacci level, which is just the 70%. Like I said, I don't use the fib as a strategy or anything. It's just literally a measurement. So if I could find the correct range, then I know where the 75% is at. So that's why I kind of able to target. But yeah, options, bro, I'm hella lost. Walk me up as a 5-year-old. What is a level 2? Well, level 2 is just understanding like you could say, let me delete this right here. This is a level 1 right here. Boom. Look, this is level 1, this is level 2, this is level 3. So on a level 2, you usually get a rejection, and then you break through it, and then you create a support, and then you target the next high, which is that high of that. So a level 2 is just pretty much the ranges, just 1 range, 2 range. So if you break range 2, that usually gives you your direction. But if you break range 1 and you're if you break into range 1 from down here, it usually goes down to here, then it'll break here to continue down. So you're just trading range to range is all that is. Omar, I think we're heading to 2580. I do think we are gonna head that high. I do think we need to tap these highs because it goes to the part like I was telling you about the double top idea, is that it needs to create this new high, which is gonna give us the signal that it's gonna come down. Almost kind of like this idea where, I mean, this is a small version of the idea, but it's the lowest. It's the principles of that it purges twice. So you have a low here, and then you have a second low that goes even lower, which gives you that lower low. And it's the same thing as the opposite. Whereas if you're trying to catch the top of the range, look at every time there was a top of the range. Was there 2 tops or was there only 1 top? And if you say it was only 1 top, go to a smaller time frame and then look on a smaller time frame to see if it's a double top. Because if you see it as just a 1 top, it could be on a higher time frame, where when you go to a smaller time frame like this is the 5 minute, you're probably going to get that double top like that. But on a, let's say a 4 hour, it might just be a top wick and the next candle just comes straight down or something like that. So it's, you know, and like I said, let's just say the next one's a fake out and it comes down. You would never see that as, you know, what we were just talking about as the double top. You would never see that as the double top because it would just be a fake out as 1 candle. But that's what I've realized, is that this move is still valid, but you're not going to catch the move that goes all the way back to the bottom of the range. Because you guys have to remember too, is that when we trade ranges, this is the range right here, the daily range, which is the daily candle. So when you go down to the daily range, this is all the daily range right here, which is all of this range. So wouldn't it be nice to be able to catch the top of the range and close at the bottom of the range? And it's the same principles as if it's on a 5 minute or 1 minute. It's the same thing. You just need to wait for the lows and highs to get tapped. So that's where I say a lot of my trades and my ideas come from, is knowing where the highs or something needs to get tapped. Because look at this right here is the previous day high of this daily candle. These are daily candles. Previous day high, right? Look at where it did get rejected at. It did get rejected right there. So this next candle, when it came up, it did reject right there. So I'm just saying is that I understand at every key level, there's always some kind of reaction. So at a previous day high, especially all-time high, once it breaks that level, especially with the second purge, there's a better chance that this is going to range all the way back down to the bottom of the daily range or 4-hour range or whatever range you're trying to trade. Because look, let's say this is the range. This will be the 4-hour range now. So this is the daily range, which is all of this. And then this is the 4-hour range, which is just this. So you see how much it got a little bit smaller. But like I say, it's the idea. You just need to make sure you're in the right you're in the right direction also. Because if we're bullish, we don't want to be trying to take no sales right now, especially not if there's no SMT showing. And the SMT is just a double top. That's how I just say it. So, but look at that. Look at this fair value gap. It's definitely getting respected at that level. I'm wondering if that could be, let's see something. No, like I say, remember how I was saying about the Model 1, right? The key level would have been this 50%, but you see how we closed above it? That tells me alone that that is not that key level. That's not the correct level. And look at, I mean, just using this as the range, because I can kind of see this as the range right here. I'm using this as the fib. So just from having these two as the level, it would have given you the 75% of this range right here. So this is a little range inside of the range, and you could literally target the 70%. That's what I'm saying. It always goes to the 70%. It's crazy how it does that, but that's what I'm saying is like I'm not using the fib as a strat. It's just literally just as a measuring tool. So I know if I find the correct range, we're either tapping the 50 or the 70%. And a lot of times it's the 70%, which is usually like it's usually like that extra little bit of a low. Like this would be the low, but then this would be like the extra wick low. Like a lot of people will take a buy from here and then they go into a little bit of drawdown. But my idea is expecting this because this is going to go into that 70%, and that's where you could possibly take that trade. But that's where I'm saying also the idea though, it makes more sense why you would want to take a buy though, because we're already bullish. And look at the daily candle. This daily candle is very, very green. So imagine trying to take a bearish trade against this big old daily green candle. Then you're expecting you to catch the top to the bottom. Then you wonder why you're getting stopped out. Wonder why your break even's getting hit, because like I said, we're taking sales against this giant candle. Fred, I got in at 25.91. Haven't moved stop to break even yet. Is that bad? I got in at 25.91. 25.91. We haven't even went that high yet. Unless you're on futures, maybe you're on futures, you have a different price. 25.58.2 buying zone. 25.58. That's kind of far. I mean, not saying it's not, but it is quite far. That's 100 pips away. Oh yeah, futures not spot. So let me check the futures chart. I have a futures chart right here. Yeah, this is the futures. Oops. So in 91, 25.91. All right, so you got a 25.91. You're in about, well, are you taking a buy? You're in a buy, right? 25.91, which is here. So you're in a buy, which is here. You're in a buy. Let's say your stops could be previous lows, about 30 pips or so. You're about, I would say 28 pips in profit. What I would do, because we're at that 75% level, is that because you didn't technically get the wick entry that would probably avoid your stops getting hit. I'm not telling you to manage it this way. This is how I would manage. This is my thought process about this. Because I know I got in the middle of the range. Look at this, is the middle of the range pretty much. It's not that it's a bad entry, but this is where you could most likely get your stops at least tapped before it does go up. So what I would do is I would at least go break even. But if you want to make sure you at least secure the dub, maybe close half and then go break even. So if it does run, it's a winning trade already anyways. But if it runs against you, it's a winning trade. So the purpose is, my idea is you never want to be in profits and then you go into negative and then you lose the trade because you were being like, I don't want to say you, but it's just saying like the idea is that, oh, I don't want to trade because I want 500 pips instead of 300 pips. You know, it's like, even though 20 pips right now sounds, 25 pips doesn't sound as good as 50 pips, but 25 pips sounds a lot better than 0 pips or negative pips, you know. So just make sure you secure that dub. But like I say, you need to make sure you have your plan. If your plan is to not go break even until you maybe clear that wick, then follow your plan, or whatever it is. But whatever your plan says. But if the way I look at it is, this entry is different than this entry. So if you were in this guy, there's a good chance that you could go break even and you could hold it, because even if it were to come back down, it's most likely not going to break that low before breaking the high. So if that's the case, that's the difference. That's why I see this trade as a different entry than this one, because so you would have to manage it differently, because this is where you would get stopped out break even compared to down here. So just my way of thinking about it, nothing too crazy. But it looks like a good trade though. Like I say, you definitely don't want to lose your profits just trying to squeeze out an extra few pips, Like the extra few pips you're trying to close out could be what you just closed right now, and you would have been up that anyways, So sounds like I got in too late. No, not that it's too late, not that it's bad, but it's just the idea that, let's say you do this over 10 times, what's the percentage of you going break even and hitting your break even? I don't know what a percent. I would take a guess, but I would say 50-50. So if it's 50-50, you're better off just closing and securing the win. So that way, instead of going break even 50% of the time, at least you still win. You close in half and maybe even trail. Maybe because it created a new low, like let's say this is a new low, maybe now you trail that low, because if it breaks that low, it needs to go lower. And then look, it kind of did do that. It broke that low and it kind of went a little lower. But that's why I say it's all part of a plan. However you like to trade, there's different ways of managing. But the way I like to think about it is I manage it based on what type of entry I got, So knowing my entry is not the peak or the wick of the wick, I gotta kind of manage it a little differently, because I've gone through this too many times, not closing it and saying, oh no, it's gonna go to where it needs to go, but it ends up going a lot further than I thought, and I'm actually holding a negative trade while I was already in profits or something, So that's where I always say is if it's a winning trade and I'm in profits, it's gonna stay like that or break even. I can't go into negative. Obviously 2-3 pips is not what I mean. It's more or less of like, let's say you're up 20-30 pips, those ones you should definitely at least in the trade break even, because I've done this to myself a lot, especially when I was a lot newer of a trader, is that because I had a small account, I would tell myself, I'm just going to leave my stop losses where they need to go, because it's only a few bucks if I lose anyways. Like let's say I'm doing $1 a pip. My stop loss is 10-20 pips. It's only $20. It's not that much. But it's the grand scheme of things of understanding that over a long period of time, you still have to manage your trade so it's a win. Because there was times where I should be up on that little small account, let's say 100 pips, because I should have maybe closed half at 50 pips, or I should have even closed at 50. But I ended up just saying, nah, I think it's gonna go 100. I'll go break even, or I'll even just leave my stop at the 20 pip stop loss or whatever. And then I'll be up 50 pips, and then it goes and hits my stop loss. And then it's like, instead of me being up 5 pip or 50 pips, now I'm down 20 pips. And it's just like, why didn't I just secure it? And I kept doing that over and over, but it was because it was like on a personal account, so I wasn't like really feeling it that much to that idea. So it was like, it's okay if I lose it because it's not that much. It was more like a practice account. I was doing it so I could like learn a lot. But that's where I say is even on those learning accounts, you still have to manage it and close wisely. Like just because it's only a few bucks, you still want to win consistently, because that's the whole purpose of what we do. We're not taking trades because of it looks cool. We just taking a trade because of a win. No matter how the win happens, we just need to make sure we get a win. And there's a lot of times when we're already in the winning trade, but then we end up letting it go to a loss or letting it go break even because we didn't close or close half or manage it, So it's just things like I say, you could figure out a lot of ways of how you need to do things just by your mistakes. So go through the experiences, experience it, mess up a little bit, and then learn from it. And then tell yourself, all right, yeah, I'm gonna learn from that, and I won't let that happen again, you know? How to use Fib, yeah. I'm trading on a real account, so yeah. That is true though. So if you're on a real account, even if it's a small account, bro, just secure the dubs. That's what we want. We just need to secure the dubs. No, we can't be doing no more. Let me see what happens. I used to do that so much, and I would kill myself. I would like, I'm in a winning trade, but I want to see it go to 40 pips because 20 is not, 20 is whatever. I want to see it go to 40, and I just would kill myself doing that, So. But yeah, look at this thing is still pushing up. It is looking like we could be. Let's see. Okay, it's the 1 hour candle, like we kind of talked about. So with that said, higher prices. So it's looking like we're gonna get at least higher prices of here. There it goes. It is pushing. Damn. All right, man. Let me get my little session. I need to get a little. I've been yapping all day, bro. I've been yapping. No trades today, bro. I feel like a failure for you guys. I'm not taking that many trades on live stream, but like I was kind of explaining earlier, it's not so much that I get on stream so I could take a trade just for you guys. It's more or less I just want to show up consistently and be disciplined so that way I know what I'm looking at every single day, and that's where I say too, a lot of the trades I take are time based. So if I'm taking trades that are time based, I can't take a trade at 7 in the morning if my times that I take trades are at 1 in the morning or at 5 in the morning or at 9, a lot of the things like that. So, and it's not that I only take those trades. It's just the fact that is kind of one of my confirmations that I kind of know, okay, a 4 hour candle is going to close right now. There's a better chance something's going to happen, that this is the real purge if it's around those specific times, so. All right, but yeah, let's see. Okay, so what I'm kind of thinking, okay, the hourly is going to close right now, right? So actually the hourly is still 30 minutes away. So what I'm thinking is going to need to happen is I'm wondering if it's going to break it right now and then get rejected, because this would be like a double purge, because this would be a low it's breaking, a high and also a high. But like I said, as I don't want to be taking no sales in this bullish activity right now, because you're just asking for trouble. So that's why I was saying is that with these buys, it did make sense why they needed to what needed to happen, so damn, all these levels were perfect to take these buys. We definitely could have taken these buys from down here, taken 20-30 pips at least. That would have been valid right here, at least to fill in that wick. Damn. It's all good though. Like I say, man, I'm already up. I think I closed like 130, 140 pips today with those two trades. Or like 120, 130, something like that. So that's why I'm not like rushed, because that's my problem too, is I'll win 100 pips and then I'll go take 2-3 losses and I'll lose 70 pips. And it's like, damn, man, I just had one of the best days of the week and then I blow it. So it's just like, focus, man. You got to stay focused, locked in. Don't get a blind confidence from winning trades. Even though I took those wins earlier, that doesn't mean I know what I'm doing all the time. I still got to stay locked in, focus. Don't get a blind confidence, because that's what happened to me, is that like when I win, I'll be winning. I'll win a 100 pip trade. I feel like I'm the king of the world, but you got to remind yourself that's just one trade. Now you got to go do it again. That you got to go do it again and again. So one trade shouldn't make you or break you. So even if it was a good trade, you follow your plan, that's cool, but just don't let it give you a blind confidence, because that's where I say is where I would win 100 pips. The next trades I start blowing it. I lose 70, 80, or who knows, I might lose even more than 100 pips than I won. So I've been through it all. That's why I say these things, is because I'm literally going off of my own experience. I've done all this stuff. I know how it is, and that's why I say just don't be hard on yourself. This is hard. Trading is hard. Trading is definitely hard. If you guys are still showing up after 6 months of going through hell, man, I gotta give you guys a pat on the back, because a lot of people give up. But that's where I'm saying is I was in that part one time. I wanted to give up. I thought I was never gonna learn this. I thought, man, you ain't never gonna figure this out. But like I say, you just perseverance, never give up, keep going, push, and you're never gonna stop. You'll get to that point. You just gotta find somebody also that you can learn from. Don't get stuck in one spot. Be open-minded. Learn from everybody. Everybody that takes a good trade, you could learn something from them. You don't have to trade like them, but you could take a trade something like them. All right, time to catch some Z's. Good night. Glad you see you streaming. Didn't know you stream. I hit the sub and likes. Hey, options. I appreciate it, bro. Yeah. I stream. I try to stream every day too. So I know Market Mechanic, and he be streaming a lot during the same times and stuff. But yeah, that's kind of my idea. I'm gonna be streaming every single day now, trying to get these trades in. Yeah, but that's why I say too is this was the trade right there. That and this, exactly kind of like what we were calling out. But it makes sense, is like when I called this out, that should have been my confirmation for this trade, because that would have given us the idea that this was the bullish bias. If this was the bullish bias, then it confirmed more or less where we thought it needed to go before, because we already had this box pretty much lined out before it even got close to that. So that's why I say too is that even though I could, I feel like I might have missed this as a move, I just collected more data in my mind of knowing what I need to look for. So next time when I get the bias correct and I already know this is the bottom and we have a long wick that we need to fill in, and I already have this 75% level tapped out, I already know if I take these lows to hold it to at least that 75%. And then that's where I was saying also, if it blows through the 75%, there's a good chance it's going to go to the top, because I've seen it do that a lot of times before. So, and that's the trick, is find the correct bias. And then when you find the correct bias, that's when all of your strategies work. All of your strategies work. Fair value gaps work here. Order blocks, everything. You name it. A bearish flag. Look at this bearish bull flag. Boom, it works. What was another one they talk about? A triangle. What do they call this one? It's like a triangle that's let's see, like this. It's the triangle down, and then you have it the bottom like that. I forget what it is, whatever it is. It's another pull out. It's like, that's what I'm saying though, is that every strategy works if you're in the correct bias, but the hard part is people can't figure out the bias. And like I say, how I figure out biases is just knowing when a sweep gets swept, and then fair value gaps start to trigger the move. This would have been my entry right here. I can tell you for sure my perfect entry would have been this idea right here, because this exactly is everything I look for when a trade happens. There's the turtle soup at the bottom, and then the first 5-minute fair value gap, which is this, gets tapped, and that's exactly what we would have wanted. And then this would have been our stops, and that would have been, let's see, 61. That would have been like 15 pips at the most at our stops, and that would have been our trade right there. Damn, this thing is pumping, pushing. Move my stops to break even, but now it's running, so I'm happy. Yes, good job, Fred. That's a good trade. That's definitely a good trade. Like you say, how you manage it is very important. That's a good job, bro. Good job. It was a good entry too, because like I say, it never did go back down. But let's just say, like for instance, let's say you got in on this candle right here. Yeah, you don't go into no drawdown, but imagine the one if you were to get trapped into it right here. This is the one that would take out people's stop losses and stuff. And that's where I say is like, where you get in at also determines how you should manage it, So this was definitely a good trade though. Good trade. Mind throwing a super trend indicator on your chart just for a moment. It's how I determine bias. What is the super trend? Yeah, I'll do it real quick. What is the super trend indicator? Damn, that thing is pushing. Is it called super trend? Super trend right here. Oh, something like that. Damn. I mean, that does signal a trend though. Look, yeah, cause look, okay, look, this is the day. I've never used this. I'm just going off of. Oh no, not this one. But I'm just using this as an example. Look, this is the daily, and look at we're below it, and then once we're above it, it's all just bullish after that. Yeah, this is funny though. This is a crazy ass indicator. What's it called? Shouldn't look like that. Super trend one where, oh yeah. Super trend right here. This one? Something like that? Yeah, yeah. Is it maybe this one? I've seen people use this before. Yes, yeah. I've never used it, but I've seen people use it. And I'm not sure exactly how to use it, but does it mean, is it pretty much if you're above this line, it's bullish, and obviously you're below it, you don't want that, right? When it's like that, I only do longs. Yeah, so as long as you're above there, you do longs, right? And it's the same thing like this would be, where if you're below it, it sells, but you're above it. Yeah, that's a good little indicator. And like I say, I don't hate on indicators. The thing is you just need to learn how to use it. That's all the indicator is just a trend. I mean, like another layer of information. So as long as you learn how to use the indicator, it'll work, but you just got to learn how to use it. And like how Fred is talking about, he only takes longs as long as we're above here, and that makes sense. So as long as we're above this little trend thing, yeah, you're only taking buys. And look at this. Damn, this did give some good buy signals though. Imagine you would have taken this buy 25.11. Wow. And look at like I always talk about 25.11 where it would have told you to buy at. Look at where this previous candle is at. It's the opening, or it's the closing of this red candle. And that's what I always say, is that we target the openings and closings of the previous candles. And that's why I kind of say is that, look at this previous wick, it tapped right into that and then went up after that. And that was, like I say, the opening and previous opening of that candle. So you could have literally gotten in at that buy right there. But yeah, by itself, it's not anything special, but combined with your own setup, it might be not. Yeah, no, for sure. No, I could definitely see how that works, Fred. Is that, like you said, is that it's already kind of letting you know, kind of like what I was saying already, is that we're already bullish in that sense, you know. But this lets you know you're bullish without even having to figure anything out. So I would have saved a lot of time just by looking at this, knowing, okay, we are bullish. Everything we're taking is all buys. So that's where I was kind of saying is that my indication was, once these fair value gaps start getting respected going up, that lets me know we're in a bullish, because if it was bearish, it would have got rejected, and that would have let me know the direction. But like how you're saying though, it definitely would help, bro. I don't deny that one bit. Definitely would help. I like that though. That's pretty cool. Pretty cool. Yeah. And also too, is kind of understanding just this daily candle too. I guess I'm wondering if as long as we're above the green, it's bullish. All right, so that's that. Nope. And it goes back to the same thing again, like I just said. Remember how a key level is is this level's the key level. When it gets wicked and closed back below, signals the model 1. But this closing above signals that this is going to eventually pull back, do its thing exactly like we talked about before, and then start pushing up to fill in this wick again, because that'll be the SMT it takes that it would need. But yeah, now it's exactly gonna do that again. It's gonna fill in this wick. Watch, after it create the same thing it did almost right here. I think it was either this one or this one. We kind of called it out the same way. Is that, yeah, it was actually this one. Look, the break of this candle right here. Look, the break of that candle, right? Because I said this is the key level right here. If this is the key level, I want to see a wick and then a close back below. But once it closes below, what it does is it starts to wick below, it starts to create these lower prices. So I'm wondering if this could do the exact same thing, because this is not a key level that it just wicked. This key level, it just broke above. So that lets us know that we have range to at least that. So if we want to come down, we're going to need to create these lows, do this, and then make our way up and then come down like that. So that's where I'm kind of seeing is that this is going to be another pullback, pretty much exactly how it just happened on that other one. So look, this will be a low of that. This will be the range of that. So it's going to target that. If not that one, target this one right here, which is pretty much this low right here. It's going to tap into this range and then do all that. I think so, yeah. See how this goes. See how this goes. Yo, bitmesone, you have your own way of finding directional bias. Yes, yes, yes. It's kind of, it's like a pullback time, yeah. No, yeah, and like I said, I figured out those type of things of how I find, like turtle soups and stuff like that. That gives me the bias where if it closes like that, key levels, it targets the highs, lets me know the direction, you know, little things like that. But yeah, like that Supertrend though, that makes it so much easier, because at this point I should have already known it was bullish because it was already bullish down here. This was the indicator for this to be the valid setup. This was the indicator for this to be the valid setup. And this was the indicator that this is the valid setup. And then I'm thinking the same thing. This is the indicator. This is the valid setup. All right. So look, it just tapped into that level perfectly. This was the low it needed to break. And it looks like it, all right, yo, give me 1 second. I need to go get something to drink. Gotta wet the whistle, I guess. But yeah, give me a second. I'll be right back. Yo, what up, Mugs? Duma. Be right back, Duma. I took like what I took one right now, but I didn't save it. I just took it on my own. I wasn't really like confident, you know. It still won, but I didn't want to trade. Oh, look at, okay, we wick below. That was that level right there. We wick below. Let's see where we react at. Yeah, this thing says sell from right here. It says sell. That would give you would only be up 67. You'll only be up 6-7 pips right now from that signal. because this probably doesn't say sell until this candle closes. So if it closes right there, that wouldn't be a sell until that candle. So you wouldn't push sell till boom, and then you'll have this little move down. But I don't think this is not the SMT. Remember, we talk about SMT. It needs to have a SMT. So I don't think this would be the SMT. It does look like this is an SMT right here, but we'll see right now, I guess. See how that goes. Correct signal only on that close. Yeah. That's kind of how I figured out like kind of how to read indicators, kind of, because obviously it doesn't signal until it closes, so you'll get it in there, which is still not bad. But it's like, this is kind of what tells me though, is that this only looks like a one top. We need one more, because yeah, this is where I'm thinking it's gonna need to come down. Look, boom. So that is the level right there. 66.3. 66.3. So I think what might need to happen. Yo, Max Walker, you're pretty sharp. You figured out the indicator without even knowing the math. Hey, bro, this is what I say though, is that a lot of this stuff is kind of common sense, as long as you don't think too crazy about it. It's like, it's just like, it's like I say, it's common sense almost. That's why I say trading is actually very, very easy if you like put it to like common sense terms. You know, just, you know, lows and highs need to be tapped, so it's going to target those. So that's common sense, that you should just wait for that trade, you know. So, but yeah, man, it's a lot to it. For real, it's common sense. Yeah, it really is just common sense that you just got to get better at it becoming more common. But yeah, it's not too hard. But I like it though. I like it. I don't mind it. I'm definitely gonna keep it on my chart, because this will save me. Like, if it already lets me know, it's already telling me sells. Yeah, I shouldn't be taking really no buys really yet, but like I said, it's definitely telling me though it's on the other side of the trend at least. So, but this is actually important. It's like what I was saying earlier. You don't take a buy if we're already bullish in there. So it might make sense. You would only want to take a buy while this is saying sell, because not saying, but like, if this is the bottom, if you take the buy while it's already flipped back into the buy area, it's already kind of too late. So it's kind of just, I'm just using it as the idea of knowing you shouldn't take a buy unless you're below, or like if you're trying to take a sell, it should be above the opening of the candle. If you're trying to take a buy, it should be below the opening of the candle. So this idea, this would give me that idea, is that you would only want to take the buys in those areas. I could be wrong. I don't know. All right, let me take my little, I need a little shit, man. We've been on stream for 4 hours, y'all. 4 hours, no trade though. That's crazy right there. Hey, we got 53 people watching, yo. Appreciate it. Make sure you guys hit that like. Let's get 60 likes, bro. We almost have 50 likes. Let's hit 60 likes. I never had 60 likes before. If we could do 60 likes, I think we'll do numbers. Yeah, if you guys are enjoying this, if you guys learned anything, if you guys just enjoy the stream, you guys want to show some love, make sure you guys hit that like and subscribe. I appreciate you guys though. Appreciate it. All right, so look at this. Is kind of my idea right here, is that this became a new low, right, which is this candle. So what I want to see possibly happen is maybe that needs to get swept, and then it's gonna possibly start to move up after that, because it'll go to like the idea how we were pointing out, how we need that little bump, that little I like to think of it as like a pipe, like you know, the Popeye, Popeye the Sailor Man, is like a little bong pipe right here. So if you're looking for like a little bong pipe, you want it right here. You're going to want that to be boom. And this is where I'm saying is that would be this low that would get swept. And that's where you would want to be looking for your possible buy at. So where I always say though is that this right here, if it does move up a little bit, this could be a move to make you think you missed it, just for it to come down into there, swoop it, and then move up. And then if it does do this, it goes back into the part of me talking about the double bottom, which will be one here, and then this will be the second bottom. And that's where I say too is that we'll see right now. This will be a good explanation. Will it SMT and create a new bottom, or will it just continue up and then, you know, get rejected from up here or something? Yo, appreciate it though. Appreciate you guys. Appreciate it. We got 50 people watching, y'all. I appreciate it. That's love right there. Damn, y'all, that's love right there. I'm gonna take a picture, y'all. I appreciate it. Let me take a picture. I'm gonna take a picture of this and let the chat know we get views out here. It ain't even about the views. It's just about that we're learning something. We're learning every single day. We're getting better every single day. That's really all it is, man. We're reading charts. We're reading price action. You know, we're figuring out time. A lot of things are happening even if we're not taking a trade. So it's all just data. It's all just another rep. It's all extra chart time. You know, all this stuff is important. You can't just become a great trader by waking up and saying I want to be a good trader. Like, you literally have to put yourself in the deep end. You have to throw yourself in the ocean, and you got to just swim with the sharks. And that's really what we're doing right now. We're swimming with the sharks right now. We got sharks out there trying to take our money, but you know, we're not going to let that happen. You know, we got to stay patient, wait for our setups. Oh, look at this thing. Look at how it's respecting that level perfectly. That was kind of why I had that as the level, was because that would be the area where it would bounce into, create some kind of fake, like a fake zone in there, and make you think it's going to start. Look at it. Isn't it crazy? This is why I say why they try it. The way I think about it is like they're trying to trick you. Because look at this yellow line is the support, right? That was that support line on this candle right here, which is technically the resistance. So when you're on a 1 minute chart and you see this big red candle close below that support level, that technically will tell you it's a sell. It's like a breakout trader. So what happens is a breakout trader will take this as a breakout, not knowing it's going against the whole bullish bias. And also this is also the bottom. So that's where I say though, is that they're trying to trick you into thinking this is the bearish sell. Because once you take your sell, look at what ended up happening. Literally sniper drawdown right after that. Boom. But then that's where I also say that's part one of them trying to convince you into thinking this was the wrong idea, or this was the move right here, whatever, is that they're trying to make you think it was a sell. You take your sell, you get wrecked, you close your trade, you finally decide to take a buy, and then what do? They send it down here to take out these lows so your buy could get wrecked too. So that's where I'm saying is that it literally just does stuff like that. It could easily just continue up, but that's what I would wait for, is some kind of double bottom, and then that would be the move where I think could continue up. But this thing is moving though, so could be wrong, but this is why I say too, it is respecting these levels perfectly. So I mean, it does make sense. It's why it's going up, and actually this is a CRT to go down. This is saying a CRT to go down. So this is actually why I'm thinking too, maybe it does need to come down to this to break this low so it could attack that high. Well, the high is actually way up here. Oh, it's pushing though. There it goes. It's pushing. So look, there goes. I guess that was the level then after all. This right here, this close above. So that close right there is what signaled that move, kind of confirming that it was supposed to close below there. If it didn't close below there, then that's what's signaling this move up. But like I say, I don't think it's the move up. I don't think, because of the fact that let's see if it gets rejected right here. I want to see this level get somehow of reaction here. Let's see what happens. And what I always say about level 2, right? This will be level 2 because this will be level 1 and then level 2 will be over here. So what usually happens is level 2 would be there and then it's going to create a level right here. And then that's what's going to come back down to this level, break this low, and then it starts to move back up after that. Robert Nelson, Supertrend by who? Supertrend. Let me actually look at it real quick. Let me erase all this. Oh. Supertrend by Supertrend. Actually, I just typed in Supertrend. Let's see. Just type in Supertrend as one word, Supertrend, and I chose this first one right here. Kivyank Osbalijic, whatever that is. But yeah, this guy, the first one. Just hit that little star next to it, and it'll put it as your favorite. So every time you go to your favorites, you'll be able to look at it and stuff. Yeah, I have a bunch of different ones that I have as favorites, but these are ones like people have told me about. Fixed range volume. What was that? Fixed range volume. All right, let's see. Fixed range. Oh, this is why. Oh, I think it's the Oh no, I don't know what the hell fixed range volume is. It might as well delete it. It might not work no more. Forex size, fair bar. Yeah. What is this one? Oh yeah, look at this. Is an indicator that one of my buddies showed me. Look. It actually gives you your entry exactly. Look, it would have told you to enter right here, and that would have been your buy. This indicator my boy showed me, or he gave it to me, and it's crazy because it really does kind of work. Like I've seen a few trades just practicing just for the heck of it, and it does show it. It's like an indicator that tells you when to buy and sell. That's crazy. But I like I said, these things work. You just gotta know them. You just gotta learn them. Oh yeah, and then what else do I have? Oh yeah, I have the Trader Day. This is a little more. Oh, this thing's getting rejected right there though. Hey, isn't it kind of crazy? Why did I say that was the level? I said that was gonna be the level because of this. That would be the rejection. Oh yeah, that was why. Cause look, on the 15-minute, that's why. That's what I should have did. Or no, never mind. It's only 5 pips. That's nothing. I used this previous candle as the high. So what I knew is, like I say, it's gonna get rejected and cause a reaction there. And that's why I had that level there. So I wanted to see what happens. So what I've kind of realized though is this is another thing I've kind of realized is that once you have a close below, in a red candle like this. You're waiting for a close below and then a wick below. So this, you're gonna wait for this. I think this level gets wick below, or could it be that level? Because a lot of times is once the red candle forms, it's usually that's the new low. And as you could kind of see, that's like the fake out right there, which that becomes, okay, now I see it. This is like the Model 1 in reverse. So look at this comes the wick, right? That becomes the key level. This candle wicks the key level, which is this wick right here. And then that becomes the new low, which is this guy. Boom. And look at what happens right after that. It wicks, closes back above, and that lets you know it's going to probably be a breakout to break out above there. Ooh, damn, it just reversed quick though. Let's see if that could be a bottom wick to push to continue pushing up. Let's see. Yeah, these guys are this has created there's a fair value gap right here, but that I don't think it's very valid. I don't think it's a bearish fair value gap that's going to get respected. So what's probably going to happen is I'm thinking it needs to come back down to these levels at some point, though, before anything. Let me remove this. I don't need that. All right, so that'll be that low. That'll be that low. So I'll put that there. All right, yeah, I don't need that. I don't need that. Yo, Lucky Beast, will it come back to 2,500, bro? That's deep. That's hella deep. I don't know if it's gonna do that, bro. That's kind of hard. No, he said nope. So look, this becomes the range, right? So look, let me see something. Okay, look, I'm using the fib off of this right here, literally off of this candle, because that's the CRT range right there. I go to the 1 minute. Look at where it exactly bounced off at. The yellow line is the 70%. This yellow box. This yellow box is the 75% of the 15-minute CRT. And look at exactly where it bounced off at. Perfect. That's why I say is if you get the correct range because of the CRT, you could find exactly where it's going to bounce off at. And I could have known, I should have known. Because this is not going to be a CRT to continue down. This was just going to come down to target the previous day opening. Look at, where would you want to take a trade? This is why I say you take a trade below the opening. So you would have wanted to take a trade anywhere below the opening, which would have been that area where that trade would have wanted to be at. Exactly right here. You would take it below the opening. So anywhere in those wicks would have been your best chance to get in. That's crazy. That's insane, brother. All right, so look at this, creating a bottom wick. It's a fish. It's exotic official. It's exotic official. No, nah. I don't think it's coming down there anytime soon. It's 600 pips. It will take a few weeks to move 600 pips in one direction, because nothing just moves straight anyway. So even if you move 100, 200 pips, you're going to have a pullback for a day or something. So it could go a week in that direction, and then maybe a pullback for a day or two, and then continue in that direction. But then that would mean we're also bearish, meaning from now until that 2,500, we're bearish. But right now we're not bearish. We're not bearish until I don't think we're bearish until these highs start getting hit, but it is getting tapped. That did get tapped by that. So I'm wondering if this could be something. Let me see something now. That would be that. Now what we want is a close above that. So what I'm thinking could happen is this idea that I have is that, okay, my next main target that we're going to be looking for is going to be these lows. So let me see something. That was the 15 minutes. So let me see this 30 minute. Let me see 30 minute, which would be here. So the 30 minute would be that. 30 minute would be here. And that's exactly where we're at. So let me see something. All right, I think I see it actually. All right, so what's gonna happen is we're probably gonna come into this box. Look, we're gonna come into here. So what's gonna happen, we're gonna come into there, right? And then, let me see here. We're going to, we're gonna hit there. So then from here, I mean, that's exactly where we tapped into. That CRT'd up. That CRT'd up, yeah. Yeah, this is where I'm thinking the next target's going to be at. We'll probably hit 2080, 2580, 90, 26. Can I hold for profit here? Yeah, I see it. Well, I don't know where trade you're in, but sir, I have sales at 56.63. Ooh, 56.63. 63 is pretty far still. It's way down here. So I don't really see that coming into play yet until maybe we start coming back up to these levels again. So what I was thinking though is that this did need to create a low over there. Hold on, let's see. That would be the range, and then the range would be this guy. So maybe here would be here. That is exactly where we're getting rejected at perfectly, right? So the 1 hour would be this guy. Okay. So let's see. Yeah, it looks like we're going to push up, but I'm trying to figure out where this is going to head. So let's see. All right, that is exactly where we did tap. That was that level. So we tapped that level already. Now the next level is up here. So I'm thinking we're going to be coming up here to break these highs, and that's where the high will need to get broken at. Once that high gets broken, that's where I'm thinking this is going to. But like I was saying, the same thing like it happened earlier is that this is not a bearish like rejection area. So it's most likely just going to blow straight through it and then start targeting these highs, at least this high. So I think kind of at least here. And that's the 69. So that's what I see next. And like I said, we're kind of in this range right here. Right at that range. So look, now it looks like we might. Let's see if we tap here first. It'd be crazy if we tap that, because that means I cooked this little range right here. So what I'm thinking, oh, look at. Okay, so if it taps this range and bounces off, then it's most likely going to tap that range right there. And that's where I say is like, that's how I found that level, literally off of just the, I could be wrong, but off of just knowing the 75% range of this area. And look, okay, boom, it just wicked below. Damn, that was it. That was it, yep. It's only up 4 pips, but the idea though was valid. Perfect. It needs, so, but like I said, now the next thing is gonna be up here. That's only 7 pips, but boom. Damn, bro, I'm been cooking right now. I'm not even mad. Like I said, I'm finding the direction. That's it. We're in the correct direction. We know the direction now. So now we just gotta wait for a nice little pullback. Appreciate you guys for watching though. Make sure you guys hit that like and subscribe. Hit that like and subscribe. We're going to be trying to stream every day, so make sure you guys are locking in every day. If you guys haven't found our Discord yet, we have a Discord in our description. Hit that Discord link, and also our Instagram is in our description. So if you follow us on Instagram, that'll be very helpful. You can follow us in Discord and message me on Instagram if you have any questions. I'll feel free to help you out best I can, you know. And so make sure you guys are locking in. All right. we did tap the top of that range after hitting this little area. So I'm wondering if we could still bounce or if we're going to get rejected. It did, like I said, it did bounce exactly off of there, hit there, but it didn't tap up that 75% like I kind of was thinking next. So maybe let's see how high it needs to go. I actually have a sell at 25.41. What do you think I should do? Accidentally have a sell. If Umar, first things first, you have to be honest with yourself. Was it an accident or was it something you really took? And if it was something you really took, it's okay. But the idea, like I said, you can't say that you took it accidentally. If you took it if you genuinely did take it by accident, you didn't even know you were in the trade, you pushed sell by accident, then you should get out of that trade right when you notice you were in it accidentally, because there's no reason why you should be in that trade. So just make sure if it was your trade, then you need to have a plan for that, and you need to get out at a specific time. You need to have a level that you're willing to get out at, a TP where you think you're going to go to, and things like that. So yes, exactly. Close as soon as possible. My phone genuinely glitched. I didn't realize. Okay, so you didn't realize. So what I would do is close it as soon as you realize it. Don't hope it's going to go in your favor, because if we're in this correct bullish bias, then I'm thinking it's going to continue going up. But like I say, I would hate for it to go down and then go to your TP, but that's also, you're also guessing, because what if it goes this way and then you're completely wrong? So like I say, just make sure you get out once you notice you're not in the trade that you would have wanted, so yeah, I know it sucks, bro, but remember, Umar, this is also a thing that you have to learn about trading, is that happened to me one time when I woke up and I was down 70 pips on my real account, and I was like, what the heck? I didn't realize I was in the wrong trade. Yo, White Stem, what up, bro? I didn't know I was in the trade, and then when I lose the trade, I close it, I'm down 70 pips already just from a stupid little human mistake. So what I'm saying is, you have to learn from this little mistake and make sure this mistake doesn't happen again, because you're pretty much throwing away pips for no reason, So next time, double check your phone. Next time, before you log off, make sure you close in all your apps, making sure everything's not in no trades. Those are little protocols that you're going to have to do, because imagine that was $1 million account or something crazy, and you just blew 50,000 or 30,000, something crazy because of a mistake, So also be grateful it's probably a small account that you did that on, but now make sure that doesn't happen again. You can't let these things happen to you over and over and over. If it happens once, boom, it was an accident. But if it starts to happen over and over, then it wasn't an accident. Can I enter sell for gold? No, HD. I would not enter a no sells right now, because look at this daily candle right here. This daily candle is super bullish. So you're taking a sell against all of this bullish pressure. You're asking for it, because look at this. This sell was very good, but look at how big this buy was. So that sell was only this small compared to the buy, and that's the best sell you could probably get in this whole area. So it was still only a little bit of the big move, and then you had this buy, and then you have this little sell. So where do you want to take your trades? In this bias or this bias? In this bias or this bias? So like I say, if you were to take a sell, every sell is smaller than the buys. So you would want to be on the buy side right now. So if you're looking for buys, it's the same idea what we talk about. If you're looking for buys, you want to look for a sweep of lows and stuff like that. Even if this is the low you're looking for, I wouldn't want to take no sell at this point, because the way I think about it is, if this low needs to be tapped, it's not going to go just straight there because we're bullish. What's going to happen is probably going to make a low, then break the high, make a low, break a high, or do something like that, and then break that low, then continue up. But what I'm saying is, there's really no real straight direction to these levels because we're bullish. So at any point, we could just pull back, come down, pull back, come down, and it could just be very choppy all the way down Whereas, oh, look at that, boom, that's what you would want. But that's what I'm saying is that there's really no clean direction. So this is what I'm also realizing too. Okay, look, what happens a lot of the times, what I've noticed is that, ooh, damn, that thing is moving. All right, so look, it is moving now. But if you guys really think about it, look at from this top line to where it's at, that was only 10 pips. That was literally a 10 pip move from the peak of the entrance to the exit. Imagine trying to squeeze out 10 pips out of a 10 pip move. You know, that's not a move you want. Even though it looked exciting, it looked very nice, but that's not the move you're going to really want. I lost 100K changing and doing the same thing. He's right. Make sure everything is closed out completely. Exactly, Tony. That's where it's important. You know, if it's easy, it's be lucky and grateful it happened on a small account and not a crazy big account, you know. So a protocol before you get off your streams or before you get off your charts, double check you're not in no positions and then close out your charts. And that's the way you could protect yourself from something like that happening. Definitely don't learn the hard way. Don't learn the hard way. Learn from people in the chat. You know, that's one thing too I like, because like I say, Umar, you just reminded me about this. So now it's like a thing, things like that, I gotta make sure I go and double check my positions. You know, I don't want to be in it, especially on my funded account, because my funded account, you only have so much drawdown. So imagine you're in a trade and you forget you're in it and you hit your drawdown limit, not even because you lost the trade, just because you didn't even know you were in it. A Tiff, what have you done to gold, man? It became shooting star. I know, bro. This is where I say, though, is that this was the idea, the turtle soup, that gave us this whole direction. And then obviously that right there. And then everything was a pullback to turtle soup back up, pull back up to go up, which is why I'm wondering if this is going to come back down or if it's going to just, that was all it needed to do. Because look, that was exactly what I was expecting. Okay, so look, that would be the high to come back in this range. So now the next range is back up to these highs. And this where I'm saying it's going to create that high to go back towards these levels, back into this 75% level box like we kind of had already lined up. And one thing I've realized is a lot of times is they always try to do this big candle like this to try to make you think this was a sell. That would have made your whole sell idea more valid if you would have been like, oh, now it's a strong bearish close. It closed below. Let's continue pushing down. And look at what ended up happening. It actually reversed back up. But why did it do that? Because we're already in a bearish trend. We're not bearish yet. So until this green candle turns red, pretty much, we're pretty much bearish or bullish unless these key levels get tapped. Once a key level gets tapped, then it's going to start creating a higher high, a double top, and then that's when we should hopefully start targeting some lows, which would be here. If we could take a sale from here to there, that'll be a very valid trade right there, and that's 150 pips. So that's something we could manage it, especially if we get a top wick up here. Then we could use these as our stops, knowing if it goes past that, it'll be just like these areas. If it goes past it, it's going to create a higher high. Same thing, create a higher high. Same thing, if it creates this new as a high, this is where I'm saying is I think this could be the new, like our new high that we use. Breaks that high, this is our stops, and then we kind of trade back down the range. But everything would need to plan out perfectly. The Model 1 would need to show up in those areas up there, and you know, we just got to wait for that stuff, that setup to happen. Just wait for it to happen, go break even pretty soon just to be on the safe side. But yeah, that's the idea. Bro, what is that big gray candle? Oh yeah, that big gray candle is, I'm actually have I have multiple ones. You can see right here, like I have all these candles right here. So, but the thing is because the daily candle gave us such a big one, it kind of spaced them out a little bit too far. But the idea is understanding that these are the daily candles. You could see where your daily highs are at. So when you know you're targeting a daily high, if this is the range, you know you need to at least target that top. If this daily candle closes back inside of this range, then we know the next targets are going to be the 50, the 75, and then the 100%. So, but yeah, that's why I say is why I had these levels, because also the other day when I took a trade, I think it was this Wednesday, the weekly level was also right here. So when this candle broke this previous high, which is this candle high, it broke this high, and then also the weekly high with that wick right there. That's how I was able to take that trade back down, because I was literally using these candles as the purge. Because like I say, the key levels are highs and lows of higher time frame candles. So you're not going to get a reversal in between this middle of a candle. You're going to get the reversal either at the top of it or the bottom of it. And those are the real reversals you want, because you could say, I mean, you could literally say anything in the opposite direction is a reversal. You could say this is a reversal, but in reality, is it really a reversal if we're already going up? It's just a minor pullback. So that's where I kind of say is on at some point, every pullback is just a continuation on a higher time frame or something. So like, you know, so yeah, that's just my idea. So that's why I say is like, I have these daily candles right here, because if that daily high is right here, then I know tomorrow's daily, if it were to break this high and then flip bearish, then there's a good chance that the next few candles could give a direction back down, and that's how we'll know which direction we should be trading in. But because like I said, it also goes back to knowing I like to take my trades at the purges of higher time frame candles, the daily, the weekly, the 4 hour, the monthly, stuff like that. Because once the daily or the weekly starts to get purged and then flip bearish, it usually moves quite a bit. So that's where I say you could capture a good little 50 pips to 100 pips on a quick little move like that. Oh, this thing is moving. There we go. It's moving right into that level like we talked about. And it respected this level perfectly. Exactly like we talked about. Tapped into that. Boom. Perfectly. Something is going to happen at London Open. And also one thing too, I don't know if Pete is here. We were talking about it with Pineapple Pete, is that the 1 a.m. candle is also important. The 1 a.m. candle. 3.4 hours it would move. But my idea is gonna it'll be the 1 a.m. candle or the 5 a.m. candle. So and that's where I say it's the 159. How did you add that daily candle, please? Oh yeah, the indicator. Are you talking about the indicator for this daily? The one for this daily, I use, it's this higher time frame candle. You can see it on the screen now. At the top, it shows the name. So screenshot the top of the name and you could type it in. But also you just type in HTF candle. Yeah, so HTF candle overlay power of 3, which is the one right here, the ticket magnet. It says TTM in front of it. So that would be the power of 3. And then when you click on it, you'll have you just double click it, and then you'll have the settings. You could put it on the 4 hour, the daily, or whatever. You could also change how many candles it shows. You could change it to 1 candle or 2 candles or 3 candles or whatever. I noticed I did like kind of like 4 candles, because it did give me a previous day candle. When this one was happening, I still had a previous day area that I could base it off of. So I knew I could break this daily and this daily when we'll get a move and stuff. So that's why I kind of use these candles, just so I could see key levels. Because like I say, my style of trading is taking sweeps of highs and lows. So the higher the time frame, the bigger the sweep, you know. So that's where I kind of say is that if I could see a daily sweep, I don't have to like switch back and forth. It makes it so much easier. And that's where I say too, you could see this line right here is the daily line. So what we were saying earlier, you buy below the daily open. So you would want to be buying anywhere below there, not above it. Obviously you can above it, but the principle of what I'm saying is the best entry in this candle will be below the opening. So anywhere in between here is your best entry for this type of candle. So yeah, that's the kind of the idea I have right there. Oh, we are getting rejected right at that level. Perfect. And look at that, was the 75% level like we talked about, right? And then it just does the same thing over and over. It's just going to displace right here. It's probably going to close back below that, and then the next ones are going to close back again and then blow straight through to come back to the top of that. So that's what most likely is going to happen again. The same thing, almost the same way this happened. Exactly like how this happened. Boom, displaced, closed below, back above, and then it did push up. So what we're going to do is we're going to wait for that to close below. Then we're going to want to do a close below. All right, so look. Oh, we got the close below. And now what's going to happen is, boom, there it goes. It broke that low. Now I think it's going to need a flip and then push straight up to fill in this wick up here. And that wick right there is, let's see how much it is. That's 6 pips only. It's only 6 pips. It's not much, but it's the principle of the ideas. If this was on a 15-minute time frame, 30-minute time frame, this could be 30, 40 pips. So it's the same principles. You're waiting for the same things to happen. It's just going to take longer. Obviously, the 1 minute things happen a lot faster. It just, you know, bam, bam, bam. But on a higher time frame, you just got to wait for these things to play out. Same exact principles. Waiting for a low to get swept, waiting for the high, waiting for the flip, all that good stuff. All right, so look, we closed there. We created a CRT, and look at the 9 o'clock candle, the 1 hour. Let's see what this 1 hour is creating. Yeah, I'm thinking this 1 hour anywhere below the opening. So the opening would be here. It'd be anywhere here. Once it flips bullish, it's going to fill in this wick. And that's where I'm thinking this 1 o'clock candle could be happening coming soon, which is this next hourly. So this hourly is going to create the range right here. And then you remember, look at this box. I have this blue box right here because this is another level I have that needs to probably be tapped. If that level needs to be tapped, then it's kind of giving me the idea this level just been tapped. Now the next level is going to be down here. So if it ends up tapping here, that's what's going to give me this idea that this is going to be the hourly purge, which is going to be, like I say, about that 1 a.m. candle. Is that this is going to be the low of this candle. This candle is going to close like however it closes. The next candle is going to close below, or it's going to wick below and then close above, which is going to signal higher prices, and it's going to signal back above probably like that. So yeah, so like I said, we did tap this level now. So that created a higher high, like we talk about the like the SMT thing, but this is on a smaller one. So let's just do this funny thing like we did. Let's see if it works again. That would be crazy if it does work. So it'll be here. So this level would be, oh my God, no way it didn't just tap it again. Look, that's where I say, okay, what I did last time, or actually I need to go a little lower. So it might need to go a little lower. But that's exactly what I did last time. Just measured it, the SMT, which is this, and it becomes the like where it bounced off at. But I'm thinking it needs to hit this yellow, but so we'll see how valid this is. That would be crazy if it hits there and then it does what it needs to do to go back up. That's funny though. Oh well. 10, yes, no worries, bro, no worries. Amazing, thanks, bro, for sure, for sure. I'm new here and now I feel courses are scams. You live session is enough. Exactly, 10. That's all we need, bro. I stream every single day, bro, and I just read price action. So the thing is every strategy is kind of based off price action. So the better you get at price action, the better you're going to take your own trades, because your trades are going to be off of like what you already know plus adding price action. So it'll just improve what you already do, you know. And not saying courses are bad. Trust me, I've taken like a few courses myself and they were definitely very valuable. The only thing is though is that you still need like a mentor to kind of guide you, because you could listen to the videos they make, but you need to still apply it. And unless you understand how to apply it, whatever you're watching isn't going to make sense, you know. So that's why I like to stream also, just because it's just the way, it's my learning way. It's the way I learn also, because by being on stream a lot, I'll learn certain things or certain setups or just practice setups, you know. So yeah, it's not that courses are bad, but you also want to get a course from somebody that you could that you could vouch for. Like, if you were to take his course, would you recommend it to somebody else, you know? And those are the kind of things, is that it's not that it'd be a bad thing, but the one thing is about like a mentor or a course though, is that it does speed you up, because if you had to figure out all of this on your own without nobody ever teaching you, it would take a lot longer. Whereas if you do it with a mentor, you'll save 6 months. You know, your year will turn into 6 months. So, you know, it's a benefit also. But yeah, but like I said, there's enough information on YouTube though. If you put in the work, you'll be able to learn how to trade. That's how I learned, technically, to be honest. I learned from YouTube. Everybody that I would watch, even now, if I'm trying to figure something out, look at what I have on Google right now. Look, this says macro and micro trading meaning. So at this time when I searched this, I was trying to figure out what all of this means. I could have bought a course and figured that out, but you just type it into Google and you'll find all the answers. It's easy. But yeah, man, I stream every single day pretty much. So like I said, just make sure you join every single day and you'll see how I trade. And like I say, is I'm not trying to sell nobody no course. I'm not trying to sell nothing to anybody. What I'm trying to do is just become a better trader myself. And while I'm becoming better, you guys could become better with me. And we could take this journey together. And like I say, is the better I get, you should also, if you're following along, you should be getting better with me. So, you know, just give it time, about 6 months or so, and we'll see where we're at, you know. And in 6 months from time, if we're a lot better, then that's a good sign, you know. And that's why I say too, like my buddy Dennis, I don't know if he's still in here or not, but he sent me a nice message earlier, and it was just kind of explaining to me that he just was thanking me for like teaching him and helping him learn a few of the things that I learned. And it's not that I taught him how to trade, because he already knows how to trade. All I did was literally point out a few key points, and it gave him that opportunity to add it to what he already knew, you know. And like I'm saying, is that's all it really was just literally pointing out what I already know. And there's no gatekeeping, you know. I'm not trying to gatekeep anything. I'm just trying to show you guys and stuff like that. But brother, I know what kind of strat you're using. Thank you. I am Casper. I use pretty much just price action, really, bro. I just use price action, and there's a thing called CRT, which is how you read the candles on a higher time frame. So CRT is just pretty much a higher time frame candle reading. So when you read a candle like this is the CRT, which is the range that you're trading in. So the CRT is how you find the range. How I trade the range is the Model 1 and stuff like that, sweeps of lows and stuff like that. So yeah, that thing is moving. I look at and look at, isn't this crazy? Look at where it bounced exactly off of. That's crazy. I think I found a new tool on how to measure. That's 2 times in a row it worked. But like I say, this only works as if you're in the correct bias. If you try to do this in a sell, it probably wouldn't have worked because it's not the correct bias. Man, we are moving though, bro. I'm not even mad though, man. I'm not even mad. This is why we got plenty of days to trade. I'm already up on my trading day. I'm already up. I'm reading candles. I'm loving it today. Today's a good day, man. Today's definitely a good day. I don't mind. Yeah, make sure you guys hit that like for me. Hit that like and subscribe. I really appreciate it. It'll help out a lot. But yeah, if you guys have any questions, and make sure you guys hit that like and subscribe. Hit that like and subscribe. I really appreciate it. If you guys wouldn't mind hitting that like and subscribe. We got 53 people watching. Let's see how many likes we got. We got 63 likes. Holy moly. Bro, I never had 70 likes. Let's get 70 likes, bro. Damn, 63 likes. I've been cooking, though. I ain't even gonna lie. Even though I didn't take no trades, I've been cooking, though. I've been cooking. Are you trading today? Yes, Casper. I took 2 trades already this morning because I trade New York. I also trade Asian. And then I also trade London sometimes. So it's just I've already took in trades today. I don't know if I have them posted or not, but I had them earlier. But what I'm saying is I took the trades earlier today, and I'm already up over 100 pips. So my idea is that it's not that I got on stream so I could take another trade. I got on stream so I could just stay consistently always streaming and trading, because like I say, is that I trade. It's not every single trade is this way, but I have a lot of my trades based off of time. So if my time is based off of, if my trades are based on time, and I'm streaming, you know, for let's say from my time is 5 p.m. till 8 p.m. If none of my trade setups are in those hours at that day, then I can't really force a trade, you know, because certain days or certain times I'm trying to take a trade. But it's always, like I say, it's always the hourlies, the specific hours. This is the about to be the 10. This is the gonna create the high, I think. And then the 1 a.m. candle is going to create the high. So I think that'll create the high. The next candle will start creating the low. And then New York might start looking to attack that London high or the London low, which is, it's obviously going to do one or the other. But we are bullish. So my idea would be we probably would need to attack this high. But yeah, I mean, like I said, I want to take a trade, but it's like I'm also not trying to force nothing just because I'm on stream. And like I was saying earlier today, is a lot of what I'm trying to do is I'm not trying to trade. I'm not trying to have the way I trade based on if I'm on stream or not. Because like I said, I've dealt with this already, my own personal self, where like I was saying is I'll get into a trade on stream. I'll close out at 20 pips, not because I think I need to close out at 20 pips. I'll close out at 20 pips because I want to secure a win on stream. And that's where I say is that's where I was kind of screwing myself sometimes, because I was adjusting how I trade it based on if people were watching me or not, you know? So I got to the rhythm of really just taking my trades when I believe I need to take it. Not so much, oh, I'm on stream, I need to take it, or I'm on stream, I need to close this trade because I want to secure a win just so I could prove to you guys I know how to trade. You know, it's like, it's things like that where I'm just saying, it's like there was a time I closed the trade at 20 pips when my TP was 70 pips and the TP actually got hit. But the only reason I closed wasn't because of market structure or lows or highs getting tapped. I closed because I didn't want to take a loss on stream, or I didn't want to take a break even on stream. So I literally closed just so I could win for stream. And that's where I say that's going to hurt me in the long term, trying to trade to please you guys instead of trading for myself and letting you guys just watch what I do, whether it's a win or a loss. But it's the idea that I'm trying not to also trade just because I'm on stream and trying to impress, you know. So but that's also my idea. Like I said, if I have a plan, I need to make sure I stick to it. And I gotta, like I say, even if I'm on stream, if my plan is to go 70 pips, I need to hold it. Not, and if it goes to break even, it goes to break even. I can't close just because I want to secure it, you know. Or maybe that's why I should close half, or that's why I should close this. That's why, you know. But there's a lot to it. I'm always trying to trade, trust me. But I also want to take high quality trades, and I don't want to over trade. I've already taken 2 quality good wins today. I don't want to blow it, you know, because tomorrow I'll have a fresh mindset. It's like what I was saying earlier. Don't let a couple wins give you a blind confidence. Whereas in now, I think I could trade anything. I could take, oh, I could do this, I could do that. But then I end up losing my profits, and then I'm back to square one again, you know. So there's little protocols I try to have for myself just so I could protect myself. Not saying you have to, but it's just I know how I am, you know, and I'm honest with myself. So I know I overtrade a lot. So what I have to do is stop that before it gets bad, you know, and I have to do it over and over and over every day to build that muscle. So eventually overtrading will never be an issue for me because it's just going to be a normal, natural muscle. In description. Oh, I have a Discord in the description. Make sure you guys follow that Telegram, or not Telegram, the Discord in the description, and also the Instagram in the description, so you guys could stay tapped in. And I post sell or buy, bro, sell or buy. I wouldn't be taking no sells right now because we're so bullish, and you should have taken a buy here, should have taken a buy here, or even a buy there. So if you didn't take any of those yet, I would definitely not be in it. Hey, Lassic, I don't know if you were here when I was doing this SMT stuff, but look, I did this SMT line, which is literally from here to here, right? And I did this twice, and look, I measured it, and I go to this bottom of this candle right here where the SMT was at, and that's exactly where it tapped at. Boom, perfect. It's just funny because I did it that way earlier, and I did it again, and I was like, let me see if it works, and then what do you know, it does work. So I'm wondering if that could be, you know, a indicator of how low it can go. But that's why I'm thinking now is that if we get an SMT over here somewhere, then that means this SMT is going to be, let's say, at least here, because that'll be the high or whatnot. And that means this move could break up here and then come back down to this level right here. But yeah, I appreciate you guys for watching though. I appreciate it. We got 53 people watching. Let's see how many likes we got. We got 70 likes. Holy moly, macaroni. Hey, that's love. I appreciate you guys. Appreciate it. Let's hit 80 then. Man, it's still back testing doing TA. Good shit, brother. Keep it up. Yeah. Nah, yeah, I'm trying to take some trades too, but like I say, man, I've already taken 2 trades today. I'm not trying to force nothing. I don't want to force no trades because I don't want to lose my good day. You know, I had a good day today. There's no reason for me to go and blow it, you know? So that's why I kind of tell myself, you shouldn't be trading real money if you're asking that question. Oh yeah, I started collecting, and that's why too I need to focus on a journal, because I need to really get these details, more fine details, and remember them, because I can't remember everything, but I remember a lot, but I can't remember it all. So that's why I kind of remind myself. Damn, this thing is moving, bro. Yeah, damn, I've been on stream for almost 5 hours though. This thing is straight dumping. Wow. All right, actually, I want to wait for this 1 a.m. candle. This 1 a.m. candle is going to be important. So I'm probably going to stay on stream just so I could... Nah, Elastic, he was talking about me, I think. Nothing. The user just buy just US 30 and forward tested. Nice, nice. Explain in the... Oh yeah, that right, that indicator is just this right here. It's just these candles. That's all it is. Like I say, I just use it just to see the key levels, like to know, all right, there's a high, daily high here, there's a daily low here. If we start, obviously we're above it now, but let's say we start targeting this low, I know this is where a reaction is going to be at because it's such a key level. It's a big time frame low or high. That's kind of how I use those. Damn, I got a lot of lines, but we was cooking today. And like you say, you could see like every level we were kind of watching for, it gets tapped, you know. It's like it. So what I'm also realizing too is that when we start coming down, these are going to be all the levels we start to respect again on the way back down again. All right, so All right, so look at this 75% level, which was here. This was as far as I got. I didn't have any other information after that besides this high up here. So if that high is what's going to get tapped, I'm wondering if this could be to go back up again. But man, I've been on for, bro. That happened to me the other day. I just had a 65 account and 45 in profit. Hey, that's good, bro. Good job, Tony. It happened to me the other day. I had 65 account and 45 in profit. Nice, nice. Yeah, a lot of forward testing. Yeah, I like that's why too. This right here was a 4-hour forward test, pretty much 4 hours worth of forward testing, and it's good for me because I need this kind of stuff. I need to see this stuff. I can't keep. Like I said, I know what I need to do, and you got to put the chart time in, guys. You guys gotta be on the charts. You can't get better if you're just reading a book. If you're just doing this, you gotta apply what you learn and do a lot of practice tests. That's why a lot of times when I do something, I'll just do it in my head. Okay, what happens if we bounce from there? What happens? Whatever it does gives me an answer, and now I know for next time. Same thing here. What happens if we bounce here? What happens if we target here? Like, you literally got to ask yourself a bunch of questions and figure them out. That's really all it is. Yeah, overtrading is real. That's why it's good to make money. Like, that's what we're doing this for. But imagine, okay, like, think of it this way. Your goal every day is $100 a day to trade. Let's just make it easy. Your goal is $100. Before the day starts, let's say you lose $100. You're like, damn, man, I wish I would have made $100. $100 sounds real nice when you lose $100. But let's say you hit a trade and you hit $200. That's what happens in that moment. You need to be able to say, okay, I only wanted $100 before we did this. Now that I got 200, that's more than what I wanted, so I should be done for the day. You know what I mean? So it's like, you got to get used to being done after a good win. That's why I say too, is like, you know how hard it is for me not to take a trade right now after I took a few wins earlier. Like, I feel like I could. This is why I'm saying is like, whatever I'm calling right now, it almost seems like it's playing out exactly like that. So it's like, I should be taking a trade right now because I feel like I'm cooking. Like, I should really be using this as taking a trade, but it also can't overpower the original plan. If the original plan is to take 1 to 2 trades a day, win or loss, whether you're cooking or not, you got to be able to remove yourself from that. You got to be able to escape yourself pretty much, because you got to not get trapped in that. Because like I say, you could get a blind confidence, and I've done it hundreds of times where I'll hit 100 pip trade and I'll start walking like I'm the man. You know, all of a sudden I got a limp in my walk, you know, and I started feeling like I'm the man. But then the next few days I start messing it up and I blow those 100 pips and I'm back to square one again. And it's just like, all because I have a blind confidence that, oh, I hit 100 pips. Yeah, you did, but that doesn't mean you're going to do it again. Like, last trade is not your next trade. So whatever you did last trade, whether it was your best trade or your worst trade, it doesn't matter on your next trade, because you're going to have to do it again. And that's where I say is like, it's all right if you take a L, but just how you going to bounce back, you know? That's really it. But yeah, man, I just be yapping. Do you think it will break all-time highs? Well, technically today was all-time high, so this was the break of all-time high. So technically we created a new high today. So my idea would be, either, from what I understand, the way the markets work a lot of times is London creates the high, New York attacks the high, takes it out, and then Asian either continuates, or is it like a continuation of the New York taking the high, meaning, like I say, look at, this is the London high. So later on, I think New York could take the high, and then if it ends up reversing after that, Asian will be the continuation back towards the bottom of the range or something. So that's where I kind of understand. That's why I was saying is like, I think London will have that, will have the top, which will also kind of give us the double top, meaning that would give us the SMT we're kind of looking for. So if it breaks this high and then it comes here and breaks that high, that would be the double top. Also lining up with the 1 a.m. candle, that would also be another confirmation that, okay, this could be the top. But then also understanding that if London makes the high and New York attacks the high, then that means if we do start coming down, we could still come back up to attack that high. So that's where I kind of say too, you got to understand what type of trade you're in. So even if you were to take this sell down, this might not be the top because that New York might take the high out. Oh, and Elastic, I still need to add that indicator, the one that you sent me. And man, that thing was, I liked it. I liked the way it looked on your chart and everything. That's exactly what you need. You need those key levels so you could target them, you know? So it definitely helps out a lot. Yes, sir. So look, if that ends up being the range, then let's see where it needs to go. Oh, that's there. That is exactly where we went. All right. So there it is. So it's looking like it's going to attack these highs now. So like I was saying earlier, this is the high, right? So if this is the high, what I need to see is a wick. If it closes above it, it's going to do the exact same thing all of this did, same way this did. If it closes above it, it's only going to be a pullback, so it could eventually go and break it again. So if it, whatever it does right now at this time is what's kind of giving me the idea of where we could be heading for this next candle, because in 10 minutes this hourly is going to close. So this hourly is going to close like this one's going to close there. If it closes above, giving you higher price, then that means this is going to need a break before coming down. If it does, if it wicks above and then closes below, that's going to give you your lower prices, and then that could be the London high to start working our way back down until New York to go back up again. Yeah, actually, let me switch up the music a little bit. Getting a little bored of that. All right, let's see. You are a very informative person. I am sure a professional trader. Limited gains. I'm not professional yet. I would consider smart subscribe. I'm profitable. I'm definitely profitable. I made a good amount of money trading. I'm definitely not in the negative, but I also still work a normal job too. So in reality, I would consider a professional trader is somebody who could go full time and could live off of it. So not yet, but this is what I say, limited gain, is that this is kind of what I pride myself on, is that I'm not trying to pride myself on showing you guys I make the most money out of anybody. I could care less about the money, obviously right now, but my purpose and what I'm focusing on is taking really good trades and being a really good trader. Like, I want to be one of the best. I want to be the best trader you guys know. I don't want to be the richest trader, because if I'm trying to be the richest trader, then I'm gonna sell courses, I'm gonna try to do this. No, I don't want that. I want to be the best trader, because if I'm the best trader, being the best trader the money comes with that. So I don't have to go and find the money. I don't have to work for it. I don't have to look for it. The skill brings that. And that's where I say is, if you focus on the skill, take pride in becoming the best trader you can be, and don't worry about the money, because whatever you make tomorrow isn't going to change your life. But what will change your life is if tomorrow you go and master the skill. Because if you master the skill, then you could go and make as much as you want. But you can't make as much as you want until you master the skill. And that's where I say a lot of people have it backwards, is they're out here trying to focus on the money, because that's what gets everybody into trading, is the money. But you got to be okay with literally being on a demo account, and you got to be happy as hell that you hit a 30 pip trade on a demo account
only because you followed your plan, not because of the amount of money you made. You need to fall in love with the skill. And falling in love with the skill means taking a trade on a demo account and being happy that you won the trade, not because of the money, but because of the plan that you followed. And I'm not saying, oh, I'm gonna just take a buy here, I take a sell here, let's see what happens. No, you need to take it as if you're really taking it serious. And like I say, is obviously everybody wants to trade with real money, but if you're not profitable, then you shouldn't be trading with real money anyway. Just focus on the skill right now. And if you are using real money, you shouldn't be using big lot size, one lot size. You shouldn't be using one lots and stuff. You should be on $1 a pip, maybe even 10 cents a pip. You know, you should be looking for that kind of stuff and trading it that way, because the principle of it is what's important. You need to be a good trader. I don't care if you got a lot of money or not. Show me that you know how to trade. And when you show me you know how to trade, then I'll believe everything else after that, you know? So yeah, just focus on the skill, bro. That's it. So why do you think New York session is going to move up? Well, it's not so much that I think it's going to move up. It's just the way I understand the way the market works. So I understand I'm not taking a sell trade unless I have a double top. So if I don't have a double top, I'm not going to take a sell. So, I mean, this could actually create the double top already and then continue down. But my idea was that if London didn't create the double top yet, then at some point, if we start making our way down, then New York was going to be the one to create that double top. Because if you look at every time we moved up or moved down or something, like it's always after a second push or something like that. It's like the main idea is like for instance, down here, you could say this right here. Look, this right here is 1. And it never went past that high, right? But look at what happened when we created a second one. It ended up moving like we had. So this is what I'm saying, is that if we haven't created this second bottom yet, then I don't think it's the real move to go all the way up. Even if you do catch it from here to the bottom and you start moving your way up and you start closing at these levels, let's say you close 30, 40 pips. But that's why I say I understand if I'm not in the real move, I close at a specific area because I know it still needs to come back down one more time. So you could just, and that's understanding the SMT part of it. But that's what I'm saying is that if you have to watch these things over and over and over. I've been watching this stuff for a long time, and like the way I trade is I every time I do something, I'm gathering new information, you know. So that's what I've gathered, is that SMT is a big thing about the move. So this is why this move didn't go down, because it wasn't an SMT. I mean, you could kind of say this was an SMT, but I didn't really like the way that looked, to be honest. I don't really like the way that looks. I don't think that's the SMT we would want, because if I went to a higher time frame, look at exactly, there is no SMT right there. That is not the SMT we would want. Like, and that's where I say too, you're probably going to need this next 4-hour candle to break this high, and then that's when you'll get the SMT on the smaller time frames, because technically right now there's really no SMT. I mean, I guess you could say this, but I don't really like that, because it's so, like, it's already been broken. Like, all of this just invalidated that this was a key level. So that's why I'm saying is if this might be the key level right here, where it'll break this level one more time before coming down. But like I said, is whatever I'm saying doesn't mean I'm right. What I'm saying is just for you to go and backtest. Go and backtest. Like Pineapple Pete, he literally just backtested something that I went and said. I said 1900 o'clock candle does a lot of movement. It does this a lot of times. It's a key level. It's a key hour candle. So watch out for that candle. And right when I said that, 5 minutes later, he comes back and says, hey, I did a quick little back test on that, and you're right. You're true. So that's what I'm saying is don't listen to what I'm saying. Just hear it and then go put it on the chart. Go figure it out on the chart and then use that to build on top of, you know, and that's how you get better little by little. Yeah, let me get on this. Let me take a second. Damn, I've been on stream for 5 hours, yo. That's love right there. I like this stuff though, man. I really enjoy this stuff, guys. Like I like to I like to stream. I like to trade. It's a good combo. I like chilling with you guys. You guys give me, something to do when I'm at home by myself, just chilling, So I like streaming, y'all. So make sure you guys hit that like and subscribe, man. We could do this every single day. And I don't mind being on stream for 5 hours, especially if we're learning and taking trades. But obviously, I would have loved to take a trade. But like I say, is that I already took in 2 trades. I don't want to force nothing. I hate saying that because it seems like I get on the stream for no reason. But like I say, it's more or less not so much for a trade. It's more or less for me getting more chart time. So me streaming, you guys might think it's for you, but in reality it's for myself, because I know the streaming is gonna make me a better trader myself, and that's what I'm trying to do in the first place, is just be a better trader. Yo, Bands, what up, bro? It's going good, bro. We had a good day today. We was cooking up some analysis, just simple things, nothing too crazy. But yeah, I appreciate it though, Bands. Appreciate it. Yeah, I appreciate you guys for watching though. Let's see how many likes we got. Let's try to hit 80 likes. I want to hit 80 likes. That would be amazing. Damn, we got 64 people watching. Damn, that's love, man. That's love right there. Going crazy. I appreciate it. Appreciate it. We got 74 likes. Let's hit 80. Let's hit 90 likes. That would be love right there. I appreciate you guys for watching though. I appreciate it. And like I say, guys, is I'm cooking, man. I'm not gonna stop. Every single day, my whole life revolves around trading, man. So I know what I'm gonna be capable of doing one day, and I'm gonna get to that point. And I'm not rushing. I'm not in no rush for it. I wish I had $1 million already, but I don't. But I know I'm going to eventually, because I already know it's bound to happen because of how much work I put on. And it's not even because of the work I put on. You could put in a lot of work and still get no results. It's just the fact I'm never going to give up. I know what I know. It's just a matter of time. And that's where I say, too, the better I get at trading, the better you guys are going to get. You cooking, bro. We eating tonight. Hey, I appreciate that, bro. Top streamer, bro. Appreciate the knowledge. Hey, bro. I appreciate it. Hey man, that's what I say. Is like, I'm just trying to help, man. That's it. That's how I give back, and just help you spread the knowledge. And I have let's say, okay, I have 4 people I've taught how to trade just from my knowledge that I have right now, and all 4 of them are really good traders already. So that's why I say is like, I know what I'm not trying to teach anybody anything crazy. It's the simple stuff. I just know Okay, so look at this is how I think about it, is that it took me a year to figure out what direction I should even start learning in. It took me a long time. What I'm doing is saving you guys a lot of time, so you guys don't have to go back and figure all this out. I'm just trying to skip you guys ahead, and just trying to skip you guys all ahead. That's all. Just make your guys' journey a little bit easier, make your guys' journey a little bit faster, and stuff like that. And that's why I say with my boy Pablo, man, I'm excited for his, man, because I can't wait till he starts really getting profitable, and it was in such a short time that I know what I'm doing is correct. And that's why I say I could turn anybody into a trader. You just gotta be willing to not give up. We all finna eat and level up. Exactly, bro. It's time. And remember, guys, don't compare your journey to somebody else. Don't see somebody that's been trading for 5 years who makes $100,000 and be like, man, how come that's not me? That's not you, because you also haven't been trading for 5 years like they have, So imagine where you would be at in 5 years. You should be doing that, So don't ever compare yourself to somebody. Just remember, your journey is at your own pace, and as long as you don't give up, you still have an opportunity. So just stay on path, stay on the course, and let's get it, man. It's our time to level up, man. We can't be living like a Viking no more. Like they say, I'm tired of living like a Viking. You gotta step the game up and and get some money out here, you know, and that's what we're trying to do. Tonight's my 11:42 12:30 a.m. buy. Thoughts on my 11:42 12:30 a.m. buy trade just now. Okay, buy trade just now. Let's see. 42 would be here, so that would be 11:42 would be here. 11:42 would be here then, right? So you took the buy from here. 12:30 till 12:30 would be here, which is that, right? So you took the trade from here to there. That looks pretty valid, John. That looks pretty valid to me. That's exactly the areas we were looking for a buy ourselves. So we were definitely looking in these levels and stuff. So either here or here would have been very, very nice buys. And look at, what did we say? It's going to at least fill in the wick. That was the wick right here, and look at where it filled in, exactly to the wick. So that's why I say too, advantage points are important. So if you were to get into your trade here, once you hit that, you're either break even or closing partials, or you're doing something, you know. So that's where I say wick fills are very important to understand. So let's see now what could be happening. It did break this low again, but like I always say is we're going to need a close above here. So what I'm thinking still going to need to happen is that this is still going to need to break another high over here. So just me looking at this chart, I kind of see a head and shoulder kind of forming already. So if that's the case, what might need to be happening is this next shoulder. But how high this shoulder is going to go is going to determine, I think, if this Model 1 shows up or not. But I don't think the Model 1 is showing up. Yeah. I appreciate you guys for watching though, man. Appreciate it. If you guys got any questions, feel free to ask questions. You know, that's what I'm here for, try to help out. Yeah, man, and we stream every day, so make sure you guys are hitting that like and subscribe, and don't miss out on our streams, man. I like streaming every day, so make sure you guys tuning in. And follow our Discord. It's in the description, and also our Instagram is also in the description. So feel free to follow along on the journey, and you know, join us for the journey, man. We're gonna have a good journey, man. I know what kind of person I am. I know what kind of work I put in, and I know where I'm headed. So you guys are trying to trust me. I'm definitely trying my best, you know, every single day. So that's all we got to do is just keep trying our best. Will you marry me? CM, I do not believe you are valid enough for my marriage. No, I'm just playing. But nah, I'm good, bro. What do you think it's going to do now? Okay, so let's see what it's going to do now. So my idea, it was a SMT, meaning we needed to break this level. It barely broke the level. You see it, you can see, I don't know if you guys can see it on the chart or not, but you could definitely see that it broke that high barely enough, barely like that. So that's all it technically needs. But one thing that I see though is that a lot of times it needs to be the Model 1. And the Model 1 setup is usually a close above here, and then a close back in the range, and then a fair value gap shows up, and then we target the fair value gap to continue down. So technically nothing that I would want to take yet is forming, but what that kind of is telling me though is that it might need to come back up here still. So these were some levels that we had, because as you could kind of tell, this was a range that we were in, because these were the candles that we closed above and we broke out of. So that was the range. Let's see something. Sorry, wrong window. Bro was texting his girl. CM, you texting your girl on iMessage or AIM, AOL Instant Messenger? Let's see. All right, so the one thing that I say though is I don't think this is the move, but I mean, yeah, because I don't see it forming like what I would want to form. All right, so okay, so look, here is going to be an indication on which direction we're forming, because okay, look it. If this is the top and we're moving down, then this bearish fair value gap should get respected. So if anything, we should get rejected off there and continue down. But then there's two options. It's either going to do it like this to continue down like that, or to continue down, create a new low so we could continue up higher. Because there is this low right here that we might need to take out. So if we take out this low right here, that's what's kind of giving me the idea that we need to come a little bit lower, because it's probably not going to break this level right here. It's going to just be a new lower low, which is like that maybe, and then this purge will technically break this low and this low, which will give us the push power to probably go back to the top. Because like I say, remember, the way I like to trade is targeting lows and highs. So if we're, look at, this is a high, we swept it. This is a high, we swept it with this. So what happens when we sweep that high? We need to most likely come to the bottom of the range, which is right there exactly where we're at. So what happens at the bottom of the range is the turtle soup. So that's when we start to look for that loop right here. And then that's the loop that happens. Oh, loopity doopity loop, something like that. And then we could start taking it back up again. But if this 5-minute fair value gap also doesn't get touched, then that gives me more confirmation that it's going to do what I think it's going to do and come back around to come back up. Because this fair value gap, if this idea is correct, a lot of the times when I would take my trade, I would take it off of getting rejected from this point. But that's also if certain things up here lined up correctly, and technically they didn't line up correctly. It did look like it swept the highs, but now it's going to just target the lows, which is it kind of looking like it's going to do. But like I said, okay, look at this fair value gap. I'm thinking it's going to blow through it. I don't think it's going to get respected, but we'll see. It could be wrong. Could be wrong. Let's see. Let's just see what happens. Morning. What up, William? Past 2566 with a body candle, close maybe to the downside. Yeah. Well, we are technically around the 66 area, but this is where I was saying is that these are the levels. Because think of it this way. If I were to take a buy right now, where would my stops be? My stops would probably be these previous lows like this, just because that's where like the logical and every single trader would put their stop. So if this move does get rejected at this candle, then I'm thinking it's going to target these lows where your stops would be at. But the thing is that it's going to probably sweep them to continue back up anyway. So even if it breaks these lows, this is the lows where they would want you to think it's going to go down. So look at, this is what I think it's going to do. It's going to hit these levels. It's going to start pushing down really hard, making you think it's going to be a sell. But then this is where it's going to swoop back up to come back up and maybe target these highs or something like that. Because like how I say, if fair value gaps are just imbalances, this is an imbalance that never been tapped into yet. So technically, look at this one just got tapped into. That's what it does. Look at boom, right? So look at the next step. I think what would need to happen is, like I say, in order for this to push down hard enough to make you think it's going to go down, is that it needs enough room. Meaning, if we're already close by here, it's not going to be able to push down hard. Where if we're up here, look at this big candle. It's going to make a big candle to make you think, oh yeah, we're pushing down. We're pushing down. But that's what I'm saying. Look, it tapped exactly that level, and that's where you would assume, okay, now it should be bearish, right? But no, this is what they want you to think. They want you to think it's bearish. So when it starts to push down like this, you get trapped in a sell exactly where you thought it was going to be a sell, just for it to swoop back around, stop you out. Because let's say you did take a sell. It depends on if you are right or not. Because like I say, a lot of people don't think they're right at 20 pips. Like, let's say our logical stops would be up here, 25, which would be these previous highs. If I were to take a sell right here, yeah, 10 pips doesn't sound too cute. You know, it's not that fun. If you do 20, 15 pips, it's a little closer, it's a little fun, but you know, people want 30, 50 pips or 100 pips and that kind of stuff. So what people are going to do is they're going to think this is going to go to the bottom of these ranges and it's going to get you into a sell, and then it's going to just pretty much put you in a profit a little bit, but then right in profit, it disappears after that. And that's where I kind of say is that it's literally just trying to stop you out. So I go off of just literally where would I put my stop at if I were to take a sell from here? Oh, I'll put my stop at this previous high. I can almost guarantee you it's going to go and tap that previous high. If I put my stop right here to go take a buy right now, where's the buy? Where's the stops going to be at? They're going to be here. I could almost guarantee you if you take your buy right now, it's going to go and stop you out. So that's what I'm saying. Just literally using that alone will give me that information. And what did I say about double tops? Look at this will be one top. So what's going to happen, I think, is that it's going to break this top, and that's where you're going to get your double top at, and then there it's going to come back down to here, and then it's going to do a double bottom around these areas, cause a head and shoulder, and then probably go up. All right, so look, let's see what happens here. Let's see what happens here. Brother, I am not actually a trader, but I am good at making automations. I can build MT5 or MT4 bots for automation trading. Can you tell me a strategy on which I can build a bot? Yeah, CM. Are you on Instagram? DM me on Instagram, bro. I got a strategy that you could use data and create a bot. Email or DM me on Instagram. My Instagram is in the description, so DM me on Instagram and we'll talk about that. But then again, are we gonna work together on it, or am I gonna have access to it, or am I just telling you what to do so you could go make it and then you just run off? I need it in contract that, but the bot you make, we're gonna share it. Because the person I'm talking about, I've already thought about making a bot for them, and I've already been kind of thinking about it. So look, okay, so look, now we created the SMT. Boom, there it goes. SMT, we created it. All right, look. Okay, so what I think's gonna happen is that the next candle is going to close back inside of this range now. So you're going to close back inside of here. And then close respecting this range right here. And then I think we could start targeting this area down here, something like this. All right, let's see. Okay, just broke the high. You can have access, no problem, bro, for sure. Yeah. Yeah, bro. I think, like I said, this idea that this strat I have, man, it'll be perfect for a bot because it's easy to collect data on it, and you could collect data and it's like it's very repeatable, which means that's what a bot is. It just needs specific rules that it could follow, and if the rules are, and that's where I say the rules with this strategy are pretty much that. It's just following specific steps over and over and over again. Okay, so look at this. Okay, I think it's gonna get rejected from here now. This would be the area right here. Okay, so let's see. If I wanted it to get rejected, it would need to get rejected there. Can I hit you? Oh yeah, message me on Discord, CM. Yeah, it don't matter, either one, Discord or Instagram, whichever one you got. But yeah, bro, that would be pretty cool, bro. Man. And like I said, if you could really get this bot going, man, we'd kill it, bro. But technically, CM, is there, I got a question. I'm in the US, so I don't really use MT5. So is there any way you could have this bot for like futures by chance? Is this like, could this be a futures bot? All right, so look, okay, boom. This closed above, so my idea would be, okay, that would be there, then it closed above. Okay, let's see. Okay, now let's see if this candle closes above and then this next one closes inside. I text you on community chat, please check. Yeah, I got you. I'm gonna check right now. Oh yeah, let me see. Check this community. Community. Hi, this is CM. Yo. Got you, CM. All right, I messaged you, bro. Yo, but I appreciate you guys for watching though, yo. It's, oh, this thing straight push though. Damn. I thought it was gonna come down. But this is good examples why you follow the plan though. You never take a trade off of impulse. You wait for the plan. And if it doesn't happen, it doesn't happen. That's fine. That's some nice volume. Yeah, and hey guys, what did I say? I forgot about this. Look at what time it is. What time is it? It's 1 o'clock, right? That's what I was trying to say about the 1 o'clock candle. That 1 o'clock candle is volume right there. Look at this. This is at 1 o'clock. Look. Oh my God. Look at this. Bro, check this out. Check this out. Oh my goodness. Okay, look. This candle is the very last candle from 12:45 or 12:55 to 1 a.m. And then 1 a.m. literally gives you the bottom that gets swept, and then it targets the top of the range. And that's where I was saying about the 1 a.m. candle, how important it is, because it's also, I believe, a 4 a.m. Oh yeah, it's a 4-hour candle close also. So with this 4-hour candle, you're going to get this pullback down. And that was what the pullback was right here. And then, like I say, 1 o'clock strikes, you get that volume, that 1 o'clock candle. It always is in the morning. This is kind of why I was thinking, I'm wondering if this could possibly be the area that we get rejected off of. But I'm kind of seeing a closure above like that. I don't really like that. What I like to see is these candles respecting that 50%. So that yellow dotted line is the 50%. I don't even know what this one is. Maybe that's the high, previous high. But anyways, what I'm saying though is, yeah, I don't really like the way that looks because it usually respects the 50 underneath it. If it goes above it, it kind of is not the right area. So that kind of tells me it at least needs to fill it in, which is going to fill in this area all the way to the top. Yo, Raj, what up, bro? Goddamn, 78 watching. Sheesh. Hey, love, bro. Appreciate it. We cracking today, bro. It's popping. Hey, 81 likes, y'all. Hit that like button. Hit that like button. Let's hit 100 likes, y'all. 100 likes. We going. Man, we going. We doing our thing today. Thanks to everyone for liking and watching the brother stream. Hey, Raj, appreciate it, brother. Always. Damn, we cooked today, though. I ain't even lying. I ain't even lying to you. Okay, so like we also said, though, this would be that SMT idea, which would kind of give us the, we need a close above, and they're going to be the swoop of that high. So I'm kind of assuming, here, look, let me see something real quick. I'm wondering if this could be the range. Yeah, if that's the range, let's see something. Boom, that went right there to that level. Yeah, that's it right there. Look at that. Boom, right into that fair value gap. I mean that Fibonacci gap there. So let's see. Nope, that is valid. That is invalid. So let's see. Man, I don't really know, because it's already at the top of the range. So it's like, what I'm thinking is going to need to happen is, yeah, let's see. Okay, that's not invalid anymore. Let's see this guy. The 15-minute, let's do the 5-minute. Let's see, from here to here is getting that. So I'm wondering if there's any way that would be there also. So I have two options. It's either going to happen above here, or it's going to happen right here. And this goes into the Model 1 idea. We need a wick. So you can see that wick. That's part one. So what we need is a wick and then a close below it. So we need that wick to close below, and then also this 5-minute to close below that area. So that would be the start of the Model 1, I think, where if we do start closing below that, we did just close above it on the 1-minute. So it's not done yet. Wherever this 5-minute closes at, it's going to need a wick though, and then close below there, which would give us an indication that we could possibly start moving down. But the idea though is, if this doesn't play out, then that's giving me the idea that we need to break the high still. So there's going to be kind of two options here. Is that it's looking like this is the liquidity that we might have already tapped into, but it also goes into which time frame is this CRT on, because it looks like there's a CRT somewhere, which it looks like the 1 hour has the CRT, but I'm trying to determine how high does the third candle need to go. There's two options of where the third candle usually needs to go. It's the previous close of the candle, or the opening of the candle, or the previous wick of the third or the first candle in the CRT. So if that's the first candle, then this is the whole CRT right here that you're trading. So where the Model 1 usually shows up is in the candle 2. But if Model 1 doesn't show up in candle 2, then that means in candle 1 candle 3 it's going to show up. And that's kind of explaining why you're probably going to have this little candle above, close above, and then do all it needs to do before it actually moves down. which will also be looking like a 4-hour purge if it purges it right now. Look at that. It just purging it. So it's kind of coming into the idea that it could be happening, coming real soon. Let's see. Okay. So, okay, we broke that high. Let's see. That's the high we broke. So let's see if this is the level we maybe hold off on. So how I see it is, okay, now the idea is this. The 5 minute needs to close underneath this level. Then on the 1 minute, you're going to need to get a close above. And then you're going to need to do the wick above there, which will give you the close above, close back in the range. And then a support to give you a fair value gap. And then this is where I think the trade could possibly be at, with these highs being your stops. But that's, like I say, that's also if it's the right time and stuff like that. We are on the 1 hour. What did I say about the time is that we did break these highs and stuff right here. So what I'm kind of going to want to wait for is if this Model 1 shows up, you might want to look into that right now. So I'm going to kind of see how it forms and see that I got it. Like I said, play by play. Things have to happen a specific way for me to be like, okay, this is it. This is it. But like I said, the first step is breaking the key level with the 5 minute wick, not a close above. So if this is the key level, it broke it with the wick. What we're going to want is a close on that 5 minute. And then the next candles, like I say, is going to need a close above here. Then that becomes the new high. And then that's where you're going to, I believe, want a close above, close back below. This will be the displacement. You're going to want to close below the displacement. And then after that, support happens, and then a fair value gap happens. And then you're going to target that fair value gap to continue down like that. But like we say is that it is super bullish right now. So I'm over here trying to take the ittiest bittiest, like it's not a high probability trade because of the fact that it's so it's so bullish right now. And like how I'm saying is about the we did that, we closed below, boom, there. We did also close below this, or we're pretty much getting rejected here. So what I'm kind of waiting for though is I want to wait for that Model 1 to show up. So get some sleep, Bitsy. I know. It's already, damn, 5 hours and 30 minutes, y'all. Damn. Yeah, I'm probably going to hop off, though. I need to get off. I need to get ready for New York tomorrow. I'll probably be on stream for New York. But what I would look at, guys, what I'm going to wait for, I probably won't take this trade. I might not. But what I'm waiting for, though, is a close above that level. So what I want to see is a close above here, right? So what's going to happen is this is how I want to read it. I need a candle close above it, and then that becomes the new high. And then that's where you're going to want a close above, and then a close back in the range, which will be the red candle. And then that's where you get a red candle close back in the range, and then you're going to get the displacement off of this candle, which is meaning you're going to wait for a close below. Once you get a close below, then you're going to wait for a green candle to give you a support. That signals the support, which will also create it could be red or green, but the idea is that it's going to create a fair value gap, and that's where your fair value gap, your next candle, is going to tap into it, and then eventually start moving back down, something like that, if this is the right move, which is going to at least target that before it continues up, if it's going to continue up. But that's just an idea, though. That's just an idea. Well, from my idea is that a lot of moves, like let me go back to this euro, how I kind of been keeping track of this euro type of stuff, is that yeah, this thing moved hella high too. It's like this, look. So when things move, it goes from Thursday until next week Thursday, pretty much, or next Wednesday. So it pretty much goes for a week. And then from Wednesday to Thursday, that's 1 day. And then the move from Thursday till next Wednesday is another week. So it goes a week, 1 day, a week, one day a week, like it fluctuates back and forth. So what I'm thinking with gold right now is that it's in, you have to try to figure out which area is it in. It's in the let's see what day it is. Okay, this is Wednesday. This is Wednesday right here, midnight, and then this is till Wednesday right here, and then this is Thursday right here, and then this goes into Friday right here. So this is Thursday. So just from looking at that, if this is AMD, this would be manipulation. So the next one is going to be distribution, which is going to be the third candle, which might need to come back down. So if it needs to come back down, then this will be the distribution to come back down. So it is kind of getting a little close to it, but remember the day. That's why it's important to back test. Is just go to the bottom of each candle. Okay, this was a Friday. This was a Friday. So this went Friday to Friday before reversing all the way until Wednesday. So this went from Friday to Wednesday, and then look at from Wednesday till Thursday. So Wednesday to Thursday, and then that's one day, and then look at where it pretty much stops at, which is Friday again. So it went from Wednesday to Friday, Friday to Wednesday, Wednesday to Friday, Friday to Wednesday. So this will be Wednesday to Friday. So then what would happen is Friday to Wednesday. So what I'm thinking is that all the way until Wednesday, you're probably going to get the move back down again. But like I was saying, is the moves only last for like one day or a whole week. So I'm thinking this was the 1 day move into the next week. So I think there's going to be a move for another week, which would probably bring us down a little bit. But I still don't think it's bearish until we really start breaking back below these levels, which is this previous candle low or even this low right here. But yeah, so we're going to need to at least be here before. But yeah, that's just kind of the thing. But that's why I say just look at the days, and it's like a pattern I've noticed is that like we go from Wednesday to Thursday, Thursday to Wednesday, Friday to Wednesday, Wednesday to Friday. It's all like that. It's always like that. See him, he's one of my I'm proud of. Wow, candle by candle, you really have deep understanding. Yeah, that's yeah, Raj is my my student. I teach him everything I know. All right. Yeah, no, that's the model one. Like the little candles that I do, I've done it a lot of times to know this is like the combination. It's like a sequence that happens. So it just, like I say, lows and highs getting broken. And that's all it really is that this kind of looks like a head and shoulder two now. Look at boom, boom. He's one of my sperm I'm proud of. Yes, Raj. That's funny, bruh. Ooh, but damn, I'm wondering if that could have been the move then. Look at that thing. Damn. It did create the SMT though, like we talked about. That's what you really did want, was that next high, but I don't know. Like I say, what did I say earlier? They want to make you think you missed it, right? They're going to make me think I missed the move so I could take a sell. Look, if I take a sell, let's just for instance, don't take it. I'm not taking it. Just just to show you. If I were to take a sell, my stops would be here. That's why I say is there's a good chance it's going to target that. There's no way. It's just funny how I've been able to see that. Like every single time I take a trade, it always, like when I was younger in trading, it would go the opposite direction. It would always seem like it targeted. They call it stop hunting, but it's not stop hunting because that's just like a level that needs to be tapped, and you just got in before it got tapped. So that's why, But yeah, anyways, no, he's fine. You need to teach him respect. I know. Raj is a little naughty boy. He's a naughty boy. He has a potty mouth. Options. What up, bro? What up? But CM, Raj's favorite food is Wendy's. I don't know if you ever had Wendy's before, Raj. Raj, have you ever had that food called Wendy's? Look, I'm gonna show you right here. Raj, look, this is for you. There's a food place called Wendy's Burgers, right? Wendy's. But I just wanted to let you know Wendy's nuts is in your mouth. You like them even more. Nah, I'm playing. Got him. I was saying to him about you. No, I know. Yeah, I know. That's why I say he's a naughty boy. I'm gonna give Roger a wedgie when I seen him. Hey, Raj, wedgie. And then put him in the locker like in the high school movies. Hey, Raj is gonna be like, he already wears a thong, so he already has a wedgie. Nah, I'm playing. I'm dead, bro. Lucky YouTube doesn't route. Oh, not this Raj. Oh, the real Roger Stanks. Rich Trader. What's up, Rich Trader? What's up, my guy? All right, guys, but I'm gonna head off now. I gotta get off, man. I've been on this thing for 6 hours, bro. That's crazy. I hear us. Oh yeah, that was my that was my peace pipe. But yeah, all right, guys, I'm gonna head off though. I'll be on tomorrow. I'll be on tomorrow again. So make sure you guys follow us on Discord and in the YouTube. And on the Instagram. So I appreciate you guys.